Very good morning, everyone. How are you all? Everyone fine? Now, today we'll start the revision of Ind AS 115. What is Ind AS 115? Revenue from contract with customer. Now, revenue, this chapter is very important because one mandatory question will be asked. One mandatory question will be asked. And it has been seen that in exam, whenever they are asking a question on this, they are creating a new question. Means normally from other chapters it has been observed that they are just asking the question whatever has been given in ICAI study material with, I will say, no changes or very insignificant changes. But whenever they are asking a question from these, they are actually creating a new question. It means you should be able to understand a concept and apply that concept in that question. Correct? Now, when I come to the meaning of revenue, what is the meaning of revenue? Revenue means income arising in the course of ordinary activities. So, any income which arises from ordinary activities will be revenue. Now, can you say ordinary activities is a matter of judgment? What is ordinary activities, and every entities know what is their objective of, what is the objective of doing that business, that become ordinary activities. Correct? Now, so it is a matter of judgment. Whatever income arising from that ordinary activities will be what? Revenue. It means ordinary activities has not been defined in Ind AS. However, if you see AS5 says that ordinary activities are those activities which are undertaken for main business or which are incidental to main business. But that is the definition given under AS5, not under Ind AS. Correct? Means we have understood that all incomes are not revenue, but all revenues are income. If I say what is the meaning of income? Income is nothing but increase in economic benefit during the accounting period in the form of inflow or increase in asset or decrease in liability that result in increase in equity, is which will have corresponding effect in increase in equity. But other than those relating to contribution from equity participant, is any contribution from equity participant will also increase asset and increase equity, but they are not income. So one thing we have understood that all incomes are not revenue, but all revenues are income. Now, in this chapter, what is the objective? Objective is to understand the revenue recognition. When to recognize that revenue, and how to recognize that revenue. What amount should be recognized as revenue. So for this, a detailed discussion has been done. So what Ind AS 115 has done, they have given 5-step model to identify revenue and to recognize revenue. Correct? So what is the first step? Identify the contract with customer. First, identify contract with customer, because this chapter will also start with contract, but only with customer. So we need to understand what is contract, what is customer. Then identify the performance obligation in the contract. We need to understand what is the meaning of performance obligation and how to identify the performance obligation in the contract. Then determine the transaction price. Of course, the transaction price means consideration that we need to find out. Then allocate the transaction price to each performance obligation in the contract. So there may be one or more than one performance obligation in the contract. To identify transaction price and then allocate the transaction price to each performance obligation. Once you allocate, then recognize revenue when or as entity satisfies their performance obligation. Means once the entity satisfies their performance obligation, revenue will be recognized. What Ind AS 115 says that for recognition revenue, you need to look into all these steps one by one. So first step, let us come identify the contract with customer. So of course, customer means what? Any party that is contracted with an entity to obtain goods or services, but which goods or services that are an output of entities ordinary activities in exchange for consideration. Correct? So can I say it can be easily identify who are customer. But they have just given one clarification that any counterparty to the contract would not be a customer. Counterparty means suppose we have done one arrangement to start one development of residential or commercial apartment. So we become one partner in this contract. In this contract, it might happen that some units are transferred to you. Some units means units of residential apartment, correct? That is transferred to you. It is quite possible that is output transferred to counterparty. So because you are a counterparty, you are not customer, and therefore this will not be considered as revenue with customer. Understood? That this has been given as a clarification. Now contract we know from Bachpan that any agreement between two or more than two parties that create enforceable rights and obligations. Can I say in every contract both party will have right and both party will have obligation, correct? Now so we need to identify both rights and obligation of each party, and that must be enforceable. Now they have given criteria for recognizing a contract. So they have given there are 5 criteria. If all these 5 criteria is satisfied, then the given contract will be contract with customer. And such type of contract in this chapter is known as accounting contract. So only we need to find out accounting contract, and that accounting contract will be recognized as revenue, correct? Now so what are the 5 criteria? The party have approved the contract and committed to the contract. The party has given approval as well as they are committed to perform their part of obligation. Second, the entity has identified each party rights. Entity has identified the rights of each party. I said now every contract has rights as well as obligation of both the party. The entity has identified the right of each party. Then entity can identify the payment terms. Payment terms is also identified. Means it is not that case that payment terms is not identified. If the payment term is not discussed, then it cannot be considered as accounting contract. Means we should be sure about what is the payment terms. Yes, payment can be variable also, but that should be identified. Then contract has commercial substance. Means of course can I say contract has commercial substance, means can I say it should give commercial benefit to both the party. Means any contract which lacks commercial substance will not be an accounting contract. So what Ind AS 115 says that there are some non-monetary exchange. There are some non-monetary exchange between the entities in the same line of business to facilitate sales to the customer. So any non-monetary exchange between entities in the same line of business. Once again, any non-monetary exchange between entities in the same line of business to facilitate sales with the customer will lack commercial substance, and therefore this will not be considered as revenue. Understood? For best example, Ind AS 115 has given that a contract between two oil companies that agree to exchange of oil to fulfill demand of customer in different specified location on a timely basis. Suppose one oil company is North India, one is in South India. So they can do some contract, correct? Now to facilitate sales to their customer, and they will exchange the oil. Are you able to understand? So this lacks commercial substance because there is no commercial benefit to each party, because oil will be same line, same product. Are you getting what I am saying? So this is outside the scope of Ind AS 115. Why it is outside the scope of Ind AS 115? Because it lacks what? Commercial substance. Then last point, it is very much clear that it is probable that entity will collect substantially all of the consideration. Means if you have any doubt about collection of the amount, we should not recognize revenue. This much you understood? Means can I say if these 5 criteria satisfied, so step 1 satisfied, go to step number 2. So what Ind AS 115 says that suppose we have received consideration. By entering into contract. It is quite possible that step number 1 is satisfied or not satisfied. So what will be the accounting treatment of consideration received if step number 1 is not satisfied? So can I say accounting treatment of consideration received, if step number 1 satisfied, then go to step number 2. But if step number 1 is not satisfied and step number 1 is not satisfied and we have received consideration, so what Ind AS 115 says that consideration whatever you have received, that will be a liability till we satisfy all the steps, step 1 to step number 5. But sometime what happen, even though step number 1 is not satisfied, we can recognize the consideration received as revenue if any one of the conditions satisfied. Are you getting? So consideration received, step 1 is not satisfied, then also that consideration received can be recognized as revenue. Can be recognized as revenue. Understood? What they said, if the entity's performance is completed, entity's performance obligation is completed and all the consideration has been received and is non-refundable. Entity's performance obligation is satisfied, all the consideration is received and it is non-refundable, then what? Recognize revenue. For example, we have done one contract, we received some consideration, correct now, and suppose any one criteria was not satisfied and the batch is complete, so of course the amount is non-refundable. We refund the amount because we have teacher-student relationship, we will refund the amount, but there is no contract to refund. Now if you see our received, there is clearly mentioned that amount is non-refundable. If you have got the receipt, so they clearly mention that amount is non-refundable. Are you able to understand? So the batch complete, will we refund? Will not refund. The amount is non-refundable, so that will become our revenue even though you are not coming to the class. Suppose advance receipt, something happened, what? Life is what? There is many problems now, you are not able to come into the face-to-face batch. So performance obligation satisfied? Satisfied. Bye-bye. Bye-bye means we will not refund it now. We will refund it because we have some emotional relationship. But other business, they will never refund it. So can I say it become revenue? Second, if the contract has been terminated, and the consideration received is non-refundable. Understood? In this case, even though step number 1 is not satisfied, we will recognize revenue. Correct? Then come to next point, combining contract. Combining contract, I am just dealing with those points which is important from examination point of view. Correct? Because this chapter is very lengthy, very lengthy. Correct now? So I am just focusing on that point from where question can be asked. Correct? So combining contract means what? Whether 2 or more than 2 contract can be accounted as a single contract. Are you getting? Suppose with one customer we receive 2 contracts. Suppose contract to teach FR, contract to teach GFRS. So can we combine it and apply Ind AS 115 together? Correct. So what they are saying, 2 or more than 2 contract should be accounted as single contract if they are enter into at or near some time. But what is near some time? That is not defined. Enter into at same time or near some time. So that what is near time, that is not defined in the Ind AS 115. Correct? With the same customer or with related parties. Related party, you know. Correct? And if any one of the condition exists, means they have given 3 conditions. If any one condition satisfied, we can combine the contract. First, the contract are negotiated as a package with single commercial objective. It is negotiated as a package, means one amount has been defined with a single commercial objective. Second, the amount of consideration paid in one contract depend upon the price or performance in the other contract. It can be combined. Correct now? The goods or services promised in the contract are a single performance obligation. They are actually a single performance obligation. Even though 2 contract, but there is one performance obligation, then we can combine. Now one doubt will come, so what is performance obligation? That is given in step number 2. Correct? This you have understood? Any doubt? No doubt. Then contract modification. This is also very important. Can we modify? However, it is similar to whatever we have done under Ind AS 116. Ind AS 116 we have done either modification will be a separate or it will be same contract. So similar to that, but not entirely similar point. But they are saying a contract modification exists if three conditions satisfied. First, there is change in the scope or the price in the contract, or both change in the scope and the price in the contract. That changes is approved by both the parties and changes are enforceable. Changes are enforceable. If these three conditions satisfied, then we can say that yes, modification exists. Now modification can be either accounted as a separate contract or it can be accounted as a what? Not as a separate contract. So when it will be separate contract, when two conditions are satisfied, same condition whatever is given under Ind AS 116. First, the scope of the contract increases, correct? Because of the addition of promised goods and services that are distinct. So scope has been increased by addition of additional goods and services which are distinct. Scope has been increased by addition of additional goods and services which are distinct, and the price of the contract increases by an amount of consideration that reflect the standalone selling price of additional goods and services. Means price whatever has been increased, that is equal to the price whatever has been increased, that is approximately equal to the standalone selling price of the additional goods and services. If these two conditions satisfied, then modification will be a separate contract. Apply Ind AS 115 separately. Means there is no need to change the original contract. There is no need to alter the accounting of original contract. However, when any one of these conditions satisfied, any one of these condition is not satisfied, or both the condition is not satisfied. This is point number 1 and point number 2, correct? So any one or both the conditions are not satisfied, then we'll say that modification is not a separate contract. Then in that case what we'll do? So what Ind AS 115 says that if the remaining goods and services are distinct. Now we need to understand what is the meaning of distinct. This distinct has been defined in step number 2. So we need to wait for that. Let us first assume yes, we have understood the meaning of distinct, correct? In your mind, just give one yes, we have understood the meaning of distinct, but distinct has been defined where? Distinct does not means what? The similar item. Two identical item may be also distinct. Suppose this is what? One mobile of same one brand, another mobile with same brand, same model can be distinct. When I am saying distinct, distinct does not mean identical. Distinct does not mean it is what? Not identical. Identical can be also distinct. Understood? But when it will be distinct, we need to understand in step number 2. Are you able to understand? If the remaining goods and services are distinct, then what we'll do? We need to terminate. This will be considered as termination of existing contract and creation of new contract. Termination of existing contract and creation of new contract. It means can I say the remaining transaction price will be recognized as the revenue for what? Remaining goods and services, correct? Means termination of existing contract and creation of new contract. So what they want to say in this case, correct? He allocate the remaining transaction price not yet recognized to the outstanding performance obligation. In other words, treat it as a termination of old contract and creation of new contract. So when I am saying it is creation of new contract and termination of old contract, means all the remaining transaction price which is not yet recognized will be now recognized based on new contract. Understood this point? Second, if the remaining goods and services are not distinct, one Once again, if the remaining goods and services are not distinct, then what they said, it will be account for the contract modification as if it were a part of existing contract. Means we'll do some adjustment in the existing contract only. Means what they want to say in this case, what we'll do, account for the contract modification as if it were a part of existing contract, that is adjustment to revenue is made on a cumulative catch-up basis. Cumulative catch-up basis means by giving what? A cumulative accounting. A cumulative accounting. Okay, have you understood this point? Correct. Now we'll take some question, but not now, because I will take question only at the completion of the entire topic. Chalega? Understood? So what they want to say, can you repeat with me first, because this is very important question can be asked. Contract modification will be accounted as a separate contract when two conditions are satisfied. First condition, the scope of the contract increases by addition of additional goods and services that are distinct, and the price of the contract increases by a price which reflect the standalone selling price of additional goods and services. Okay. If any one of these two conditions or both the conditions are not satisfied, then modification is not a separate contract. If the remaining goods and services are distinct, then it will result in termination of existing contract, creation of new contract. It means allocate the remaining transaction price which is not yet recognized to the outstanding performance obligation based on new contract. Correct. But if the remaining goods and services are not distinct, if the remaining goods and services are not distinct, then account for the contract modification as if it were a part of existing contract. It means in this what we'll do adjustment to revenue on a cumulative catch-up basis. What is the meaning of cumulative catch-up basis? What is the meaning of cumulative catch-up basis? Batao. Means suppose, just try to understand. Initially, you have done one contract. I'm just giving one example so that you can understand. Suppose we have done one contract in which I need to teach you for 300 hours. Normally my regular batch is for how many hours? 300 hours. Are you able to understand? And suppose I charge hourly basis. I may charge hourly basis. So 300 hours, and suppose per hour 50 rupees. So what is the price? 15,000. Correct? Now syllabus change. And because of syllabus change, we need to teach you additional 50 hours. Quite possible. Correct? And now for this additional 50 hours, we decided 20 rupees. Quite possible. Correct? Now 5 to the 10. Become 1000. And out of 300 hours, already 120 hours we have completed. So it means 120 into 50, how much? 6,000 already recognized as revenue. Already recognized as revenue. Now changes happen, modification happen, modification the contract. Correct? So of course this is not distinct. First token is the price of the contract does not increase with the price which is commensurate. So one condition is not satisfied, and therefore can I say it is not a separate contract? It is not a separate contract. Correct? Have you understood this much? Now you only say whether remaining goods and services are distinct or not distinct. This remaining, whatever I have not taught you, it is distinct or not distinct? Not distinct. It means now we need to come to what? On a cumulative catch-up basis. Means the can I say modification will be accounted as if it were a part of existing contract. So what we'll do? We'll say like this. Your total hour now become 350. It becomes 16,000. So 16,000 divided by 350, how much? How much? 45.71. It means now we should recognize revenue only on this basis, but we recognize based on 50. So we'll say 120 into 45.71 is equal to how much? It means our revenue should be 5,485. How much we should decrease? Means we should decrease 515. This is decrease in revenue, whatever already we have recognized. This is known as cumulative catch-up basis accounting. Understood this point? Any doubt? Understood? Yes, sir. Simple? Simple? Yes, sir. We'll take some question, but not now. I will take at the end. Now let us come to step number 2. Identification of what? Performance obligation. Now, one thing we have understood that what is the meaning of performance obligation? Performance obligation means promise to perform. Performance obligation means what? अरे बोलना रे. Promise to perform means promise to provide goods and services which are distinct. Correct now? Promise to provide goods and services which are distinct. So what they are saying, a promise in a contract with a customer to transfer to the customer either a goods or services or a bundle of goods or services that are distinct, or a series of distinct goods or services that are substantially the same and that have same pattern of transfer to the customer. Means what they are saying, that promise to provide goods and services can be a single goods or services or a bundle of goods and services that are distinct, or it can be a series of distinct goods and services that are substantially the same and that have the same pattern of transfer to the customer. Means, for example, I am providing accounting services. So can you say, in that accounting services, I am doing one service or series of distinct services? Series of distinct services, but they are substantially the same and have the same pattern of transfer to the customer. That accounting services, yeah, bookkeeping services will have series of distinct services, but will be considered as one performance obligation, even though that include distinct goods and services. Understood? Yes, sir. Now, in this, we need to understand what is the meaning of distinct performance obligation. Means when the goods and services provided are distinct. When the goods and services provided are distinct. What they are saying, it is two-step model to identify whether the given performance obligation are distinct or not distinct. But they said first, focus on whether goods and services are capable of being distinct. Means first criteria is what? Whether the goods and services are capable of being distinct. Capable of being distinct. Second, focus on whether the goods and service is distinct within the context of contract. First, capable of being distinct. Second is what? Distinct within the context of contract. Means it is might happen, it is capable of being distinct, but it is not distinct within the context of contract. Then it will not be distinct. Means if both the conditions are satisfied, then they are distinct. If any one condition is not satisfied, then they are not distinct. Then there is a single performance obligation. So we are saying in one contract, there is one performance obligation or more than one performance obligation. If the performance obligation are distinct, it means they are more than one performance obligation. Suppose we have done one contract, I will teach you FR, I will teach you GFRS, and I will conduct test also. So there are three services. Whether these three services are distinct or not distinct, that will be based on these two steps. First is what? Whether they are capable of being distinct or they are distinct within the context of contract. This point you understood. I am just focusing on keyword, because in exam you need to write down the keyword. First is what? capable of being distinct. Second is what? Distinct within the context of contract. So first let us understand point number one. This point number one is capable of being distinct. When the goods and services are capable of being distinct, simple, customer can benefit either alone or with other readily available resources, then they are capable of being distinct. For example, you purchase mobile with what? With what? Charger, correct? And with suppose earphone, correct? Now my question to you are, mobile and charger, whether they are capable of being distinct? How? How? This charger, just try, you can purchase chargers from what? But just try, when you purchase new mobile, whether it is capable of being distinct, means this mobile require charger or not? Require charger or not? Now you will say we can purchase from what? But no, this mobile require charger. So what they are saying, customer can benefit, whether customer can benefit with the charger alone or with other readily available resources. Just try to understand the intention of contract. You require charger or not? So it means mobile and charger are not distinct. That is one performance obligation. But earphone you don't require. Means customer can benefit with earphone alone or with other readily available resources. We normally just try to, this is mobile and this charger cannot be used with other mobile. Correct now? Means the charger of this mobile cannot be used with other mobile because that is been designed in such a way. Are you getting? But the earphone can be used. Are you able to understand what I am saying? It means earphone become what? Distinct performance obligation. I hope you have understood. Then second point is what? Whether it is distinct within the context of contract. First is what? Capable of being distinct. When it will be capable of being distinct? When the customer can benefit either alone or with the other readily available resources in the market. Correct? Second, whether it is distinct within the context of distinct within the context of contract. To what they are saying? What they are saying? That entities promise to transfer goods and services to a customer is separately identifiable. Separately identifiable means they are distinct. Entities promise to transfer goods and services to a customer is separately identifiable, means they are distinct if all the conditions are satisfied, but a significant integration services is not provided. Means one goods and services does not provide integration services to other goods and services. Significant integration services is not provided. Second, no significant modification or customization is involved. No significant modification or customization is involved. Not highly interdependent or highly interrelated to each other. If all these conditions satisfied, means they are capable of being distinct. They are distinct within the context of contract. Means what they want to say in simple word, we can say in this way also. Two or more promise to transfer goods and services are not distinct. Are not distinct if any one condition is satisfied. Means for if entity provide significant integration services, that is the entity is using the goods and services as input to produce the combined output called for the contract. Means one goods and services is providing integration services for the actual output. Are you able to understand? Then it becomes a single performance obligation. Single performance obligation. For example, you are doing construction of building. Correct? Construction of building. Are you getting? Correct now. With installation of what? AC. So can you say installation of AC is nothing but we are providing an integration services. Therefore, it becomes one single performance obligation. Means it is capable of being distinct. Correct? Are you getting what I am saying? But this is not distinct within the context of contract. Are you able to understand what I am saying? Yes, sir. Second, if one or more goods and services significantly modifies or customize other promised goods and services. For example, you purchase one software and installation of software is required with customization. For example, suppose you purchase Tele software. Sometimes Tele software customization is not required. But sometimes you require customization of Tele software as per your need. So customization services is not distinct, because without customization you can't use Tele software, because you require customization of that Tele software. If suppose installation is done without any modification, without any customization, then we can install with any other party. We can do installation by our own. Are you getting what I am saying? So if one goods or services significantly modifies or customize other promised goods and services, they are not distinct. Third, if the goods and services are highly interdependent or highly interrelated, then of course they are single performance obligation. I hope you have understood. So what are the two conditions? They will be distinct when two conditions. They must be capable of being distinct and they are distinct within the context of contract. So when I am saying distinct within the context of contract, means there are three conditions. Significant integration services is not provided. No significant modification or customization. Not highly interrelated or interdependent. Can you say from any question now you can understand? Correct. Now let us come to next point. Step number 3. Determining the transaction price. Again, transaction price means consideration involved. This consideration can be either cash consideration or non-cash consideration. Correct? Understood. Now coming to find out transaction price, there are how many factors? 4 factors. First is variable consideration. Second is significant financing component. Third is non-cash consideration. Third is consideration payable to customer. Correct? So we need to understand these 4 factors. Let us first come to variable consideration. Can you say it means transaction price can be fixed as well as variable? If it is fixed consideration, no discussion required. But if it is variable consideration, we need to understand how to estimate variable consideration. How to estimate variable consideration on contract inception. On contract inception. So why we are estimating? Because the transaction price need to be allocated to different performance obligation. Are you able to understand? The transaction price need to be allocated to on contract inception only. Therefore, we need to estimate right now. We will not wait for actual received, actual happening of the contract. Suppose we have, there is one consideration that if you pass, I will get additional 1000. Variable consideration now. So of course you will pass, then only I will receive. Otherwise I will not receive. But right now it is what? Variable. And can you say performance obligation is satisfied after that you are giving exam? After that you are getting pass. It means I am receiving consideration after satisfying a performance obligation. But what Ind AS 115 says that the transaction price need to be allocated to different performance obligation and should be recognized as revenue when performance obligation is completed. Means even though not received, we need to recognize it as revenue or not as per accrual basis, but we don't know the amount of consideration. So we need to estimate it. Means for the first time Ind AS 115 has given estimation of revenue. Still now, before Ind AS 115, we have never estimated revenue. We only estimated what? Expense. But now we need to estimate what? Revenue also. So estimation is very easy. Correct now. So what they said, this is same to same what we have done under India's 37. Same to same estimation point. What they said, if the entity has a large number of contracts with similar characteristics, you remember we have done large population, correct. So MTD has a large number of contracts. Right now I said, if you pass, I'll get 1000. So one student or large student? Large population. So in this case, we need to estimate the expected value. And the expected value will be the sum of probability, that is weighted average of all possible consideration amount. Means weighted average of all possible outcome. Means suppose in this way, suppose we have made one contract that if the contract is completed within 20 months, you will get a bonus of 1 lakh. If it is completed within 25 months, they will get a bonus of 90,000. If it is completed after 35 months, no bonus. And the probability of completing within 20 months is suppose 20%. This probability is 80%. This probability is 70%, and this probability is 10%. So how to identify? We'll do these, and that we can calculate what? Weighted average of all possible outcome. Can you say with the question you can understand? With the information given the question you can understand how to estimate. So estimation will be weighted average of all possible outcome. Understood? Second, if the contract has only 2 possible outcome, correct? Means right now whatever I said, if suppose there is one thing, there is only 2 possible outcome, yes or no. Yes means you are getting bonus, no means no bonus. Means if the performance is completed within point, you are getting bonus. If the performance is not completed within time, you are not getting bonus. So there are 2 possible outcomes, and the probability is 90% this, 10% this. Well, when there is 2 possible outcomes, then don't do weighted average. Then most likely outcome will be what? The amount of consideration. Most likely outcome will the amount of consideration. The most likely amount, that is single most likely outcome of the contract, will be considered as variable consideration. Understood this point? Have you understood? Bolo? Correct. Have you understood this point? Correct. Of course, whenever there is a variable consideration, we need to reassess such variable consideration at the end of each reporting period till the actual happening of that event. So of course reassessment is required. If we will do reassessment, so of course we need to do reassessment of revenue recognition also. Correct. So reassessment is also required. At the end of each period, entity shall update the estimated transaction price to represent the circumstances present at the end of the reporting period and the changes in circumstances during the reporting period. Of course, that changes will be changes in accounting estimate, and we will do prospective accounting, not retrospective accounting. We'll take one question based on this, but not now, at the end. Correct? Yes, sir. Then second is significant financing component. What India says that, of course, in determining the transaction price, we should give importance to time value of money. Correct? Means what they said, either party may benefit from financing. What they want to say, just try to understand. Suppose this is the date when performance obligation is satisfied. Means, can I say revenue will be recognized at this point of time, but we receive consideration yahan par, or we receive consideration at this point of time. This is 1 year before, this is 1 year after. There may be 2 situations. So if you are receiving consideration, Suppose the cash selling price, if you receive consideration here, is 10,000. But if you are receiving before, will you get 10,000 or less than 10,000? Less than 10,000. So this will be 9,000. Because this is the present value of about 10,000. And if you are receiving late payment, so of course it will be more, 11,000. So what they are saying, in this case, both party may benefit from financing. In this case, but what journal entry will do? We receive consideration, so cash account debit to advance, means this is nothing but contract liability. How much you have received? 9,000. Correct? Understood. Now on this we recognize interest expense, account debit to contract liability. How much? 1,000. And then contract liability, account debit to revenue. How much? 10,000. Means my revenue will be what? 10,000 only. Means this is just like a loan received from what? Customer. Loan received from the customer means it is a benefit to the customer. In this case, just try to second case. Revenue is recognized but the amount is not received. So what journal entry first? It will be receivable, account debit to what? Revenue. How much? 10,000. My revenue in both cases will be 10,000 only. This is first case, second case. Now in this case we will say receivable, account debit to what? Receivable, account debit to interest income. How much interest income? 1,000. And how much will collect then? Cash account debit to receivable. How much? 11,000. So can you see it is nothing but loan given to customer. So this case will be loan received from customer. This case will be loan given to customer. Whenever it involves significant financing component, the word is significant. Significant. So what India says that if it is insignificant financing component, ignore it. Then don't do this accounting. Then do accounting with the transaction price, and transaction price will be recognized as revenue. But if there is significant financing component, we need to perform discounting. We need to perform discounting. Have you understood this point? So either party may benefit from financing. The customer may pay before entity perform its obligation. It means a customer loan to the entity. A customer may pay after entity perform its obligation. This is loan by entity to the customer. Significant financing component. The word is significant means if it is insignificant, ignore it. Suppose the market rate of interest is 10%. Market rate of interest is 10%, but you are charging only 2%. Insignificant or significant? Insignificant, ignore it. Don't do any discounting. Don't do any discounting. Correct. Now, how to determine discount rate? Means suppose there is significant financing component. So of course we need to take present value for recognition of revenue. So how to calculate, how to determine the discount rate? So what Ind AS 115 says that if the contractual rate of interest is explicitly stated in the contract, means the rate of interest is stated in the contract. Yes. Where the contractual rate of interest reflect the rate of interest in separate financing transaction between entity and customer at contract inception. In simple word, where the contractual rate of interest is equal to market rate of interest. Means it is what they are saying. It reflects the same rate of interest in a separate financing arrangement between customer and entity. Means the customer has taken a separate loan, what rate of interest would have been charged? In simple word, I can say contractual rate of interest is equal to market rate of interest. So discount rate will be equal to what? Contractual rate of interest. No adjustment required. If yes, then discount rate will be equal to contractual rate of interest. But no, then we should determine what? Discount rate. And if it is not stated in the contract, then also determine what? Discount rate. Normally, in a revenue transaction, contract rate is never specified in the contract. Contractual rate of interest is never specified in the contract. So always we should determine what discount rate. If it involves what? Significant financing component. Correct. How to determine? What India says that first preference will be given to incremental borrowing rate. First preference will be given to incremental borrowing rate. If not determinable, then second preference, interest rate implicit in the transaction, which we can calculate IRR. This is nothing but IRR. But first preference to what? Incremental borrowing rate. And if suppose that is not given in the question, then calculate IRR. You are expert in calculating IRR. That is interest rate implicit in the transaction. Is the rate of discount at which the present value of transaction price is equal to cash selling price. Understood? Yes, sir. This you have understood. Then next what they said, if any of the following factor exist, what Ind AS 115 says that if any one of the following factor exists, then there is no need to, then the contract with the customer will not have any significant financing component. Means even though you received the amount in advance, or even though you are receiving amount after satisfying the performance obligation, correct, then also it will not include any significant financing component if any one of the factor exists. Correct. First, the customer paid in advance and the timing of transfer of those goods is at the discretion of customer. Means I receive advance, the contract done, I receive advance. The customer is saying that we'll take delivery after 1 year. Okay, you take delivery. So it does not mean the amount whatever receive include any financing component. No, it is at the discretion of what? Customer. Suppose you have given me fees, you said, sir, I will come in the next batch. Okay, come after next batch. Normally it happens with me. You have given amount in this batch, due to some problem, you said, sir, we cannot attend the batch, we'll come in the next face-to-face batch. I said, okay. मजा आ रहा है. अरे बोलना रे, whether it will include any significant financing component? No. If I delay, then there is some problem. But you are delaying, na? Correct. A substantial amount of consideration is variable. A substantial amount of consideration variable, because any variable consideration will be received only on the happening of what? That event only. So it will not include what? Any financing component. Understood this point? Second, the difference between the promised consideration and the cash selling price arises for reason other than what? Provision of finance. Please just try to answer. Normally what happens? Normally, everyone, in our business, coaching business, we receive the amount in advance. Bole yes or no? Because we have a fear of default. Because of that, to protect ourselves, we are receiving in advance. Normally we should receive the amount either on daily basis or after completion of batch. But why we are getting advance? Because we feel that if some student after 30% of class leave, then one student is missing in the class. Now we have limited seats. So normally in this business, education business, not only me, everyone will receive what in advance. Advance. It does not mean it involve any financing. We are not charging interest from you. Yeah, it is not any adjusted amount. Correct? Or it might happen in some contract, customer will pay late because they want to be satisfied with the performance of contract. So they will retain some amount and they will release that amount only when they are satisfied with the contract. So they will retain some amount, they retain some money, will not include any significant financing component. Understood? Yes, sir. Then there is one practical expedient. Practical expedient means as per the practical understanding of the transaction. What they are saying, if the period between the entity transfer the promised goods or service to customer and when the customer pays for the goods and services is less than 1 year or 1 year, then it will not involve any significant financing component. There is no need to recognize any interest component. Understood? Correct. Then non-cash consideration. Non-cash consideration. Can you see there can be any non-cash consideration? For example, we have done that we purchase property, plant and equipment in exchange of asset. So in the books of buyer, Ind AS 16, but in the books of vendor, Ind AS 115. Are you able to understand? Means what I want to say? Suppose you purchase a new car in exchange of old car. So from vendor only, na? And can I say there are two parties? One is entity and one is vendor. So in the books of entity, who is purchasing new car in days 16? And in the books of vendor, we need to apply what? In days 115. Are you able to understand? Have you understood this point, what I am saying? Are bolna re. Yes or no? This in days 16 we know. Now we are coming to in days 115. So what they want to say? It is similar but thoda sa different. You need to understand the concept behind this. What they are saying? The transaction price for the contract to the non-cash consideration shall be measured at fair value. Fair value only. But fair value of consideration received or consideration given up. Fair value of asset received or asset given up. You only say. In that case, we have done first preference fair value of asset given up. But यहाँ पर consideration received ना. So here the first preference will be fair value of consideration या asset received. That cannot be measured reliably then. Fair value of asset given up. Whichever is clearly evident. Correct. So if the fair value of non-cash consideration cannot be reasonably estimated, it shall measure the consideration by reference to the standalone selling price of goods and services promised. Means first preference will be fair value of non-cash consideration received. Fair value of non-cash consideration received. If it cannot be reasonably measured, then second preference will be standalone selling price of goods and services given up. Standalone selling price of goods and services given up. Correct? Understood. Very simple. I hope you have understood. So first preference what? Fair value of non-cash consideration received. Right. Second preference, standalone selling price of goods and services given up. Understood? I think understood. Now, just try to understand. Suppose you sold one car. Understood? And you receive equity shares of that entity. In this book to 102 now. In this book 102 na. Are bolna re. Purchase of car in exchange of equity shares. India 16 ki 102. Purchase of car in exchange of equity shares. India 16, India 102. Any share based payment arrangement. Which India? Employee or non-employee? India 102. Purchase of car in exchange of another car? India 16. Purchase of car in exchange of equity shares? 10. So in this book, to India 115. Suppose the fair value of this car is standalone selling price of this car is 1 lakh. And you receive equity shares. Suppose 10,000 equity shares into 12. Fair value is 12. So this become what? 1,20,000. But the first preference will be given to what? 1 lakh or 1,20,000? First, fair value of non-cash consideration received. What you have received? Equity share. Then why you are saying car? मजा आ रहा है कार में. You want to drive car. The bull want to go for long drive. Then why car? Abhi taja we have done one point. You are forgetting. I am asking in the books of vendor, huh? So what journal entry? Journal entry you say. Can you say investment in equity shares to what? Revenue 1,20,000 is revenue now. And suppose the cost price of this car is 80,000. Then one more journal entry. Cost of sales account debit to inventory means car. Inventory means car na is 80,000. Automatically the difference will be what? Profit. If suppose 1,20,000 is not determinable, then what journal entry? Investment in equity shares account debit to revenue. Arey Baba, this journal entry will remain same. This is at cost price. We are just finding out revenue. So revenue first preference will be what? Fair value of. Second preference, standalone selling price of. So batao. If suppose 1,20,000 not determinable, what journal entry? Journal entry remains same. Amount will change na. Investment account debit to revenue at rupees 1 lakh. Correct? Now what happens? Subsequently, what I am discussing. Subsequently means at each reporting date. Subsequently, the price become 15 equity shares. Batao, whether you will adjust the amount of revenue. Are you able to understand? Are you able to understand? Suppose the next reporting date, the price of equity shares become 15. Quite possible. Whether you will adjust the amount of revenue. No. Means now investment will be accounted as per Ind AS 109. Now whatever you are doing, do as per what? 109 na? Arey bolna re. Understood. If I am a examiner, I will ask a question on this. Because I like this question. And this is what? Actually, practically dealt point. Normally this type of transaction happen practically. Normally. But they are not asking this type of point. But interesting na? Interesting or not? Yes. Hello. Understood. So that is only given. Entity does not adjust the transaction price for any subsequent changes in the fair value of consideration. This much you understood? Next point. Consideration payable to customer. Sometimes what happens under a contract, there may be some what? Coupon or voucher given. Means I hope you might have also got some coupon, rupees 10 cashback, rupees 50 cashback, then party na. You purchase some item, you receive one coupon, in that coupon 10 rupees also, we enjoy that moment or not. Believe me, maja aa jata. 10 rupees also, 10 rupees nowadays so it is insignificant amount. But then also as a human being, we receive 10 rupees also, now we become happy. Yeah, in our days so in 10 rupees we used to do party also. Believe me, when we went to schools now, So we used to contribute 10 rupees, 10 rupees, 10 rupees. We went to one hotel and we'll eat many things. Believe me, that was like 10 rupees or maximum 20 rupees. Correct now. One dosa will come, one cold drink will come, party ho gaya. Nowadays, to 10 rupees means one nothing. Nothing now. Correct. But then also, even on nothing, if we receive a cashback of 10 rupees, we get a smile or not. Now, it means under that contract, some consideration is payable to customer. It is quite possible consideration is payable to the customer. Then what is the accounting treatment of that? Have you understood the topic? Topic you understood? First minute you understand topic now? Correct. So what they are saying, accounting is very easy. Is the consideration payable to a customer is a payment for a distinct goods and services from the customer. It is quite possible that you have purchased something from customer and because of that contract some amount is payable to the customer. But no, nothing is payable to the customer because of purchase from customer. Means it is not because of purchase from customer. Then account for the consideration as a reduction in what? Transaction price. Reduce the consideration payable to customer from transaction price and that amount will be recognized as revenue. But yes means the consideration payable to the customer is account is for what purpose? For the purchase of distinct goods and services from customer. Are you getting? For example, suppose I am teaching you. In the contract you said, sir, we can provide you batteries. Okay. So suppose in this batch, we require batteries of what? 1000 rupees. Okay. So under one contract, you say, sir, we'll provide you batteries of rupees 1000. My fees is 10,000. We have done one contract that you will provide me a battery of rupees 1000. So under the contract, this may be a separate contract also. Two contracts we made. But this is consideration payable to the customer for purchase of battery or not. So whether we'll deduct from 10,000, you will pay me 9,000 only. So should we recognize the revenue of 10,000, 9,000? 10,000 and battery will be a separate transaction, but a payment will be 9,000 only. So what they are saying, of course that will be accounted as a purchase from customer. But what they are saying, does the consideration exceed the fair value of distinct goods? We suppose the consideration payable is 1,500, even though fair value of goods battery is what? 1,000. So what they are, purchase will be 1,000 and 500 will be reduced from transaction price. Understood? So does the consideration exceed the fair value of distinct goods and services that entity received from the customer? Yes. Account for the excess as a reduction of transaction price. And the balance account for the purchase of goods and services in the same way that entity account for other purchases from supplier. Understood this point? आगे चलें. Step 4. Now step 4 and step 5 is very important. Can you say step 1, step 2, step 3 in every question will be satisfied? Because if that is not satisfied, then we can't recognize revenue. Step 1 is what? Identify the contract. Of course, yes. Correct now. Then determine performance or identify the performance obligation. We can identify. Then determine transaction price. We can determine. Now step 4 and step 5 become important. Then how to allocate transaction price and how to recognize the revenue. So how to allocate the transaction price to different performance obligation? Can you see one performance obligation allocation is not required? If more than one performance obligation allocation required? How to allocate? Same, very simple. Allocation will be done in the ratio of what? Standalone selling price of goods and services transferred. So what is the meaning of a standalone selling price? Standalone selling price is the price at which entity would sell a promised goods and services separately to a customer. Suppose I have said FR, CFRS and test and I charge 15,000 from you. But if I teach you FR separately, then 10,000. If I teach you GFRS separately, then 7,000. And if I test conduct for any student who is not my student, then charge na. Bolna re. Nothing free once becoming CA. You become CA with a lot of pain na. Bolna re. With a lot of pain. So we are not here to do any. Sir, of course we provide because that is a teacher emotions. But as a CA, we become with so much pain to earn maximum gain na. Why we are taking so much pain? To do charity or to what? To earn a lot of money. One lot of money. After earning a reasonable amount, we can do charity also. But initially, so why will earn? Because we have a lot of responsibility na. Correct. The test is suppose 3,000. It become what? 20,000. So this 15,000 will be allocated in this ratio. Can you see this will be given the question? This will be given. You have calculator, can allocate. But how to estimate? This is very, how to estimate standalone selling price. What they said, if the standalone selling price can be directly observable, very good. But if it cannot be directly observable, means it is quite possible that I do not conduct tests separately because I do not conduct tests separately. I do not conduct tests separately. Because that is not my nature. So how to find out standalone selling price of test? Quite possible na? Means it is quite possible that price is not directly observable. Then we need to estimate standalone selling price. So how to estimate? They have given how many methods? 3 methods. 1, 2 and 3. Are you able to understand what I am saying? What are the 3 methods? First method, adjusted market assessment approach. What they are saying, go to market and just find out the similar goods and services is sold at what price by your competitor. That is adjusted market assessment approach. Go to the market, find out what your competitor is charging for similar goods and services. That will become standalone selling prices. Expected cost plus a margin approach. Like you cannot find out selling price, but you can estimate a cost. Of course, we can estimate a cost. So estimate cost and then add a reasonable profit margin. That will become a standalone selling price. First method understood. Second method you understood. Third method is what? If first method and second method cannot be applied, then apply residual approach. Residual approach means what? Suppose I will say FR, TFRS and test. We say it is 15,000. Correct? So we can find out FR, standalone selling price. Suppose we find out 9,000. We can find out GFRS. Suppose it is 4,000. Correct? But we are not able to determine the standalone selling price of test by first and second method. Then residual 15,000 become 2,000. Understood? This is residual approach. This is residual approach. Are you able to understand? Now you must be thinking, sir, this you have done in this way. If suppose this is 10,000, this is 5,000, then this becomes 0. In that case, you do not have any other option. You need to apply 1 and 2 only. Means then we can't apply residual approach now. Are you able to understand what I am saying? Correct? Yes, sir. So residual approach, an entity may estimate the standalone selling price by reference to total transaction price less sum of the observable standalone selling price of other goods or services promised in the contract. Have you understood this point? Means again, residual approach, they will inform in the question only. Apply residual approach. Are you able to understand? Correct? Yes, sir. Then allocation of discount. Can you see, whenever we purchase bundle of goods and services together, so there will be some discount. Means in this case, I mean right now I have said FR, TFRS, test. 15,000. But standalone selling price I have said 10,000, 5,000, 3,000, 18,000. So there is a discount of what? 3,000. So this discount should be allocated to all in the ratio of standalone selling prices. Means once you allocate this 15,000 in this ratio, automatically discount allocated. Automatically discount allocated. But what Ind AS 115 says that if discount relate to only one performance obligation, then or one or more performance obligation but not all performance obligation. Normally what happens when I launch GFRS, so I have said FR GFRS together. So I said let us give GFRS at very nominal cost, but not FR now. FR though okay. My fees was supposed 10,000, 7,000. I have given it 11,000. Only 1,000 I have taken from a student to only promote that I started teaching GFRS. Are you getting? We need to inform now. And normally students do not take GFRS. Normally students do not take. So let us take, say, just try to listen. If you okay, so you can pay 1,000 additionally for that. If you find it easy, then you can continue for GFRS. Because GFRS is nothing but 5% extra. 5% extra effort, FR becomes GFRS. Normally students do not understand this and they will go for economic law. I don't understand why students go for economic law. Economic law, I will never say that you will never make your career in economic law. Na? Whether you will make your career in law, then I will say do law. Why into CA? Means from my point of view, either you should go for GFRS or one more subject, na? Capital market. Or maybe what? International taxation. These three I think you should opt. Means after becoming CA, either you'll go for tax or audit or what? Finance. But maximum students are opting for what? Economic law. I have not understood why. But you have opted? Economic law. What is the reason? Easy. Students are passing there. Because they are friends you are doing, so you also opted. Huh? Simple. How you can understand it is simple than other? I said FR, so no need to study only. Only my one class. Difference between FR and Ind AS and IFRS. There are 11 difference. If you do that 11 difference, 90 marks coverage done. 10 marks US gap. 90 marks done with that one, I will say, discussion of 1 hour. And that I do in FR only in my regular course. I teach difference also. So, you are saying 3 chapters are in that economic law. How many chapters are new? 2 chapters are new. I am saying only here 10 minutes is new. Hello. It means that normally we do what others are doing. Normally, believe me, I have seen that we always do what others are doing. But just try to listen my words. If you want to become successful, do what others are not doing. This is the only way to get success. If you are following others, you will be always followers. But just do so that others follow you. Don't follow others. Do something that you become the follower of, you become the identification for others. The lesson I am giving, which I have understood with experience of my life. When I became CA, believe me, 4 years I have struggled because no one was there to guide me. No one was there to guide me. I was totally confused with my life, what to do, what not to do. I started with doing jobs. Then I understood what I am doing. I'm not made for this. I wasted my 1 year. I'm not wasted. I've learned there, but why I was doing, I was not knowing. Correct now, means there was nothing planned because I was doing what others were doing. Become CA, started doing job because everyone went for job. 90% is my entire friends went for what? Interview. Therefore, I also went for interview. Are you getting what I am saying? So what I was doing, what others were doing, but the life was not planned. So just what I want to say, do what others are not doing. Make your own identification. Make your own call. Means if I would have been in your position, means if in my student there was some elective paper, I would have done the analysis of all the paper. I think you don't know the syllabus of GFRS. You don't know the syllabus of capital market. You don't know the syllabus of international market. You don't know the syllabus of other subject. You don't know the syllabus of economic law. Whatever you know that your friends have said, okay, this is new, this is what outside, take it. I will say do analysis. Then find out your own interest. Then do na. Are you getting what I am saying? This is CA. If you opted for economic law, it does not mean you will pass. Does not mean na. But if you opt something by your own choice, there is a higher probability of getting passed. But you take your own decision because passing is more important. Passing is more important. By taking GFRS, if you do not pass, then you need to regret. Correct now. But what I want to say, you should opt any subject, any course as per your own call. That is the lesson of life I am giving. Not only before CA, after CA also. Whatever you are doing, you should do by taking your own call. Don't do what others are doing. This I want to say. Correct? Yes. Now what I was saying, correct. What I was saying, discount you understood. But suppose if discount relate to one or more performance obligation, but not to all performance obligation, so what Ind AS 115 says that, then that discount will be allocated to either one or more performance obligation, not to all performance obligation. Understood? Means can I say, first we'll do allocation of transaction price. If first we'll allocate discount, doubt will come. Means in this case, suppose the discount of 3000 is only for GFRS. Can you allocate this 18,000? Can you allocate this 15,000 in the ratio of standalone selling price? No. Means in this case, whenever discount relate to one or more performance obligation, but not all performance obligation, first you need to allocate discount and then allocate transaction price. Then allocate transaction price. Understood? Have you understood? Correct. Means can you say, if suppose the entire 3000 is for GFRS, we have understood. So we'll say 10. This become 10, this become 5 minus 3, 2, and this 3, and automatically it become 15,000. No allocation required only, automatically it become what? 15,000. That only they want to say. A customer receive discount for purchasing a bundle of goods or services. The sum of standalone selling price of the promised goods and services in the contract exceeds the promised consideration. The entity shall allocate discount proportionately to all performance obligations in the contract, unless an entity has an evidence that entire discount relate to only one or more, but not all performance obligations in the contract. Then allocation of variable consideration. Simply, once again, variable consideration will be allocated to what? All performance obligation. But if variable consideration relate to one or more but not all performance obligation, so it should be allocated to one or more but not to all performance obligation. Understood? Have you understood this point? So what they are saying in this case, the variable consideration will be allocated in the ratio of standalone selling prices, but if it relate to one or more but not all performance obligation, then it should be allocated to that one or more but not all performance obligation. So what they are saying, if these two conditions satisfied, then variable consideration relate to one or more but not all performance obligation. For example, terms of variable payment relate specifically to the entity's effort to satisfy the performance obligation. The terms of variable payment relate specifically to the entity's effort to satisfy the performance obligation. I am teaching you FR, GFRS and test. But if I say, if you pass in FR with 90 marks, so you need to pay me 1000 more. But no such contract. If you pass, I will pay na. But let us assume, means if you pass, I am performing good. So due to that performance, you will pay me 1000 more. But can this relate only to FR, not to GFRS? Therefore, this should be allocated to what? Only FR, not to GFRS. Understood? Yes, sir. Correct. And allocating the variable consideration entirely to one performance obligation is consistent with the objective allocation. What is the allocation objective? It should be approximately equal to standalone selling price. Okay, that objective should also meet. These two conditions satisfied, then we can allocate variable consideration to one or more but not all performance obligation. This much you understood. Last step, step number 5, satisfying performance obligation. Of course, important. Now what Ind AS 115 that says that revenue will be recognized when performance obligation is satisfied. Revenue will be recognized when performance obligation satisfied. Now what Ind AS 115 says that performance obligation is satisfied either at one point of time or over the period of time. Either at one point of time or over the period of time. Means normally performance obligation satisfied when control is transferred. So either control is transferred at a particular point of time or over the period of time. So if it is satisfied over the period of time, the revenue will be also recognized over the period of time. If it is satisfied at a point in time, then revenue will be recognized at that particular point in time. Correct? It means for revenue recognition, first we need to find out performance obligation satisfied over or at particular point. So what Ind AS 115 says that there are 3 criteria. If any one criteria satisfied, then it is satisfied over the period of time. If no criteria satisfied, it means it is at a particular point of time. Understood? So what? Let us understand what are the 3 criteria. Correct? What they said? Transfer of control over a period of time. How many criteria given? A, B, C. Criteria A, B and C. Any one criteria satisfied, it is over or at one point of time? Over the period of time. If no criteria satisfied, then at one particular point of time. First criteria. The customer simultaneously receive and consume the benefit provided by entity's performance as entity performs. As and when entity performs. Means customer simultaneously receive and consume the benefit as and when entity perform. As and when entity perform. Are you getting what I am saying? Please just try to understand. Suppose I am providing you accounting services and I am saying 12,000 per annum is my fees. Correct? 1 month job done. 1 month service provided. So can you see, once I perform my service, you receive it and you consume it, means you receive the benefit also. It means it is over the period of time. Because 1 month services provided. So can you say for 1 month you receive the services and you consume it, means you also receive the benefit of the services. It can be understood in this way. Suppose after 1 month we cancel the contract. You will appoint another accountant. So that accountant will not perform the work whatever I have already performed. Because whatever I have already performed, for that you already received the benefit. So now you will appoint another accountant for the balance 11 months. It means, can I say, you receive and you consume the benefit as and when I perform Therefore, it is over the period of time. Understood? So customers simultaneously receive and consume the benefit provided by entities' performance as and when entities perform. This is a key point here. How to understand this criteria is satisfied? This third point. The criteria can be also applied if an entity determines that another entity would not need to substantially re-perform the work that the entity has completed till date, that other entity were to fulfill the remaining performance obligation to the customer. There is one question in the ICAI study matter, very good question. Suppose, everyone, this is what Mumbai port, and this is Colombo, Sri Lanka port. Port means what? This is what? Arabian Sea. Arabian, na? Arabian Sea, na? Bay of Bengal. Arabian Sea, na? This is what? Yeah, na? Achha, Bay of Bengal, I think so. This is Bay of Bengal. This one, see, na? I'm very bad in geography, huh? I don't know where is, after India, I don't know any location. Somebody asked me, where is Italy? I think in Asia only. I'm very bad in geography. India, I know na. Then more than enough. Whenever I want to go some other place, I'll book the ticket and we'll go there. Why to find out where it is? I'm very bad. You are good in geography. Somebody asked me, where is the Himalaya? So I will say, okay, it is Himalaya is in India. But some part is in China also. Correct na? But chhod na re. But this is what you are understanding whatever I am saying. Mumbai port and Colombo port. Now you have booked one transportation, seat transportation for transportation of goods from Mumbai port to Colombo port. Correct? Understood? But this service will be over or at one point of time. Means criteria is satisfied or not? A is satisfied or not? What they said? The customer receive and the consume the benefit as and when entity perform. Follow. It is over the period of time at one point of time. Means we should recognize the revenue. Suppose this is 45 days. We should recognize revenue over 45 days only after completion of the transportation. Means you are saying it is at one point of time. Is you are saying at one point of time? But not correct. It is over the period of time. Criteria is satisfied. Just try to understand. Suppose this much transportation is completed. Some breakdown over. In that some breakdown is there. So what they will? They will come back again. They will come back again. How they will come back? Some breakdown is there. How they will come back? Are you getting what I am saying? Means now, or suppose just try to say, understand. Suppose something happened. So they will go to some near port. They will not come back again. They will go to some near port. This port will come. Means they have given services up to this. Now another transporter need to be appointed. So whether that transporter need to perform from the beginning or from this. From this now. Means whatever services is provided by the previous transporter, that is received and consumed by what? Customer. As and when transportation is completed up to that date, it means it is over the period of time. Understood? It is over the period of time. Same question is given where? In ICAI study matter here. Correct? When I read the question for the first time now, I was also confused. Yeah, then I understood. Oh, acha. There is something missing. Understood? Correct. Then criteria B. Come to criteria B. Actually, this chapter I teach in 6 days. in my regular class. 6 means how much? 18 hours. 18 hours good, this 1 hour to 3 hours good. What do you think? 18 hours is good, ki 3 hours is okay. But can you say right now you have already done it? In my regular batch, that students have never done it. We can't be so much fast now. We need to teach each and every points. Correct? Criteria B. Entities performance create or enhance an asset that a customer control as and when the asset is created or enhanced. Entities performance create or enhance the asset that a customer control as and when asset is created or enhanced. Let me take one example. Suppose you want to you want some furniture. Either you will give contract to furniture, either will give some contract to carpenter, and carpenter will do the manufacturing in their premises, or sometime carpenter will come in your premises and they will perform what? The work. Now just try to understand the second situation. Carpenter is coming to your premises and they are doing what? Manufacturing of that furniture. So can you say the furniture is in your control? As and when furniture is created or enhanced, therefore it is over the period of time. But if the carpenter will manufacture the furniture at their premises, it is not in your control. It is not in your control. So criteria B is not satisfied for that. Are you able to understand? Means anytime any construction is done and at the point of construction, means the construction is WIP. The WIP is in your control, it is over the period of time. Means any building construction in your land. Building construction in your land is under your control. But building construction in some other site, after construction you will purchase it. That is not in your control. Understood? I hope you have understood criteria B. Criteria C. Entity's performance does not create an asset with an alternative use to the entity. Entity's performance does not create an asset with an alternative use to the entity. Let me take my example. I am teaching you. So entities my performance. If this recorded classes, I am not recording the classes. If I record the classes, some other meaning will come. Okay. This is completely face-to-face classes. Ignore recording. So my performance, whatever I am teaching, whether it create an alternative asset for me, means even though this contract is terminated, whether what I will do. Suppose I have given 3 days classes. Whether that 3 days classes has an alternative use for me? No. Means it is not creating any asset with an alternative use. Right now I am recording the classes now. So yes, alternative use there. I can sell that product now. Are bolna re. Correct? What I am saying, face-to-face class. Entity's performance does not create an asset with an alternative use. The first condition satisfied. Criteria C, first point is satisfied. And is one more point. And entity has an enforceable right to payment for performance completed till date. Suppose I have not received any advance from you. Correct now? Means this is 7 days class. Correct? 3 days completed. Now, whether I have an enforceable right to collect the amount for 3 days. If yes, then it is over the period of time. If no, then it is not over the period of time. Means criteria C is not satisfied. I hope you are understanding my feeling. So what they are saying, entity's performance does not create an alternative use to the entity, and entity has enforceable right to payment for the performance completed till date. Means in our agreement it is given that for 3 days you need to pay me. You need to compensate me for 3 days whatever performance I have completed. It means it is over the period of time. But if there is no such condition, if it is terminated and I have no right to collect from you any amount, you pay me other point, but there is no enforceable right to collect any amount. You are paying, that is other thing, but there is no enforceable right to demand the amount. It means it is not, means criteria C is not satisfied. Understood? Means there are two conditions. The asset so created does not have an alternative use to the entity, and seller party has a legally enforceable right to payment for performance completed till date. Now, legally enforceable right to payment. Legally enforceable means it should be mentioned in the contract. Legally enforceable means what? It should be mentioned in the contract. Are bolna rahe? Correct. And right to payment. Now one question, right to payment. So how much payment? How much payment? Well, payment here should compensate whatever you have performed. Compensation means the cost incurred plus reasonable profit margin. Means if I am getting reimbursement of only cost, no, the second condition of this point number C is not satisfied. Means payment should be compensation for the performance completed till date. So compensation is the cost whatever I have incurred plus some reasonable profit margin. Then the second condition will be satisfied. Suppose I am getting compensation only for the cost incurred, then it is criteria C is not satisfied. Understood what they are saying? Entity has a right to payment for performance completed to date if the entity would be entitled to an amount that at least compensate the entity for his performance completed till date in the event that customer terminate a contract for reason other than entity's failure to perform as promised. The compensation should include costs incurred plus a reasonable profit margin. Have you understood? Means suppose I am doing a construction of building on behalf of you. Suppose I am doing construction of building on behalf of you. And this building is not construction in your land. If this building is constructed in your land, then the criteria C is satisfied. Criteria B is satisfied. So I am doing construction of building on your behalf. So I only purchase the land. And now whatever building I am constructing, that is as per your specification, as per your design. So can I say, as per your specification, as per your design? So can the first condition, asset so created does not have an alternative use to the entity because this is customized. First condition is satisfied. Second condition, seller entity has a legally enforceable right to the payment for the performance till date. Means suppose performance till whatever we have completed till now, you have a legally enforceable, means I have a legal right to collect the amount up to this point of time. Then second condition also satisfied, then this will be also over the period of time. Yes, sir. So there can be one specific question on this. They may ask you to what? Find out whether over or at a particular point of time. So can I say now in this way, if A, B, C all not satisfied, and then at a point of time, can I say at a point of time, measuring revenue will be very easy, because whatever transaction price will be recognized as revenue at that particular point of time. So measurement of revenue at a particular point of time does not require any discussion. Measurement of revenue at a particular point of time when the control is transferred, no method is required. But measurement of revenue over the period of time requires some method for the revenue recognition, and therefore they have given two methods for measurement of revenue when performance obligation is satisfied over the period of time. Two methods: output method, input method. Output method is very easy. Recognize revenue based on the value of output transferred. But normally we don't use this. Normally we can use also, because that is method. Practically we don't use output method much. Practically we use input method much. The output means what? Recognize revenue on the basis of direct measurement of the value of goods and services transferred till date. Means whatever goods and services you have transferred till date, find out the value and recognize that much revenue. Simple. Correct. Then they have given also input method. Output method will also include, means for example, surveyor of performance completed till date. I hope in contract costing you have done, some surveyor will come, they will give a certificate for the performance done till that. So that whatever certificate we have received, that much value will be recognized as revenue. But this output method is thoda sa expensive method, and therefore we don't go for expensive method, because we need to appoint one surveyor, na? Correct? Are you able to understand? And in exam they will not give output method, because output method that they will give the value also. They give the value, no working is required. So from exam point of view also, what input method? Input method means recognize revenue on the basis of entity's effort or input to the satisfaction of performance obligation. Means they have given many examples, means many method, many ways are there. Resource consumed, labor hour expended, cost incurred, time elapsed. For exam, from examination point of view, they will give cost to cost method, as you have done in AS7. Cost to cost method means what we'll do, we'll find out actual cost incurred till date divided by total estimated cost into 100. This will be percentage of work done till now. Suppose total estimated cost is 10,000, correct? And in the first year you have incurred 2,000. Means 20% work has been performed. And suppose your transaction price is 15,000. So how much revenue you recognize? 20% of 15,000 means 3,000 you recognize in first year. Cost is how much? 2,000. Means your profit will be how much? 1,000. Understood? This only you have done in AS7. If you remember AS7, construction contract. Bolo yes. Forgotten. But have you understood this? This is known as cost to cost input method. We call it cost to cost input method. Chalega? Normally in exam they will give this method only. But suppose they have given labor hour method. The labor hour method, what we'll do? We have to find out what is the total labor hour required and how much labor hour completed. So same thing, formula remains same. Suppose total labor hour is 10,000 required, and first year out of 10,000, 2,000 labor hour has been used. So 20% work has been performed. Understood? Correct? Yes, sir. Now, this point is very important from examination point of view. From examination point, this point is very important. Point number 1. When applying input method, following adjustment may be required. When cost based input method is used, cost based is cost to cost method. Means whatever this point A and B is related only to what? Cost to cost input method, not labor hour. Cost to cost input method. Understand what I am saying? So first point is very easy. What they said, when any cost incurred does not contribute to an entity's progress in satisfying performance obligation, such costs should be ignored in measuring percentage of work progress. Means any abnormal loss. Suppose you purchase raw material and fire occurred and entire raw material damage. Now that raw material will not be used for construction, but cost already incurred. So will you include that cost in measuring the performance progress? That will be ignored, that will be excluded, and that will be charged to PL account. Correct? Such costs must be ignored for measuring progress of work. When I am saying progress of work means what? That is only 2000 divided by 10,000 into 100. When I am saying this 20% work is performed, means we are measuring progress of work. We are measuring progress of work. So while measuring this, ignore any abnormal loss. Means that 2000 should not include abnormal loss. Understood? Yes, sir. Then point number B. This is expected also, already asked in exam also. When cost incurred is not proportionate to entity's progress in satisfying its performance obligation. When the cost incurred is not proportionate to the entity's progress in satisfying performance obligation. Please just try to understand. Suppose we purchase a land, means you have given me a contract that you only purchase land and you only what? Construct the building. Normally rare situation, because then you will purchase, then I will construct. But let us assume you said you only purchase land and then start construction. So can I say land plus construction? If this is different performance obligation, then to over. Then to okay na, then we are not into this point. If it is single performance obligation, then doubt will come. If suppose purchase of land and construction of building are different performance obligation, then transaction price will be allocated to land and transaction price will be allocated to building construction, and revenue will be recognized separately. So it is not covered in this topic. But suppose they are single performance obligation. Understood? Means I am not applying right now the rules of distinct performance obligation. Let us assume it is single performance obligation. Assume kar lo. Are bolna re? Yes. Let us assume, because for finding out whether it is performance, whether it is single performance obligation or distinct performance obligation, I need to give other facts also na. I don't want to extend my discussion right now. Are we able to understand? Let us assume this is single performance obligation. Now transaction price will not be allocated. Means transaction price will be entirely for this one performance obligation. Now suppose transaction price is 10,000 crore. बहुत ज़्यादा हो गया, correct ना? 100 lakh, correct? Now you purchase land at rupees 40 lakh and the cost of construction is suppose 40 lakh. The total cost become 80 lakh. Understood? But construction will start after 2 years. Quite possible. Quite possible. Quite possible. Correct. Now you purchase for land right now only. Construction not started. You only say, should we recognize revenue on this proportionate basis? Means if you do like this, 40 divided by 80 means 50% work performed, construction not started. Can you recognize 50% revenue? Are yes or no? No. In this case, what they want to say, just try to understand. When the cost incurred is not proportionate to entity's progress in satisfying performance obligation, means there no performance done till now, only land is purchased now. Construction is not started only. Are we able to understand? No. In this case, तो गड़बड़ हो गया. So what is in this case? If purchase of land is what? Not a distinct performance obligation, then we should recognize revenue only to the extent of cost incurred for this 40 lakh. Only to the extent of cost incurred. Means in first year, what is my revenue? 40. What is my cost? 40. Understood? So in this case, we recognize revenue only to the extent of cost incurred. And what is the balance cost? 40. And what is the balance revenue? 100 minus 40, 60. So this will be taken into consideration when the progress will start, when the construction will start. Are you able to understand? Yes, sir. So what they are saying, in such case, revenue should be recognized only to the extent of cost incurred. Such recognition of revenue to the extent of cost incurred is appropriate if at contract inception all the following conditions exist. First, the goods do not represent a distinct performance obligation. Purchase of land is not a, if that is a distinct performance obligation, then to apply distinct criteria. Correct now? Customer is expected to obtain control of the goods significantly before receiving the services. Means customer receive the control of land significantly before the start of services construction. Cost of such goods is significant in relation to total expected cost. It is significant also. The entity purchased the goods from a third party and does not significantly involve in the design and manufacturing of such goods. Means that land is purchased from third party and the supplier is not engaged in the modification of such land, means that is given as it is to the customer, and on that will do construction now. Are you able to understand? Correct? Means the one point, this point number 2 is also very important. The control of such land should be transferred immediately to the customer. If it is not transferred to the customer immediately, means the control is with what? Supply only, then this condition is not satisfied. Means if the control is transferred to the customer, then only can I say it will meet criteria C na? Sorry, criteria B. What was the criteria B? What was the criteria B? The construction of building in the land of customer only. So if I am saying customer is expected to obtain control, once they obtain control, so criteria B will be satisfied, then only it will become over the period of time. Have you understood? However, I will take one very good question which have been given in ICAI study material, but not now. This much you understood? Understood? Correct. Then, one more point what they are saying is, suppose entity is not able to measure the progress of work. Means to find out revenue, we should find out the progress of work. Means how much work has been performed. But suppose entity is not able to measure the progress of work. When they will not be able to measure the progress of work? When they are not able to estimate the total cost. It is quite possible initially we are not able to measure the estimated cost. And if you are not able to estimate the cost, it means you are not able to measure the progress of work. So what India says that if you are not able to measure the progress of work for the time being, then recognize revenue to the extent of cost incurred. Recognize revenue to the extent of cost incurred. Understood? Last point. In some circumstances, for example, in the early stage of the contract, an entity may not be able to reasonably measure the outcome of performance obligation, but the entity expects to recover the cost incurred in satisfying the performance obligation. In those circumstances, entities shall recognize revenue only to the extent of cost incurred until such time it can reasonably measure the outcome of performance obligation. This is also important. Till now, not asked, but can be asked. Understood? Means whenever they are not able to measure the outcome of performance, outcome of the contract, means they don't know the estimated cost. So for the time being, they are not able to estimate the outcome. They will recognize revenue only to the extent of cost incurred. Once outcome can be estimated, then apply what? The revenue recognition criteria. Then we can recognize revenue based on the percentage of work performed. Understood it, fine? With this, we completed step number 5. Then now there are some guidance on special aspect. Means Ind AS 115 is not completed. We have completed only step 1 to step number 5. Up to this, any doubt? Hello. Up to this, any doubt? We'll take 5-minute break. Hello. Can we start once again, everyone? So before break, we completed all the steps. Step 1 to step number 5. I think understood? Okay. Now, let us come to some guidance on special aspect. First is customer options. Customer options to purchase additional goods and services. Correct. Customer option for purchase of additional goods and services means some option has been given in initial sale. Means right now, suppose you purchase FR from me, and I have given one option to you that you can purchase additional goods, means additional subject from me at some discounted price. So one option has been given, one right has been given. So what Ind AS 115 say that this option is also sold to you. So whatever consideration we have received initially, that is allocated to what? Initial sale and option provided. So whatever option we have provided, that is also what a separate performance obligation, and for option some consideration has been received. But whatever we have received for option, that will not be recognized right now, because can you see that can be recognized only when additional goods and services are sold to you. Means when you purchase additional goods and services. So the point is that how to allocate this transaction price and how to recognize revenue for that option received. Sorry, how to recognize revenue for the consideration received for the option provided. Have you understood this point? So what they want to say? The option to purchase additional goods and services can be in many forms, including sales incentive, for example, coupon with limited distribution, gift card issued by retailer as a promotion, or a customer award credit. I think nowadays if you go to some retail store, so they will ask you a number and they will give you some award, they will give you some points, and they will say that the points have been added to your profile, and you can redeem that point. You can redeem the point in additional purchase. Have you redeemed any time? Any point of time? Have you redeemed? So the question is that whatever points are given right now, what will be the accounting treatment for that? That we are understanding. Correct. So what they say, this option is a separate performance obligation if it provide a material right to the customer. If that option provide a material right to the customer. Understood this point? So what is this material right? What they want to say? If the right is material, if it result in a discount that a customer would not receive without entering into the contract. Means whatever discount is given to you, that cannot be availed by other customer, and that is received by you because you purchase initial goods from me. Suppose I have given an option that you can receive a discount of what? 40%. Are you getting? 40%. But to other customer discount is only 10%. Means right now can you see you are get an additional discount of 30%. So that is a material right for you, and therefore this option will become a separate performance obligation. Suppose I have given a discount of only 10%, which is available to all customer. then this is not a material right, then that option is not a separate performance obligation. Understood this point? Correct. Now, what they want to say? The entities have allocated transaction price to each performance obligation in the ratio of their standalone selling prices. It means now we need to estimate the standalone selling price of that option also. Don't worry, the standalone selling price of the option will be given in the question. Understood? Correct. Accounting treatment. Let me explain you first. Suppose you sold one goods at rupees 1 lakh. Understood? And for every rupees 100, you get a award point 1 point. And the value of 1 point, let us assume, is 0.50. Let us assume. Value of 1 point is what? 0.50. This value will be given in the question because we can't estimate this now. Correct? It means now what is the total point awarded to you? 1 lakh divided by 100 into 1. What is the total point? 1000 points. 1000 point means 0.50. How much? It becomes 500. It means, can I say, there are two performance obligations. One is initial goods sold and one is option. What is the standalone selling prices? Standalone selling price of this is 1 lakh, and for this 500, total become 1 lakh 500. Are you able to understand what I am doing? Total become what? 1 lakh 500. And what is the transaction price? Is 1 lakh only. This can be allocated in this ratio. So this will be 1 lakh divided by 1 lakh 500 into what? 1 lakh. It is 99,500. Yeah, 502. So this become 498. 498. Are you able to understand? Correct. So what they want to say, that you receive what? 1 lakh, but you can recognize only to the extent of what? You can recognize only to the extent of the transaction price allocated for initial sale, that is 99,502. And whatever you have received for option given, that will be considered as deferred revenue, means that will not be recognized right now. That will be recognized when option is when the points will be redeemed or expired, whichever is earlier. Or expired, whichever is earlier. Have you understood? Correct? Have you understood this one entry? Suppose in the second year it is redeemed, then we'll pass one entry, then entry deferred revenue to revenue. It is expired, then also deferred revenue to revenue. Understood? Whichever is earlier. Simple. So what journal entry I have given? For consideration received or receivable on initial sale, bank account debit or receivable account debit to sales, to liability under customer royalty program. This account I have used because ICAI has used that account. Liability under customer royalty program. However, you can also write on deferred revenue or pre-received income. Pre-received income, this is nothing but pre-received income now. Correct. For recognition of revenue from customer royalty award credit, it will be recognized when the award credit is redeemed or when it is expired, whichever is earlier. What journal entry will do? Liability account debit to revenue. I'll take one question, but not now. A very good question I will take, but not now. Then sale with a right of return. Suppose there is a sale with a right to return. Then what India says that whenever you have sold with a right to return and there is an unconditional right to return, then can you recognize revenue if it is expected that it will be returned? Well, no. Suppose you sold 1000 units at rupees 100 per unit. And out of this, you are expecting that 20 might be returned. So 980 will not be returned. This is expectation. This is the expectation. So how much you have received or receivable? Or receivable is how much? 1000 into 100. How much? 1 lakh. But you recognize revenue only for the goods which are not expected to be returned. So 980 into 100 means 98,000, and you will create one refund liability. One refund liability for the goods which are expected to be returned. Understood? Now just try to understand, everyone. As per India's 2, once inventory is sold, we will recognize carrying amount of inventory sold as an expense. Suppose you have done this journal entry. Cost of sales, account debit to inventory. Suppose you have done this journal entry. So you have sold how many units? And suppose the cost price 80. So already you have charged what? 80,000 to your PL. Already this journal entry has been done. But can you say you have created refund liability for 20 units? Means there is a right to recover that goods. There is right to recover that goods that is not yet sold. So you should not de-recognize the inventory to that extent. So what they want to say, you need to also recognize one asset, inventory, account debit, and adjust the cost of sales with the carrying amount of the inventory which are expected to recover from customer. Are you getting what I am saying? Means it will be what? 20 into 80 means how much? 1600. Are you able to understand? Or we can say we can do this journal entry with what? 980 only. But they are saying pass a separate journal entry. Why? Because this amount will be what? This amount will be what? Adjustment done what? Carrying amount of the inventory minus any expected cost to recover. There may be some cost to recover also. So carrying amount of inventory minus any expected cost to recover. Then we'll do multiply and we'll pass this journal entry. Understood? Have you understood this point? That is only given. Check करेंगे. To account for the transfer product with the right to return, entities are recognized the following: revenue for the transfer product to which entity expect not to be returned. Understood? In my example 980. A refund liability for the product expect to return. In my example 20. An asset and a corresponding adjustment to cost of sale for his right to recover the product from customer on settling the refund. In my example for 20 units. Correct. An asset recognized for right to recover product for a customer on settling a refund liability shall initially measured by reference to the carrying amount of the product. In my example 80. Less any expected cost to recover. Understood? Whatever I have said, that is only written. Correct? Understood? This is also expected. From my point of view, one question is expected from this topic. Very good question. Just try to understand. If you don't revise, you can't write. You can't attempt this type of question. First point also very good. Second point also very good. For this, revision is required. You have done all step, 5 step. But they have asked this question. Mata kharab na. Are बोलना रही. Means whatever we have done step 1, 2, 3, 4, 5, that cannot be applied in this. Then the non-refundable fees you can read by your own. That is not important. Consignment arrangement. Can you say whenever there is a consignment do you know from bachpan? Consigner, consignee. So they have said that in case of consignment arrangement, revenue will be recognized only when the goods are sold by the consignee. Understood point? I think no discussion required. Then principal versus agent consideration. What they want to say? whenever there is a principal and agent relationship, means consignor and consignee. So principal will recognize revenue with gross amount and agent will recognize revenue with net amount, means with the amount of commission. Understood point? But here the keyword is what? Principal will recognize with gross amount. Means suppose principal, agent, customer. Correct? They have sold at 10,000, received 10,000, but transfer only 9,800. Quite possible. 200 is commission. So principal will recognize 9,800, 10,000, 10,000, and agent will recognize 200 commission as revenue. Understood? Agent record as revenue the net amount that it retained for the agency services. Now, how to identify that entity is a principal agent? Means it might happen this may be principal also. If this is principal, they will also recognize what? Gross amount. So how to identify that entity is a principal? If all these conditions are satisfied. Already a question has been asked from this topic. But can one again ask what? They said entity is responsible for fulfilling the contract. Normally the entity who is responsible for fulfilling the contract is a principal. Correct? Second, entity have inventory risk. Who will have the inventory risk? Principal. Entity have a discretion in establishing the prices. Who will determine sale price? Principal. Entity is expected to create risk. If any bad debt, who will bear that loss? Principal. If all these conditions satisfied, entity is a principal, otherwise it is a agent. So they have already asked one question that identify first principal agent, then find out what is the amount of revenue. Correct. The next point is sale based or usage based royalty on license of intellectual property. For example, I have sold one software. Correct? And this software will be used for 5 years. Correct? Now the agreement is what? The amount of consideration will be 10% of sales. 10% of sales. Means whatever will be the sale, 10% will be royalty income. First it is variable consideration. Entirely variable. Correct? Now how to recognize? It might happen, just try to understand everyone. The software is installed at this point of time only. Means performance obligation satisfied. But sale will be done what? In this 5 year. Now performance obligation satisfied at this point of time. Can we recognize revenue at this point of time? So what they want to know? In this case, thoda sa different. Well, if royalty received in exchange for license of intellectual property means intangible asset. Software means intellectual property, means we are just transferring our patent, etc., etc., etc. Means my patent used by others. My know-how will be used by you. Correct now? Means if I give my this intellectual recorded classes to you, so I will say give me royalty income now. Correct? To be recognized at a letter of when? Means A and B whichever is letter. A and B whichever is letter. Subsequent sales or usage occur or performance obligation satisfied whichever is letter. So in this case you can see performance obligation satisfied here only, but sales will occur later. It means revenue will be recognized only when sale is occurred or usage will occur. Or suppose in this case sales occur at this point of time and performance obligation satisfied yahan par, means at this point of time we recognize revenue. But normally in this case this point will be applicable. Means every year we need to find out sales, and the 10% of sales will be what? Our revenue. Understood? Yes, sir. This also you have understood. Next point. Bill and hold arrangement. Sometime what happen? The bill is made, but the goods is not yet transferred. Now the question is that can we recognize revenue? What they want to say, revenue can be recognized only when control is transferred. If control is transferred, even though goods are not transferred, you can recognize revenue. Are you able to understand? But sir, how will understand the control is transferred? In bill and hold arrangement, invoice made, goods is with you only, whether control transferred. If yes, recognize revenue. If no, do not recognize revenue. But sir, how will understand control is transferred? For that they have given some condition. Means under bill and hold arrangement, if these 4 conditions satisfied, control is transferred, recognize revenue. Even though goods is with you, goods is lying in the premises of supplier, vendor, tailing entity. Correct. First, is the reason for bill and hold arrangement substantive? Means this should be practical reason of holding the goods. Correct? Yes, sir. Has the product been identified separately as belonging to customer? Means we have already identified that these goods belong to that customer. Means some marking has been done. I think sometime you went to some shop, you will say this is sold, mentioned. Means we have already identified is sold. Now you cannot purchase that item. You cannot purchase the item. Normally what happens now? Sometime when we will go to market, it is sold, and that will be only yahi acha tha. Cool? Otherwise, I would have purchased it. And then we will fight also. Please na, please na, please na. And they will say yes. It means what? Control is not yet transferred. Bolna yes or no? Means there is one more point. Even though identified, does the entity, last point read, does the entity have the ability to use the product or direct it to another customer? Means if they yes, you can purchase it. Means control is not yet transferred. Are you able to understand what I am saying? The third point, is the product ready for physical transfer to the customer? Means product should be ready also. Means it should be manufactured also. If it is not yet manufactured, can you transfer the control? If it is not yet manufactured, it is not ready, can you transfer the control? No. So if all these conditions satisfied, customer has obtained control and entity recognized revenue on a bill and hold basis. From my point of view, expected. Till now no question have been asked from this. Warranty super expected. This is super expected. Warranty. Now sometimes goods are sold with warranty. Goods are sold with warranty. Now one doubt will arise, sir, whether warranty is a separate performance obligation. If yes, then recognize revenue separately. If no, then what need to be done? So what they say, there are 2 types of warranty. One is assurance type of warranty and one is service type of warranty. Can you say assurance type of warranty is always inbuilt as per certain law? Means you will say that whenever you purchase, now they will say 1 year assurance warranty. That is assurance warranty. But normally that assurance warranty is not available separately. Means you cannot purchase that separately. But they will give you some additional warranty also. Extended warranty. You remember, it will happen when you will go for purchase of mobile nowadays. They will say, he purchased some extended warranty. So that is known as service type of warranty. Understood? So there are 2 types of warranty, assurance type, service type. Correct? What they want to say? For accounting treatment warranty, if the customer has an option to purchase warranty separately, if they have an option to purchase that warranty separately, then so it is a separate performance obligation. Allocate transaction price to that separate performance obligation. Recognize revenue separately as per step 1 to step 5. Correct? Yes, the promise warranty will be accounted as a separate performance obligation and portion of transaction price will be allocated to that performance obligation based on standalone selling prices. Extended warranty will be always available separately, means you can purchase separately also. Understood? But no, then one doubt will come, means that cannot be purchased separately. So what they want to say? If the promise warranty provide a customer with a service in addition to the assurance, means the promise warranty will include service in addition to assurance. If no, means there is only assurance type of warranty, then apply Ind AS 37. Means whenever there is only assurance type of warranty, then apply Ind AS 37 for recognition of expense or liability. Means it is not a separate performance obligation. But if yes, the promise warranty provide the customer with a service, means there is a performance obligation to provide it. Will perform some obligation with assurance. There is a service warranty with assurance. Then the promise warranty will be accounted as a separate performance obligation and a portion of transaction price will be allocated to that performance obligation. One question I have taken will do that. Understood? Simple? Yes, sir. Next point. Licensing. Licensing. Licensing, you understood that licensing means customer right to the intellectual property. Already one point we have done, when sale based or usage based license, that is another topic. But licensing, when it is not a sale based or usage based, then how to recognize revenue? How to recognize revenue? So license establishes a customer right to use intellectual property. For example, software and technology, motion picture, music, and other form of media entertainment. This all PVR, cinema hall, this cinema hall, they will purchase license to run movie. So it means the producer has sold a right. So in the books of producer of that movie, correct? What will be the accounting treatment? Correct? Yes, sir. Franchisee, patent, trademark, and copyright. Means those who are transferring that patent, not using that patent, those who are using, for them to it become intangible asset. Apply Ind AS 38. And if Ind AS 38 is not applicable, then do whatever you want to do. Just Ind AS 38 apply. Correct? And this means for this motion picture Ind AS 38 is not applicable. Therefore, I am saying it is specifically excluded from the purview of Ind AS 38. I hope you are understanding whatever I am saying. Now, recognition of revenue for granting a license. So what they say, there are two cases. First, they say, if the promise to grant a license is not a distinct from other promise goods or service in the contract. Have you understood? Means, just try to understand what they are saying. If the promise to grant a license is not a distinct from other promise goods or services in the contract. For example, you purchase a laptop. In the laptop, there is one in Windows. Understood? So that is also coming. Now, whether it is a separate performance obligation? No, it is not a separate performance obligation. Therefore, that will not be accounted as a separate performance obligation. That will be a single performance obligation only. So, when the promise to grant a license is not distinct from other promise in the contract, then it is a single performance obligation. If it is a single performance obligation, then apply step 1 to step number 5 in that single performance obligation. If no discussion required. But if the promise to grant a license is distinct from other promise in the contract, then discussion is required. See how to recognize revenue for that license. So what they are saying, in this case, there can be two situations. Is the intellectual property to which the customer has a right changes throughout the license period? Changes throughout the license period means, can I say, entity will perform some activities, and due to performance of that activities, the license will change throughout the period. If license will change throughout the period, it means, can I say, performance obligation satisfied over the period of time, and therefore recognize revenue over the period of time. I hope you are understanding. But due to any activity of selling entity, the license does not changes throughout the period. Means, can I say, once it is installed, customer can derive the benefit. Means control is transferred at a particular point of time. They will recognize revenue at that point of time when the control is transferred. I hope you have understood. Thoda thoda. Bolna re. Are you able to understand what I have said? Have you understood? Huh? Means just we have purchased one license to record the videos. We have also purchased a license. Correct. And we have paid the cost of license that time. Now to it become very reasonable amount, because now it become, now to everyone is recording now. That time when I purchased now, I think 4 year, 5 year before COVID. Means we started recording before COVID only. Correct now. That time the cost was 2,50,000 for that software. Now it is available in 20,000. Because that time demand was not there. We were not aware about that. We were also not aware how to record. So we were willing to pay whatever amount is there. Arey bolna re. Now to we become an expert. Now I can teach how to record. Are you able to understand what I am saying? So that time I have paid 2,50,000. Now the same software is available at rupees 20,000. So that time I purchased software. Understood now? Now they give also some update also. But can I say that update is not required? Means I can use the software without any activities of what? The entity. Means the control was transferred at a particular point of time. Means that vendor will recognize entire revenue at that point of time. But suppose that software require update every month, and without that update I can't use the software. Means perform, means any activities of entity will change the license throughout the period. Updation is required, whatever customization is required every day, and that updation is necessary for running that software. It means what? It is over the period of time. Understood now? Correct. Yes. Yes, then what they said? In this case, the license provide the customer with right to access, the keyword, right to access the entity's intellectual property. Right to access. And whenever there is a right to access, entity shall account the promise to grant a license as a performance obligation satisfied over time, because customer will simultaneously receive and consume the benefit as and when entities perform. Means criteria A will be satisfied. But no, it will not change. In this case, license provide the customer with the right to use, not right to access, right to use the entity's intellectual property at a point in time. Entities shall account for the promise to grant a license as a performance obligation is satisfied at a point in time. Understood? Have you understood? Done. This is also done. Right. Now this repurchase agreement, not important. Do you want me to take this? So the repurchase agreement I will do. This is the last point. After that, whatever is given not important from exam point of view. Correct. Last point for Ind AS 1.5, repurchase agreement. Repurchase agreement means what? In the single contract, there will be one more agreement to repurchase the goods and services transferred. Means there will be either call option or put option. Call option means what? Right to purchase. Put option means customer has the right to sell. Means we have an obligation to buy. Correct? Or there may be some forward contract. What they are saying, a repurchase agreement is a contract in which entity sells an asset and also promise or has an option to repurchase the asset. So the doubt will come whether control is transferred. If control is not transferred, we should not recognize revenue. So in this case, what they are saying, there are two situations. Either there will be a forward or call option. Can you see, whenever I am saying call option, it means there is a right to repurchase. And whenever it is favorable, I will exercise the right. Are you able to understand? One thing is clear, the control is not transferred. Therefore, do not recognize revenue initially. Do not recognize revenue initially. So what they want to say? Accounting treatment. If the entity can or must repurchase the asset for an amount less than original selling price. Suppose original selling price is 100 and repurchase price is 80. Understood? So how much you have received initially and how much you will pay at the time of repurchase? So how much you receive extra? So this 20 will be considered as what? The consideration for giving the asset to use that asset for that period. Suppose we can repurchase after 2 years. So during this 2 years, who is using the asset? Buyer. And this will be considered as what? A lease agreement. Means what they want to say? Contract will be accounted as per Ind AS 116. In this case, difference between original selling price and repurchase price will be recognized as a lease income over the period of time. Means will become lesser and lesser will recognize the difference as a lease income over the period of time. Correct? If the customer does not, this is wrong, if the seller, is some printing mistake. If the seller does not want to exercise such right, because call option will be with the seller only. If the seller does not want to exercise the right, means they do not want to repurchase, because it is right now. So if the seller do not want to exercise the right, then revenue will be recognized on repurchase date at repurchase price. So revenue will be recognized when? On repurchase date at repurchase price. So revenue will be, then control of the goods will be transferred and revenue will be recognized at repurchase price. Understood? Next point. If the entity can or must repurchase the asset for an amount equal to or more than original selling price. Suppose original selling price 100 and repurchase price is 120. Means you need to pay extra 20. So what they said, it means you are in need of money. And whatever you are paying extra, that is interest element. Means you receive 100 and you are paying an interest of what? 20. So this will be accounted as a financing arrangement. Understood? And the difference will be recognized as an interest expense over the period of contract. Understood? And if seller does not exercise the option on repurchase date, then revenue will be recognized at repurchase price. Understood? Have you understood? Correct? Have you understood? Next point. If suppose there is a put option means obligation to buy. Obligation to buy means the obligation will exercise, the obligation will arise when customer exercise their right. Customer will exercise only when it is favorable. Are you getting? One second. Put option. So what they said, accounting treatment. If the repurchase price is less than original selling price, means repurchase price is suppose 80 and original selling price 100. Correct? So what they want to say? Does the customer has significant economic incentive to exercise the right? It's simple word. What entity? Because we don't know whether they will exercise or not. But If they will exercise, means it is favorable, means I can say, thus whether it is favorable from customer point of view. If yes, then account the transaction as per lease contract Ind AS 116, and difference will be considered as lease income over the period of contract. But no, if they will not exercise, then what they want to say, it will be accounted as a sale with a right to return. Then recognize revenue with a right to return, as we have done with sale with a right to return. Understood? Similarly, if the repurchase price is more than equal to original selling price, if it is favorable, directly come here. If it is favorable, then account this as a financing arrangement. If it is not favorable, then recognize revenue with a right to return. Understood? However, from exam point of view, I will say call option is more, because they have given one question for call option. They will ask call option if they want to ask call option. Understood? But I don't think so. Contract cost, I think you can do it by your own. Contract cost means what they are saying, there are two type of contract cost. One is contract cost to obtain the contract, one is contract cost to fulfill the contract. So what they want to say, let us do only. If the contract cost is to obtain the contract, first you need to find out whether these are incremental cost. Incremental cost means it will incurred only when the contract is obtained. Means it will not be incurred when the contract is not obtained. Okay, there are some costs which will be incurred even though contract is not obtained. They are not incremental costs. So if they are not an incremental cost, recognize as an expense immediately. But if they are incremental cost, then recognize it as a contract asset, and that contract asset will be amortized as and when revenue is recognized. As and when revenue is recognized now, as per matching concept, that will be amortized as and when, means if it is a point of time, so that will be recognized as an expense when revenue is recognized at that particular point of time. If it is over the period of time, it will be recognized as an expense over the period of time as per matching concept. Correct. So what there is there incremental cost? If yes, then recognize it as a contract asset. If no, then charge to PL as an expense immediately. Means I have just given some example. For example, commission paid only upon successful signing of a contract. So commission paid only when we will obtain the contract. Incremental, not incremental. Incremental, therefore capitalize it as a contract asset. Travel expense for salesperson reaching a new client, traveling expenses. Okay, that will be incurred even though contract is not obtained. Therefore, this is not an incremental cost. Therefore, it will be an expense. I hope you have understood. Right. Then what they are saying, there are some costs to fulfill the contract. Is cost of fulfilling the contract. Okay, this is very important. So they are saying there are two types of such costs. What they said, are these costs covered under some other Ind AS? For example, right now just try to understand. To fulfill the contract, everyone listen. To fulfill the contract, I purchase camera, but this is covered under Ind AS 16. Apply Ind AS 16. Correct now? Are you able to understand? But I am incurring rent expense also. This is not covered in any other Ind AS. Then apply Ind AS 115. Are we able to understand? Have you understood? Correct. Suppose you are incurring some cost in inventory. So Ind AS 2 is there. Apply Ind AS 2. Correct. So any Ind AS is applicable, yes. Account such cost as per other Ind AS. If no, what they are saying, whether such costs relate directly to the contract or to a specific anticipated contract. If no, then charge it to PL as an expense. If yes, then in simple word I will say, if yes, are these costs expected to be recovered from customer? If yes, recognize it as a contract asset. If no, then charge it to PL as an expense. This is what they want to say. Any cost which are incurred to fulfill the contract. If covered under other Ind AS, apply other Ind AS. If no, if not covered under other Ind AS, and they are expected to be recovered from customer. Expected to be recovered from customer means they are chargeable to the customer. If they are chargeable to customer, apply Ind AS 115 and recognize it as a contract asset, and that contract asset will be amortized as and when revenue is recognized. But if it is not expected to be recovered from customer, then charge to PL as an expense immediately. Understood? This is the entire discussion. I hope you have understood. This is okay. This is simple. There is one more topic, service concession arrangement, but that is not important from examination point of view. So I am not discussing this. Correct. With this, Ind AS 115 is over. Can we come to some questions? But in this question now, my role is very less. Your role is more. Means you can understand each, and because I have done entire discussion now. So you read, you need to understand. Because mostly all the questions are case study based questions. Correct? Are you getting what I am saying? So can I say in this way, read the questions, and if you doubt, I will help you. Because in this question, believe me, my role is very less. I have done entire discussion. You need to read question, read solution. If you understood, okay. Do not understand, you can call me. Correct. So from my point of view, can I skip the question in this, if you permit? Why? Because believe me, my role is very less. You need to revise once again entire concept, then apply. Let me take one example. Let me take one question. You will be able to understand. Let me take one warranty wala question. Warranty wala question. Because I said a very important. This is totally expected. An entity manufacture and sell computer that include an assurance type of warranty for first 90 days. The entity offer optional extended coverage plan under which it will repair or replace any defective part for 3 years from the expiration of 90 days. Since the optional extended coverage is sold separately, means it is a distinct performance obligation. Are bolna rahe? Entity determine that 3 years of extended coverage represents separate performance obligation. We know, Baba. We know this mind now. The total transaction price for the sale of computer and extended warranty is 36,000. This is the transaction price. The entity determine that standalone selling price is this and this. Means can I say 36,000 will be allocated 32 and 4 only? However, if suppose this is 30 and 4, then we should allocate 36,000 in this ratio. But they have given 30 to 4 only. Thank you very much. Means how much is the transaction price for sale of computer? And how much is the transaction price allocated to extended warranty? Case 32 will be recognized once the control is transferred for computer at one point of time only. But extended warranty will be given over 3 years. Should you recognize over 3 years? The inventory value the computer at 14,400. Further, the entity estimate that based on experience, it will incur 2,000 in cost to repair defect that arise within 90 days. Can I say Ind AS 37 will be applied on assurance type warranty? So we need to recognize the provision of 2,000 as per Ind AS 37. What journal entry will do? First journal entry, receivable or cash 36,000. Correct? But how much revenue? 32,000 revenue. How much deferred revenue? Means you can say contract liability. Correct? And 2,000 will create provision or not? What is journal entry to create provision? Warranty expense to provision for warranty. To warranty expense to provision. You can write on to provision for warranty also. This is 2,000. They have done given one compound journal entry. We can pass separate journal entry. And what is the carrying amount of inventory sold? What is the cost price of computer sold? So that will be our expense. We will pass one more journal entry. Cost of sales to inventory. Cost of sales to inventory 14,400. Can I say this question now you can do it by your own? My role is very less. Believe me, my role is very less. So can I assume that all questions you can do? If you want, I will take one more question. Do you want me to take? Let me take this question. Only to inform you that my role is very less. Correct. An entity has a fixed fee contract of rupees 1 million to develop a product that meets specified performance criteria. Expected cost to complete the contract is 9,50,000. The entity will transfer control of the product over 5 years. Entity uses cost to cost input method to measure the progress on the contract. An incentive award is available if the product meets the following weight criteria. Means this is variable consideration. If the weight is this 0% fee, correct now. So 0% of 1 million means 10 lakh, 0 only. If the weight is this, if this criteria is made, so 10% of 10 lakh means 1 lakh. And if it is less than 700 or 700, 25% of 10 lakh means 2,50,000. They have given these are the incentive fee. So that depends upon this criteria, whether it is achieved or not. Variable consideration. The entity has an extensive experience creating product that meet specific performance criteria. Based on its experience, entity has identified 5 engineering alternatives that will achieve the 10% incentive and 2 that will achieve 25% incentive. In this case, entity determined that 95% confident that it will achieve 10% and 20% confident that they will achieve 25%. Two possible outcome, 90%, 20%. So we'll take average or most likely. Most likely is 95%. So 95% is 10% means our variable consideration will be 1 lakh initially. 1 lakh initially. अरे बोलना रे. Means total consideration initially will be 10 lakh plus 1 lakh, 11 lakh. 1 second. Based on the analysis, the entity believed that 10% to be the most. This you can read by your own. This is solution only, I will say. Then, entity reassesses its production status quarterly to determine whether it is on track to meet the criteria for the incentive award. Means reassessment for variable consideration, reassessment at the end of 4 year, at the end of year 4. Means 3 years is completed, we are into 4th year. It become apparent that this contract will fully achieve the weight based criteria. Therefore, entity revises estimate variable consideration to include entire 25%. Means in the 4th year, consideration will be reassessed. Now 11 lakh will become 12 lakh 50,000 because now bonus will be 2 lakh 50,000 because now they are saying we will be able to achieve the 25% incentive criteria. 25%. Understood? Yes, sir. So how to recognize revenue? Now they have given estimated cost. Estimated cost of year 1, year 2, year 3, 4, 5. Correct. Can we do it? Batao. Year 1, I am doing your behalf. 2, 3, 4, 5. Batao, what is the fixed consideration? 10 lakh. 10 lakh, na? Fixed consideration. 10 lakh, 10 lakh, 10 lakh, 10 lakh, 10 lakh. What is the variable consideration? First year. Second, third, fourth, fifth. Understood? Total become 11, 11, 11, 12.5, 12.5. Now, what is my actual cost? First year, second year, third year, fifth year. Then, can you give me cumulative cost? First year, second year, cumulative 2 lakh, third year, fourth year, oh, which one? Who said 2,50,000? Use calculator, don't use your mind, Baba. You said 2,50,000, I have not said. 2 lakh? Then 9 lakh, na? Then, and what was the initial estimation? Initial estimate cost, na lakh. Cost, this is cost. They have said 9,50,000 only. Means they estimated 9,50,000. Actual also 9,50,000. Jadoo. Practically not possible, huh? Practically not possible. But jadoo in this case? Are bolna rahe? Means in exam they may give. So I will say we need to re-estimate every year. So we can do this because information will be given. But in this case, jadoo hai. You know jadoo? Jadoo. This is jadoo, na? Now we'll do this by this to find out percentage of work performed. We'll use cost to cost method. So percentage of work performed. This by this how much? 5.26%. Then 2.36%. 2 point. 23 point. Then you can see now we can apply to this revenue and we can find out revenue. So revenue to be recognized will be this into 11 lakh, this into 11 lakh, this into 11 lakh, this into 12.5 lakh, this into 12.5 lakh. So we can recognize total revenue to be recognized till date, means cumulative revenue. Then we can find out yearly revenue. From yearly revenue we can deduct cost yearly, that will be profit or loss. Same thing we have done in AS7 also. Same thing. So can I say we'll apply this into revenue to find out revenue to be recognized. Always I will suggest do on cumulative basis, because in solution they have given yearly basis, but I will suggest you do on cumulative basis, because when there is a changes in estimation, then yearly basis can't be applied. So always do accounting on cumulative basis, calculation on cumulative basis. So always first find out cumulative cost and cumulative work in progress. Then find out cumulative revenue. From that cumulative revenue, deduct previous revenue, so that will be yearly revenue. Understood what I am saying? Then find out yearly cost, minus it, and then find out profit or loss. I hope you can do it by room. Have you understood this point? So this question, can I say, even the solution you would have read, you would have understood or not? Now my role is very less once you have understood. Can I assume that you can do it all questions now? Correct? Yes, sir. So with this, my Ind AS 115 is over. So you need to do all the questions. Any doubt is there, you can ask me in this WhatsApp group, whatever has been created. So I will help you if there is a doubt. Nothing to worry. So with this, Ind AS 115 is over. So can we start another Ind AS? Come to Ind AS 7 first. What are the Ind AS left? Check करेंगे पहले. Ind AS 7 left. Ind AS 101 left. Correct na? Ind AS 101, Ind AS 105, Ind AS 33, Ind AS 113. CSR 24 and 7. And this much Ind AS left na. In this only Ind AS 33 will be thoda sa time taking. Otherwise all are half an hour, 1 hour job. Is half an hour or more than half an hour, but not more than 1 hour. Ind AS 33 will take around 1.5 hours for revision. Then there is one chapter, analysis of financial statement. That is nothing but schedule 3 requirement. Okay, understood? So that I will do at the end. Then that only I will take one question and revision of schedule 3 requirement. Correct? I think we'll be able to finish it today only. I was only thinking how much time Ind AS 115 will take. But Ind AS 115, have you understood? Because Ind AS 115, what happened? Application is difficult if a new question will come. You can apply only when you have understood the concept. Means in this question solution is not important. Understanding the concept is more important. Means for example, sale with a right to return. But if you forget the concept, can you attempt? No. But if you retain it, any question you can attempt. Practice much not required. Revision is required of that particular concept. Are you able to understand what I am saying? Correct. So, isliye I said Ind AS 115, you can do all the questions by your own if you have understood the concept. For example, we have done repurchase arrangement. Can you perform in exam if you forget repurchase arrangement? Totally technically na. Totally technical point. You retain that concept by way of revision only. Chalega? Yes, sir. Let us come to Ind AS 7 without wasting your time. Because time is precious. And we are not here to waste our time. 27 as per my book. 1, 7. Now Ind AS 27. Cash flow statement. Cash flow statement, do you know? From CA inter only. Now cash flow statement means what? Movement of what? Inflow and outflow of cash and cash equivalent. From which activities? Operating, investing and financing activities. You know what is operating activities. Operating activities are principal revenue producing activities. What is the meaning of investing activities? Acquisition and disposal of long-term asset or investment other than cash and cash equivalent. Other than cash and cash equivalent. Then financing activity means what? This is chapter number 27. Chapter number 27. What happened? Got it? Can we start? Chapter number 27, what you are finding? After 26, 27 will come. Chapter number 27, volume 2. Oh, hello. So what I am saying, investing activity means what? Acquisition and disposal of long-term asset and investment, but other than cash and cash equivalent. What is the meaning of financing activities? Any activities which changes the size and composition of equity and borrowing. Borrowing will include both short-term borrowing and long-term borrowing. Correct. Now, we need to understand what is the meaning of cash and cash equivalent. So cash means what? Cash in hand and demand deposit with bank. Demand deposit with bank means what? Current account. So any bank balance in current account will be also what? Cash. Now one doubt will come that current account may have overdraft. So that bank overdraft in that current account, whether it will be considered as negative cash or it is a what? Financing activities. Means one doubt will come. So one clarification has been given under Ind AS 37. Sorry, Ind AS 7. A clarification has been given under Ind AS 7. That bank overdraft which are repayable on demand are part of cash and cash equivalent only. Means in current account, if there is an overdraft, it is deducted to find out what? Cash and cash equivalent. But as per Ind AS 1, For the preparation of balance sheet, any liability which are payable on demand is current liability. Means in balance sheet, it will be in current liability. But for this chapter, it is cash and cash equivalent part. So there is two different. We are preparing cash flow statement right now. So we are not applying the rules of Ind AS 1. We are applying the rules of Ind AS 7. Understood? So what a clarification? Any overdraft which are payable on demand is current liability in the balance sheet, but cash and cash equivalent in cash flow statement. But any bank overdraft which are not repayable on demand, for example, we have taken any overdraft facility, so that is not repayable on demand. Are you able to understand? So that is also current liability in the balance sheet, but that is a financing activity in cash flow statement. Understood this point? Correct. What is the meaning of cash equivalent? Cash equivalent means short term. Short term means what? It is 3 months or less than 3 months from the date of acquisition. Short term highly liquid investment that are readily convertible into known amount of cash, which are subject to insignificant risk in the decline in the value. So that will become cash and cash equivalent. Understood? Now you all know that cash flow statement we need to disclose cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. When I am saying investing, can I say it will be always direct method, means inflow minus outflow. But for operating activities, we have direct as well as indirect method. Direct means what? Inflow minus outflow. Indirect means what? Adjustment to profit before tax. Normally in exam they ask indirect method. Are you able to understand what I am saying? Normally in exam they will ask indirect method. Have you understood what I am saying? What is not there in PDF? One minute. Let me check. Now, everyone. So what I was discussing that cash flow statement, you know, three activities: operating, investing, and financing. Investing, financing always will be direct method, inflow minus outflow. But for operating activities, they will give direct as well as indirect method. Indirect method means adjustment to PBT. So in exam, they may ask direct as well as indirect. Direct method, you know, inflow, outflow, that you know, correct? So only I need to explain what adjustment to PBT, but that is also you know, correct? But only one point I just need to give you, which you might not know. Okay, when I say adjustment to PBT, so when I am calculating cash flow from operating activities by using indirect method, will start from PBT. PBT from SOPL will write down, and then we'll do adjustment for two type of items. One is non-cash item, one is non-operating item. So any non-cash income will be deducted, any non-cash expense will be added. Similarly, any non-operating expense will be added and non-operating income will be deducted. Now, I am assuming that you know non-operating income and expense and non-cash expense and income, correct? Now, after this adjustment, we get operating profit before what? Working capital changes. Working capital changes. अरे बोलना रही. So we'll do plus minus. So any increase in asset, what will do? Any increase in asset, minus. Decrease in asset, plus. And reverse for liability. So increase in liability will be added and decrease in liability will be deducted. This you all know. No explanation required also. But my question to you all, when I am saying increase in asset, whether it is current asset or non-current asset? Current asset or non-current asset? When I am saying increase in asset, which asset? Current or non-current? Non-current. We do adjustment for current item or non-current item? That means we'll take debtor or property, plant and equipment. Oh. So why you are saying non-current? You are saying current asset. Whether we'll take non-current item? We'll take non-current item. Yes or no? We'll take non-current item. Yes or no? Yes, we'll take. If it is operating, means it will be current as well as non-current. Just try to understand, because now we have understood debtor can be non-current also. Debtor can be non-current also, but operating. So therefore I have said operating asset. There are some current items which are not operating. For example, interest receivable, whether they are operating. Interest receivable, interest payable, these are related to financing and investing activities. So these are also what? Not operating. So always will take current or non-current, but which are operating item, which are operating asset and operating liability. Normally student do mistake यहाँ पर. I hope you have understood now. So it is increase in operating asset and decrease in operating asset and increase in operating liability and decrease in operating liability, which may be current or non-current. After this we get cash generated from operating activities. From this we deduct income tax paid. So we'll get cash flow from operating activities. Understood this point? Then I have given some examples of current item which might not be operating. For example, interest receivable, not an operating. Interest payable, FD, short-term borrowing, financing activity na. Loans and advance given. Any loan given to employee. The investing activities. Correct now. The loan given is not an operating item. Understood? Have you understood this point? Correct. Now just try to understand. From examination point of view, if they have given financial asset, so normally in financial asset we write on loan, we write on investment, loan, investment, then trade receivable, cash and cash equivalent, correct, and other financial asset. Understood? So again, loan will be investing activity, investment will be investing activity, trade receivable will be operating, cash and cash will be to separate return, and other financial asset. One doubt will come if question is silent about a nature. So if this other financial asset is current, we'll assume it is operating. If it is non-current, we'll assume it is non-operating. Are you able to understand what I am saying? Have you understood this point? Means will depend upon assumption, na? It will depend upon assumption. Now suppose in exam they give financial asset, non-current and current, but the question is silent. So current will assume what? Operating. Non-current will assume non-operating. So it depends upon assumption. Depends upon assumption. Then next point. Some special points are there. Let us discuss this special point. Point number A. Any PP purchase or constructed for let out and subsequently held for sale in the ordinary course of business. If you remember under India 16, I have said the car dealer first purchased the car and given on rent and subsequently included inventory for held for sale in the ordinary course of business. So any PP which is initially given on rent, subsequently included inventory for sale in ordinary course of business. So what India 7 says that purchase and acquisition of that PP will be operating activity. Even though you are purchasing what? PP, it will be operating activities. Any rent received will be also what? Operating activities. And sale of such asset will be also operating activities. Normally when you purchase car, that is investing activities. But this is a special case. If that is purchase of car, initially classified as PP, then also it is what? Operating activities. Then operation of financial company means bank and NBFC. So can you see in this case any purchase and sale of investment will be operating activities. Any cash advance or loan given will be operating activities for banking companies. And any interest received will be also what? Operating activities. Correct. Any deposit received means saving account, current account, that will be also what? Operating activities. Any deposit received will be also operating activities. Any interest in dividend for financial company or other than financial company. So interest paid for financial company will be what? Operating. For other company, financing activity, because that is interest paid on loan. Correct. Interest received for financial company then, but for other company it will be investing activities. Dividend received for financial company, operating, but for other company, investing. Dividend paid is always on what? Capital, and capital is always financing. So this will be always financing activity for both. In the recent RTP, they have given question based on this. We classify for banking company and other than banking company. Means they can ask anything, na? Exam. Correct? Then they have given taxes on income. What they want to say, taxes on income will be always classified as operating activities unless they can specifically identified as financing or investing activities. For example, if I say TDS deducted on interest received, so because interest received is investing, so TDS whatever paid, is tax whatever paid will be also investing activities. For example, previously we used to have a concept of dividend distribution tax. Now the dividend distribution tax has been withdrawn, but suppose we have paid CDT on dividend paid. So dividend paid is what? Financing activity. So any tax paid on dividend will be also financing activity. Okay. For example, any tax paid on long-term capital gain. Suppose you sold any investment property. So that is investing activity. So any long-term capital gain paid, long-term capital gain tax paid on such sale will be also what? Investing activity. But it should be specifically identified as what? Financing or investing activity. Means if question is silent, then what? Operating activities. Then point number 8, changes in ownership interest in subsidiaries and other business. This is very important. Very important. Correct. Now, if you remember when I was doing consolidation, then I said initially acquired 20%, then 20%, then 20%. So this is 20, this is 40, this is 60. So on this they control obtained. Then 10%, 5% sold. And this is changes in NCI if you remember. This will not result in gain or loss of control. So this is known as changes in proportion of NCI. Then minus 40 loss of control. Then minus 25 again sale of retained investment. Remember this cycle. So what they want to say in CFS, not in SFS, in consolidated financial statement, this changes in proportion of NCI. When I am saying changes in proportion NCI, means changes in equity. So this will be considered as what? And other will be what? Investing activities. So only this will be what? Financing activity. This all will be what? Investing activities. Understood? Correct. Now, what they are saying? Classification of cash flow as investing activity. The aggregate cash flow arising from obtaining or losing control of subsidiaries or other business shall be presented separately and classified as investing activities. The aggregate amount of cash paid or received as consideration for obtaining or losing control of subsidiaries or other business is reported in statement of cash flow Net of cash and cash equivalent acquired or disposed as a part of such transaction. Have you understood this point? Means when we obtain control, what journal entry will do? INA account debit to cash, and the difference will be goodwill. So this is PC paid in cash now. So this will be investing activity. But can you see this INA some cash and cash equivalent receive also now? So what they want to say, investing activity will be, suppose you paid 10 lakh and you receive cash and cash equivalent 1 lakh. So your investing activity will be what? 9 lakh. Net of cash and cash equivalent whatever has been acquired. Understood this point? When we have done journal entry for loss of control, we have done journal entry bank account debit to INA. Remember? So this INA include cash and cash equivalent of subsidiary. This is the consideration received. So this will be also investing activity, but net of this amount. Net of this amount. Very important point. Very, very important point. Have you understood this point? Have you understood this point? चलेगा आगे चले. I will take a question based on this. Nothing to worry. Classification of cash as financing activity. Cash flow arising from changes in ownership interest in a subsidiary that do not result in loss of control shall be classified as what? Cash flow from financing activity means what? Changes in proportion of NCI. Then non-cash transaction. What they want to say? Any investing and financing activity which do not involve movement of cash and cash equivalent or non-cash transaction should not be included in cash flow statement, even though it is investing or financing activity. However, that requires separate disclosure. For example, conversion of debt into equity. So can I see it is a financing activity, redemption of debenture and allotment of equity shares, but it does not involve any cash movement. Therefore, it will not be included in cash flow statement. But what is required? Disclosure is required. Understood? Next point. Foreign currency cash flow. Important. Foreign currency cash flow. Correct. What they say? Cash flow arising from a transaction are recorded at transaction date exchange rate. Means any foreign currency transaction will be included in cash flow at transaction date exchange rate. Correct. Unrealized exchange gain or loss is not a cash flow. Have you understood this point? Have you understood this point? But I'd like to explain this point. Suppose you have done one journal entry on 1st Jan 2020. Bank account debit to debtor. Debtor account debit to sales. Suppose $10,000 into 70. It becomes 7 lakh. Correct? Then, suppose on 28th Feb, you receive, out of 10,000, you receive 4,000. You pass one journal entry, bank account, debit. Suppose 4,000 into 72, how much? 2,88,000. To debtor, 4,000 into 70, 2,80,000. There is an exchange gain, transfer to PL 8,000. Now on 31st March, suppose $1 become 75. So debtor being a monetary item, so we recorded a closing exchange rate. So now there will be one exchange gain, transfer to PL. To debtor, this become what? 6,000 into 5, that is 30,000. This will be also transferred to what? PL. So, this is realized or unrealized? This gain is realized, unrealized? Realized. So this is realized gain. This is realized or unrealized? Unrealized gain. Correct? Understood? So what Ind AS 7 says that unrealized gain is not cash flow, correct only? Understood? But then also some discussion required. When I am discussing, it means even though you understood but not understood. Because I know what you can understand, what you can't understand. Believe me, so with experience I know what you can understand, what you can't understand. Therefore, detailed discussion required. Now, suppose we are using direct method. So, batao, we'll write down collection from debtor. So, collection from debtor can be directly taken from debtor account. That is 2,88,000. And can you say no adjustment required for unrealized exchange gain? Means in direct method there is no problem. You are taking collection from debtor, that is only cash inflow. But indirect method, some problem will arise. Indirect method. You can see you will start with PBT. Let us assume only sale has been done. So what is your PBT? 7 lakh plus 8,000 plus 30,000. This is your profit. So 7 lakh plus 8,000 plus 30,000. How much? 7 lakh 38,000. So your profit is 7 lakh 38,000. Let us assume there is no expense. Let us assume there is no expense. Now what they say, the unrealized gain is not cash flow, we will eliminate it. We will do minus what? Unrealized gain. So we will do what? 30,000. Bolo yes or no? It will become 7 lakh 8,000. Then we will do plus minus increase or decrease in debtor. Increase or decrease in debtor. There is an opening debtor to nil, because this transaction was done in current year only. Closing debtor is what? Closing debtor is what? You are not writing, that is the problem. Closing debtor is what? Closing debtor, how much coming in the balance sheet? $6,000 into what you have done? This only you have done now. 4,50,000. Now everyone just try to understand. Will we do this or will you do this nil minus 4,20,000? Which one is correct? Means will we take 50,000 or 4,50,000 or will you take 4,20,000 as changes in debtor? Doubt is this. Have you understood what I am saying? Have you understood? Batao. When I will do plus minus, this is increase in debtor. Increase in debtor means minus. So minus what will do? 4,50,000 ki 4,20,000. How much we should do? Everyone respond. Please. Fast. Bolo. Array. Not responding. It will, this is correct, huh? I will only say. Don't do this, but high chances in exam you will do this. Do what? 4,20,000. Let us check. So 4,20,000 will minus. Increase now. What answer you are getting? Check karo. Answer will be 2,88,000. And same answer is coming. Same answer is coming or not? So it means you will do 4,20,000. Means when you are taking closing data you also take at after eliminating what? exchange gain, unrealized exchange gain. Why? Because once you have reversed this, you should reverse this also now. If you are not reversing, answer will not come. Correct? But high chances you will do mistake. But ICAI has given one shortcut for this. What ICAI has done, ICAI has done like this. 7,38,000 till 7,38,000, 4,50,000. Same answer will come or not? One shortcut, but shortcut is always dangerous. ICAI has given answer in this way, but I will say when ICAI is only means India is saying it is not a cash flow, should you eliminate or not? This is concept. This is shortcut. Shortcut can be dangerous when exchange gain is related to financing activity. But the exchange gain related to financing activity may be also unrealized, should be eliminated or not. But their effect will come in financing activity, so your cash flow from operating activity will be wrong. So I will say don't use this shortcut. Use what? Concept. I have just given because when you will do ICAI solution, they have done in this way. I will say don't do in this way, do in this way. But I hope you have understood concept. You have understood concept. Chalega? Understood? Understood or not? Then last point. Component of cash and cash equivalent and their reconciliation. This is also very important. What India 7 says that we need to give the component of cash and cash equivalent for opening and closing as a disclosure. So what will come in cash and cash equivalent? Cash in hand will come. Cash at bank current account will come. Any short-term investment which are cash equivalent. Any short-term investment which are cash equivalent, which meet the definition of cash equivalent, will also come. For example, FD having a maturity period of 3 months or less than 3 months from the date of acquisition will also come. Then foreign currency will also come. And minus what? Bank overdraft repayable on demand. Bole yes or no? Bank overdraft repayable on demand. This will be cash and cash equivalent at the beginning and at the end. So we should also give the component of cash and cash equivalent. Can I ask two questions? First question, foreign currency. Suppose when you acquired foreign currency, suppose you have foreign currency, you acquired foreign currency $10,000. You acquired foreign currency $10,000. When you acquired, it was 70. So 7 lakh. But on reporting date, it becomes 75. So you will do 10,000 into 75. 7,50,000. What is gain? Is it realized, unrealized? Will be eliminated. My question to you all, in cash and cash equivalent, will include foreign currency? 7 lakh, 7 lakh 50. 7 lakh, 7 lakh 50. 7 lakh, correct? In balance sheet, it means can I say cash and cash equivalent as per India 7 will not match with cash and cash equivalent in balance sheet, correct? Second point, this bank overdraft repayable on demand will be deducted in balance sheet where it will come. Current liability means can I say because of these two, cash and cash equivalent of balance sheet will not match with cash flow statement. Therefore, what is required? Reconciliation required. And we have to give reconciliation of cash and cash equivalent as per statement of cash flow, as per balance sheet. Understood? So what adjustment will do? Can you see we'll adjust unrealized gain and loss. So any gain will be added, any loss will be deducted because already we have eliminated from this. So any exchange gain, unrealized exchange gain will be added. Any exchange gain which is unrealized, exchange loss which is unrealized will be deducted. And bank overdraft repayable on demand which was deducted now will be added back. So this will become cash and cash equivalent as per balance sheet. This is very, very important. Already a question have been asked, but I think you can do it. Now you can do it. Bolo yes or no? Already a question have been asked, but now you can do it. Have you understood? Can I take some questions? Yes, sir. So come to India 7. Question number 18. Company A acquire 70% of equity stake in Company B on July 20. Is date of acquisition. The consideration paid cash consideration 15 lakh. 2 lakh equity shares. Can you see this is non-cash? So only cash consideration will come 15 lakh. On the date of acquisition, Company B has a cash and cash equivalent balance of 2,50,000. Means how much paid? How much cash paid? 15 lakh. And how much cash received? So what is the net cash? 12 lakh 50,000. Can you see this will be investing activity? One second, you are not concentrating. This is what? Purchase of investment, means formation of subsidiary, means business combination. So what is PC? 15 lakh and equity share. Equity share is non-cash. Ignore it. 15 lakh cash paid. But we'll also receive cash and cash equivalent of Company B. INA will include this much. So how much cash received? What is the net cash paid? 12,50,000. That will be cash flow from which activity? Investing activities, right? This is purchase of business. Correct? Then on 10th October, company have further purchased 10%. It initially purchased 70%. Now it become 80% by payment of 8 lakh. But this is which activity? Financing activity, because this is changes in proportion of NCI. Till now this question has not been asked. Expected, huh? But a good question or not? Every student who will not revise, they will do mistake. Then I have taken one question. This question is already asked, but I have taken to explain one point. Entity A acquired a subsidiary, Entity B, during the year. Summarized information is given in consolidated PL and balance is provided. Okay. You can see revenue, cost of sales, GP, depreciation is non-cash, other operating expense, interest cost is financing activity, profit before tax, taxation, profit after tax. Then they have given balance sheet, you can read other information. All of the shares of Entity B were acquired for 74,000 cash. Entity B is a subsidiary. The fair value of asset acquired and liability assumed are. Means these are the INA acquired. Correct? It includes how much cash? Goodwill is also given. You can say goodwill will come in balance sheet, check kar. How much goodwill? 18,000. Means it till now not impaired? Not impaired. Previous CBS. Sorry. Cash flow statement. Same to same question was asked in exam. Now you say, if this question is given in ICAI study material, we have done in class, same to same question asked for 10 marks. Will you panic? You panic. And if you are not doing correct, means it is your mistake. The same question was given, same question was asked, with only change in the number. Understood? How to do it? Only I need to explain one point. First point is what? In this, can you give me operating asset? What are the operating asset? Means which will consider in changes in working capital. One is trade receivable, one is inventory, one is trade payable. Am I correct or not? Can you give me closing balance? The closing balance give me inventory 30,000, closing balance, huh? Can you give me opening balance? Now, during the year, one company was purchased, and we also have trade payable, trade receivable, and inventory. So can you see it is actually non-cash, or just try to purchase from what? Subsidiary company. For that we are considering this cash transaction. So can you say actually this should be excluded to find out increase or decrease in this operating asset. So what we'll do? How much inventory will exclude from this minus 4,000? How much trade receivable taken over? 8,000 will be excluded. And how much trade payable? 32,000 will be excluded. So first you exclude it from closing balance and add on purchase from subsidiary. So it will become 54 minus 8, how much? 46. This become 30 minus 4, 26. 68 minus 32, 36. And then you find out increase or decrease. So you can see this is decrease, this is also decrease, this is also decrease. Now you know what to do in indirect method. This point you understood? Now, second point, what will be the purchase of subsidiary? Because we have purchased one subsidiary investing activities. So how much cash paid? How much cash paid to purchase subsidiary? 74. And how much cash received? That will be also deducted. It will become 72,000. These are the two important points in this. Balance is very simple. Can you read the solution right now? Goodwill is a non-cash, means goodwill, no amortization, no impairment. It will not affect anything. Correct now? Understood? So let me explain. What is profit before tax? Depreciation is given, added back. Correct. Interest cost will be added back. You can see they have done decrease in inventory, decrease in trade receivable, decrease in trade payable. Okay. Then we have to find out tax paid. So tax paid, let us prepare one account. What is the income tax payable given? Opening balance. Opening balance. Closing balance. How much income tax charged to PL? So how much paid? 15 plus 11 minus 12. How much paid? So this is income tax paid during the year. So this will come in cash flow statement. 14,000 will come. This will become cash flow from operating activities. Then there is only one investing activity, 72,000. There is only one financing activity, 4,000. Interest paid, interest cost. This become increase or decrease in cash and cash equivalent. Add opening balance. This will be closing balance of cash and cash equivalent. Super easy, 10 marks question. Have you understood? Follow. Can you do the balance question of ICAI study material by your own? Have you understood? Have you understood? Correct. No doubt? Yes, sir. This much you understood. In day 7 completed from our viewpoint. We'll take a break of 5 minutes. Then we'll take one more what? Chapter. Can we start once again? Now we'll start a new chapter in Ind-AS 105. What is the Ind-AS 105? Non-current asset. Non-current asset held for sale and discontinued operation. But actually there are three topics. One is in this chapter non-current asset or disposal group held for sale, non-current asset or disposal group held for distribution to owner, and discontinued operation. However, this point number B and point number A is same to same. Means any non-current asset which are held for sale, same principle applied for non-current assets which are held for distribution to owner. Means now in this first we need to understand when I am saying non-current asset, so whether all non-current asset or only few non-current asset. So what Ind-AS 105 says that in this all non-current asset will not be included. Only it will include property, plant and equipment, intangible asset, investment property, investment in subsidiaries, associate and joint venture, and ROU asset held by lessee. Means same to same Ind-AS 36. Same to same means other non-current asset will not be form part of this chapter. Means that will be outside the scope of Ind-AS 105. Correct? Yes, sir. Now you all know what is non-current asset. Someone doubt will come. So what is the meaning of disposal group? So it means non-current asset as well as disposal group will be covered. What is the meaning of disposal group? Disposal group is a group of assets and liability. Group of assets and liability to be disposed of. To be disposed of means not yet disposed. To be disposed of but not yet disposed by sale. So to be disposed of only by means of sale. Together as a group in a single transaction. Together as a group in a single transaction. Means sale will be done in a single transaction. Are you able to understand what I am saying? Follow. Have you understood? Means can I say in this way, everyone? When I am saying group of assets and liability, so disposal group is a group of assets and liability. Correct. So group of asset and liability, to which asset? It will be all asset. Which liability? All liability. Even though other assets and liabilities are not covered in this chapter. Are you able to understand what I am saying? When I am saying disposal group, so disposal group will consist of all asset, all liability. Okay, this disposal group can be either one CGU, it can be group of CGU, or it can be part of CGU also. It can be either part of CGU or one CGU or group of CGU. Which is to be disposed of? Means if it is already disposed of, then it is not a disposal group. If it is already disposed of, then it cannot be disposal group now. It is to be disposed of. To be disposed of by means of sale. By means of sale. Correct? Means if it is disposed of by closing rather than sale, means there may be some disposal by closing it. Suppose we have factory and we have decided to close it after 6 months. So close means we have decided to abandon it. So then it will not be covered in this definition. So to be disposed of only by means of sale. By means of sale. Now sale can be either group sale or individual sale, piecemeal distribution, piecemeal sale, one by one. So if it is to be disposed of by sale, but by means of piecemeal, then it will not be a disposal group. Means sale should be what? Group sale. together as a group in a single transaction, then it will become disposal group. So can you say me what is the meaning of disposal group? Disposal group means group of asset and liability to be disposed of by means of sale together as a group in a single transaction. Means what is the objective of this chapter? Objective of this chapter to classify any non-current asset or disposal group as held for sale. Then we need to first understand when the classification criteria will be satisfied. So what Ind AS 105 says that the classification will be done when the carrying amount of such non-current asset or disposal group will be recovered principally through a sale transaction. Means the carrying amount will be principally recovered through a sale transaction and not through his continuing use. But sir, how will understand that carrying amount will be principally recovered through a sale transaction? So right now, everyone just try to understand. Right now, we have one asset and we have decided to sell it, but we might use it. Correct now? So sir, how will understand the carrying amount will be principally recovered through a sale transaction? For that they have given two more conditions. Two more conditions. So what Ind AS 105 says that any asset or disposal group is classified as held for sale if following conditions are satisfied. First, non-current asset or disposal group must be available for immediate sale in its present condition. Must be available for immediate sale in its present condition. Means suppose we have decided to sell the building, but after renovation, then it is not available for immediate sale in its present condition. Therefore, it cannot be classified as held for sale right now. It may be classified as held for sale after renovation, but not now. Are you able to understand what I am saying? First condition you understood. Second condition is what? The sale must be highly probable. Highly probable. Now, so what is the meaning of highly probable? One thing is clear that highly probable means more than what probable, but not virtual certainty. Probable means chances are more than 50%. Virtual certainty means chances are more than 95%. They have used the word highly probable. So it means highly probable means significantly more than probable. So what Ind AS 105 says that if 5 conditions satisfied, then we can understand that yes, sale is highly probable. What are the 5 conditions? First, management must be committed for sale. There must be some commitment. Correct. Here is the commitment will be understood from the resolution passed in board of directors meeting. If resolution has been passed, means they are committed. They are committed. Second, management has initiated an active program to find out potential buyer. Means they are doing some activity to find out potential buyer. Third, sale price is reasonable in relation to current fair value. Means sale price quoted is also reasonable. Fourth, the sale transaction is expected to be completed within 1 year from the date of classification. Means expected time to complete is 1 year from the date of classification, and management is not expected to change or withdraw the plan. If this all 5 conditions is satisfied, then the non-current asset or disposal group will be classified as held for sale. Understood this point? Have you understood this point? Correct. Now once it is classified as held for sale, then Ind AS 105 is given measurement criteria. So measurement will be done on the date of classification at lower of what? Carrying amount and fair value less cost of disposal. At carrying amount and fair value less cost of disposal. Fair value will be measured as per Ind AS 113. Cost of disposal means incremental cost of disposing the asset. Any incremental cost of disposal. Correct? Understood? Yes, sir. Now, how to recognize the impairment loss and reversal? You can just try to understand. This is 10,000 and this is 9,000. So there is a loss of what? 1,000. So this 1,000 will be also known as impairment loss. But this is impairment loss as per Ind AS 105, not as per Ind AS 36. So there are 2 impairment loss. One is impairment loss as per 36. One is impairment loss as per Ind AS 105. But both are different. Impairment loss as per Ind AS 36, accounted as per Ind AS 36. This impairment loss will be accounted as per Ind AS 105. What they said, any entity should recognize an impairment loss in PL for any initial or subsequent write down of asset to its fair value less cost to sell. If you remember, under Ind AS 36 we have done that for a revalued asset, impairment loss can be adjusted with revaluation surplus. But in this chapter, any impairment loss cannot be adjusted with revaluation surplus. All impairment loss will be charged to PL, whether it is for revalued asset or for non-revalued asset. Understood? This is the first point where student can do mistake. So each and every impairment loss will be charged to PL, means it should not be adjusted with revaluation surplus. Understood? Ind AS 36 impairment loss can be adjusted with revaluation surplus for revalued asset. This point have you understood? Have you understood this point? अरे बोलना रहे. Got it? Can I say? Now we also know that depreciation and amortization shall cease immediately when the asset will be classified as held for sale. Means once it is classified as held for sale, no subsequent depreciation, no subsequent amortization. Understood? Already we have done under Ind AS 16 this point. Understood? Right. Now, any subsequent increase in fair value less cost to sale of an asset can be reversed. Can be reversed. Means suppose everyone. Suppose if I say in this way, initially carrying amount is 1 lakh and recoverable amount is 90,000. And suppose indication of what? Impairment. You have applied Ind AS 36. What is the impairment loss? 10,000. On this date, it is classified as held for sale. We'll apply 105. Once again, we'll compare what? Carrying amount. Let us assume no depreciation. Let us assume no depreciation. But this, for this depreciation will be charged now. Let us assume depreciation, Baba. Correct na? अरे बोलना रे. What is that? अरे. Suppose this is 1 year. Let us assume 1 year. And depreciation is 9,000. 10%. What is the carrying amount? 81,000. Now, fair value less cost of disposal is suppose 70,000. What is the impairment loss? 11,000. Then again 1 year expired. Correct? No depreciation now. Carrying amount is what? 70,000. And suppose now fair value less cost to sale is what? 60,000. Now it become 10,000. Correct. Understood? Correct. Again, suppose 1 year expired. It is still classified as held for sale. Even though it is not sold within 1 year, then also it may be classified as held for sale. We'll do in other point. Means it should be sold within 1 year from the date of classification, but due to some reason it cannot be sold. Quite possible now. There can be some valid reason. Correct. Now it becomes 70,000, but fair value increases. Quite. But what happened? Fair value increases. Quite possible. Suppose increases by 75,000. So of course can I say there is an increase. Can we reverse? Yes, we can reverse to the extent of this amount. Even though impairment loss was charged as per Ind AS 36, so it can be reversed to the extent of this amount. Have you understood this point? It can be reversed. But suppose this increase, suppose this become 2 lakh, let us assume. Quite not possible. So this is what? 1 lakh. Can we reverse 1 lakh 40? Only to the extent of this amount. Understood? What they have given. Any subsequent increase in fair value less cost to sale of an asset can be recognized in PL to the extent that it is not in excess of cumulative impairment loss that has been recognized in accordance with Ind AS 105 or previously in accordance with Ind AS 36. Have you understood this point? Have you understood this point? Correct? Yes, sir. Now, if there is a disposer group, suppose there is a disposer group. So disposer group means many asset, property, plant and equipment, intangible asset, investment property. It may include debtor also. It may include inventory also. It may include trade payable also. So first we'll find out carrying amount. Then we'll find out fair value less cost of disposal. Suppose this is 1 lakh and this is 90,000. How much impairment loss? 10,000. Suppose there is a goodwill also. So this impairment loss will be first allocated to what? Goodwill. And then balanced to other non-current assets which are within the scope of Ind AS 105 in the ratio of their carrying amount. Same principle we have done under Ind AS 36. Can you say in exam they will give this? They will give this. You can calculate this. You can do allocation. Super easy. Super easy. Bolo yes or no? So what they have said, when a loss is recognized for disposal group, it will be allocated between non-current asset to which applicable in the following order. First to goodwill, if any, balance to other non-current assets within the scope of Ind AS 105 in the ratio of their carrying amount. Correct? I hope you have understood this. Now, extension of period required to complete the sale. So, for example, initially we have classified as any asset or disposal group as held for sale, but it cannot be sold within 12 months. It cannot be sold within 1 year. Correct? So, whether it can be continued to be classified as held for sale. So, what Ind AS 10 says that there may be some event or circumstances which may extend the period to complete a sale beyond 1 year. In this case also the asset will still be classified as held for sale if these two conditions are satisfied. Delay is caused by any event or circumstance which is not within the control of entity. COVID-19 came. Who will purchase? You only say. Delay will be caused or not. Correct? Understood? Yes, sir. The entity is still committed to sell the asset. Still they are committed to sell the asset. If yes, they will be continued to be classified as held for sale. Now, how to present this item in balance sheet? Correct. Just try to understand any non-current asset which are expected to be sold within 1 year, as per Ind AS 1 definition, it will become current, but then also it will not be classified as current. What they say, it will be presented in balance sheet after non-current and current as a separate heading. So it will be shown after non-current, current as a separate heading, non-current asset or disposal group classified as held for sale. Similarly, any liability associated with disposal group which is now classified as held for sale, will be shown separately after what? Current liability. Liability directly associated with disposal group classified as held for sale. Presentation requirement you understood? Understood? Changes of plan. Can I say anytime management can withdraw the plan even though they were initially commitment, because we are Indian, we are always known to break the commitment. Quite possible now. We are committed. But commitment does not mean we'll fulfill now. अरे बोलना रही है. We are known to break the commitment. अरे बोलना रही. So there can be some change of withdraw plan. Then what will do? So in this case, what India, this is important. If there is some change of plan, so what India says that it will now no longer meet the criteria to be classified as held for sale. It will be reclassified from non-current asset held for sale to non-current asset. Means it will be reclassified from this to this ना. यहाँ से यहाँ जाएगा ना. It will be reclassified, but at what value? That we need to understand. It will be reclassified at a lower of A and B. Lower of A and B. What is A? The carrying amount had the asset has not been classified as held for sale. Means can I say because it is classified as held for sale, we cease depreciation? We will first find out if that asset was not classified as held for sale, what would have been the carrying amount. We will find out carrying amount of the asset immediately before the classification less depreciation till the date of change of plan. This will become carrying amount that would have been there if it was not classified as held for sale. Then we'll compare with current recoverable amount, whichever is lower, and whatever difference will come by, suppose the carrying amount was 10,000, suppose this is what, 11,000, and suppose this is 12,000, we'll take lower. So this becomes 11,000, means we need to increase it by what, 1,000. So any adjustment will be done through what, PL account. So any adjustment will be done to PL. Which PL? PL from continuing operation. Of course, continuing operation, now we have done the format days profit or loss from continuing operation, profit or loss from discontinued operation. So this is not discontinued now. So they are just given one explanation, because in this chapter we'll do discontinued operation also. So this will be transferred to profit or loss from continuing operation. Understood? Post balance sheet item is what they want to say. Just try to understand. Suppose this is the balance sheet date and this is the date of approval. Suppose the asset become held for sale before approval of financial statement. Is both the condition was satisfied before approval of financial statement. Can we classify this as held for sale on balance sheet date? Means adjusting or non-adjusting? Understand what I am saying? Means both the classification criteria 1 and 2, it is available for sale within 12, it is available for sale immediately in its present condition, and sale is highly probable. If these two conditions are satisfied, then it will be classified as held for sale. But these two conditions satisfied before approval, but after reporting that, can we classify this asset as held for sale on balance sheet date? No, it is a non-adjusting event. Correct. Second, if I say suppose it become held for sale यहाँ पर, but before approval of financial statement, management changes the plan. Management changes the plan. Quite possible. So can we classify the asset as not being held for sale on balance sheet date? Because management withdraw the plan before approval of financial statement. The question is that, will you classify on reporting that as held for sale or not held for sale? But this is also non-adjusting event, because on balance sheet date there was no change of plan. So it was classified as held for sale, therefore non-adjusting event. Therefore it will be classified as held for sale on reporting date. Understood? You can read this too. Understood. Then non-current asset classified as held for distribution to owner. held for distribution to honor. Same principle whatever we have done. Means it will be also measured at carrying amount and favor less cost of distribution, whichever is lower. Same to same whatever we have done, that you can read this entire thing. This much you understood. Now let us come to the last topic, discontinued operation. Discontinued operation. You can say now we know that as per the requirement of Ind AS 1 and as per the requirement of Schedule 3, we need to disclose the profit and loss from discontinued operation separately from continuing operation. But for that we need to understand what is the meaning of discontinued operation. Discontinued operation. Are you getting? Means what they want to say. Suppose there are two operations, operation 1, operation 2. Both are continuing. So there is no discontinued operation. But in the second year, this is continuing, this becomes discontinued. So this profit or loss will be disclosed separately or not. In this year it becomes discontinued. So there was some profit or loss from this operation. So this requires separate disclosure. But how will understand it become discontinued? You need to understand the meaning of discontinued operation. What is the meaning? Discontinued operation is a component. Means entire entity is not discontinued. If entire entity is discontinued, then the going concern assumption become inappropriate. Then to liquidate na. We are discussing only one component is discontinued. Correct? A discontinued operation is a component of an entity that has been disposed of, or is classified as held for sale, Means when I am saying is classified as held for sale, means it is disposer group classified as held for sale. Means any disposer group which is classified as held for sale will also become discontinued operation if it meet other condition. Are you able to understand what I am saying? Means when I am saying has been disposed of, means it has been disposed of either by sale or by way of abandoned. Means we can dispose any operation by leaving it now, by closing it. It is also disposal or not. Means suppose we have one factory. Understood? And we have closed it. That is also disposal. Bolo yes or no? That is also disposal or not? We have abandoned it. So it means we need to understand what is the meaning of abandonment first though. Let me come to the meaning of abandonment. Come to this point. Last point. Non-current asset or disposal group that are abandoned. So we need to understand when an asset or disposal group become abandoned, then only we will be able to understand that. So what they said, any non-current asset or disposal group to be abandoned. Understood? Any non-current asset or disposal group to be abandoned include non-current asset or disposal group that are to be used at the end of their economic life, and non-current asset that are to be closed rather than sold. Understood? Is what they want to say. So, but right now, economic life, you have some property, plant and equipment whose economic life is 10 years. Economic life, economic life is always more than useful life. Economic life means the total life in which we are getting some economic benefit from the asset. But useful life is always either equal to or less than economic life. Means the life of this mobile is 10 years, but useful life may be 4 years only, because after 4 years I will not use it. The useful life and economic life are different. Correct? My question to you are, at the end of economic life, whether there will be any buyer? No. How can I say there will be no buyer? So automatically at the end of economic life, it cannot be sold. It will be automatically abandoned or not. Are we able to understand what I am saying? Just try to understand. Means any asset which reach to its economic life will be abandoned. Abandoned means no future economic benefit. No future economic benefit means will be de-recognized, means disposed of. Are you getting? Correct? Have you understood this point? Correct? So what they are saying, just try to understand. Now come to the meaning. A discontinued operation is a component of entity that is either has been disposed of. So disposed of means by means of sales or by way of abandonment. Means we can close it rather than sold. That will be also disposed of. Correct? Or is classified as held for sale. And if it meets these two conditions, then it will become discontinued operation. Means what they are saying, and represent a separate major line of business or geographical areas of operation and is a part of single coordinated plan. Means simple word, represent one operating segment. That operating segment can be either product wise or location wise. Means that component is an operating segment, not a part of operating segment, is one operating segment. Bole yes or no? So that must be one operating segment, then only so we can find out the profit or loss. If it is not an operating segment, can we find out profit or loss? We can't find out profit or loss from that operation. Correct? Or is a subsidiary acquired exclusively with a view to resale? Or is a subsidiary, can a subsidiary in CFS will be also group of asset which have been acquired with a view to resale. Understood? Correct. So what they are saying, this continued operation is a component which can be either operating segment or subsidiary acquired with a view to resale. If that operating segment has been disposed of, then also it is what? Discontinued operation. If that operating segment is classified as held for sale, then also it is what? Discontinued operation. If that subsidiary is disposed of, then also it is what? Discontinued operation. If that subsidiary which is acquired exclusively with a view to resale is classified as what? Held for sale, then also it is what? Discontinued operation. Now I hope you have understood. What is the objective of this? What is the objective of this meaning is to present the item in SOPL separately. Means what Ind AS 105 says, that require the presentation of single amount in SOPL comprising the total of post-tax profit or loss of discontinued operation and post-tax gain or loss recognized on the measurement to fair value less cost to sale or on disposal of asset or disposal group. Means what they are saying, any gain or loss from that discontinued operation in that year should be recognized separately, should be disclosed separately in what? SOPL. Understood? Correct. So this is only for presentation purpose. Correct. Understood this point? However, we can also this analysis of single amount, profit or loss of discontinued operation means the revenue of discontinued operation, expense of discontinued operation, this become pre-tax profit, then related income tax, this become profit after tax from discontinued operation. Gain or loss on measurement, gain or loss we can calculate, related income tax, this become gain or loss after tax. So these two can be presented as a single amount in SOPL. Correct. Understood. Now reclassification from DCO to CO, it is quite possible. Initially it was discontinued operation, now it become continued operation. Continuing operation means any disposal group which was initially classified as held for sale, now management changes the plan. So from DCO it become CO. Correct now. So what they are saying, if an entity ceases to classify a component of entity as held for sale, ceases means they change the plan. The result of operation of the component previously presented in discontinued operation in accordance shall be reclassified and included in the income from continued operation for all prior period presented also, which will do reclassification in SOPL. Correct now. The amount of prior period shall be described as having been represented or restated. This type of question, but they will not ask. The last point, non-current asset or disposal group that are abandoned. Right. So what they want to say, any non-current asset or disposal group that need to be abandoned, means still not abandoned, that is expected to be abandoned, can I say will not fall in this chapter, because till now that is not abandoned, is outside the scope of this chapter. Correct. Will not qualify to classify as held for sale, because the carrying amount will be principally recovered through use, not from sale. Correct. Any non-current asset or disposal group that are abandoned, are also not covered under Ind AS 105. Any non-current asset or disposal group that are abandoned are also not covered under Ind AS 105. However, a disposal group that are abandoned may meet the definition of discontinued operation if that disposal group is an operating segment. Means if that disposal group is not an operating segment, then it will not become DCO na. Are you able to understand what I am saying? One second. Any non-current asset or disposal group that are expected to be abandoned is not covered in this chapter. अरे बोलना रे. Any why it is not covered in this chapter? Because disposal group means group of assets and liability which are to be disposed of by means of sale, not by way of abandonment. So it cannot be classified as held for sale. Now any disposal group or non-current asset that are abandoned, also not covered in this chapter, but there are some disposal group. Are you reading? There are some disposal group, correct, which are abandoned, may meet the definition of discontinued operation if that disposal group is also an operating segment. Means if that disposal group is not an operating segment, then it will not meet the definition of discontinued operation. So if it meet the definition of discontinued operation, then to the extent of presentation requirement it will be covered. Have you understood this point? Then very special point. Any asset which are temporarily taken out of use. Any asset which are temporarily taken out of use means it become idle for certain period are not abandoned asset, which are temporarily taken out of use are not abandoned asset because it will be used after some year. So will you cease depreciation? You will not cease depreciation. Just try to understand what I want to say. Suppose you purchase property, plant and equipment. Correct? You are using it here. For this period, it is idle. Then once again you started using it. Correct? Then here it become abandoned. Abandoned means what? It cannot be sold. Why? Because economic life becomes zero now. Correct. Understood. Are you able to understand? So can I say, will charge depreciation? Will you cease depreciation यहाँ पर? No. It means you will charge depreciation. Can I say here automatically it will be fully impaired? Fully impaired now. Because when I am saying abandoned, so no future economic benefit. If no future economic benefit, it will be fully impaired or not? Are you able to understand what I am saying? But this is not abandoned asset. Here also can I say it will not be classified as held for sale. Any non-current asset that are abandoned, it is not classified as held for sale. So Ind AS 105 so not attracted only. Ind AS 105 is never attracted. Are you able to understand what I am saying? I think thoda understood. Because one question has been given for this also in your ICAI study material. But have you understood? Correct. Yes, sir. Ind AS 105 completed. Can we take question? On first question, question number 6. On 1 June 2001, entity X planned to sell a group of assets and liability which is classified as a disposal group. Plan to sell. Plan to sell does not mean it become held for sale. Plan to sell. Acha, they have given which is classified. Acha, chalo. Which is classified as held for sale means it become held for sale on this date. On July 31. Acha. On July 31. No. Let us read. The board of directors approve and become commitment to plan to sell the manufacturing unit by entering into firm purchase commitment with entity Y. However, since manufacturing unit is regulated, the approval of regulator is needed for sale. Can I say approval is only a formality? Once we are committed, we will take the approval. Correct? The approval from regulator is customary and highly probable to receive by November 30. This sale is expected to complete within 1 year. It is expected to complete by 31st March. So all conditions satisfied on July 31. So July 31 will be the date where it will be classified as what? Held for sale. The assets and liability. They have given carrying amount as on 31st December and carrying amount as on 31st July. Okay, this is not relevant. Only this is relevant. Correct. Then the fair value of manufacturing unit on 31st December 2000. Okay, this is not relevant. And also July 31 is 1850. This is relevant. The cost to sell is 100. So can it become 1750? So what is the fair value less cost to sell? This become total carrying amount. Total carrying amount become 2600. What is the fair value less cost to sell? What is the impairment loss? But it will be first allocated to whom? So to which? Goodwill. 500 allocated to what? Goodwill. Balance what? 350. 350 will be allocated to what? Plant and machinery and building and what? And balance will be allocated to plant and machinery and building and what? And nothing, na? And nothing? In which ratio? In this ratio. Can I say you can do it? Very easy. They have asked 3 points. Assess whether the manufacturing unit can be classified as held for sale and reason therefore. If yes, which date? I hope you can do it. Give that 2 conditions. Then analyze it and then give comment. Why 31st July? Then measurement of manufacturing unit on the date of classification. Already we have done. The measurement of manufacturing unit at year end. You can see in this question, they have not given any information at year end. But I like to explain you. Can you see? At year end means 31st December 2001. Can you see goodwill automatically become nil? Plant and machinery, now no amortization, it will remain same. I am taking the solution, say after impairment loss, this is the carrying amount. So can you say this will be now not amortized? Then building, it will come how much? 1615. 1615. Can you say other asset and liability? We will need to find out carrying amount by applying respective Ind AS. You can't say same, huh? You can't say same. You can't say same. Means on 31st December, it might happen debtor is collected. It becomes 0, na? You need to apply what? Respective Ind AS, which information is not given. So we can find out the carrying amount. Then again find out what? Fair value less cost to sale. Then again compare. If reduced, then further it will be allocated to what? These 2 assets. Are bolna rahi? If suppose fair value less cost to sale is less than this, it is further impairment loss. Further impairment loss will be allocated to these 2 in the ratio of their carrying amount. This is only given. If you want to read the answer. They have given same thing in the para format. Understood? Correct. Let me take one more question. S Limited purchased the property of 6 lakh on 1st April 2001. The useful life of the property is 15 years. On 31st March 2003, S Limited classified the property as held for sale. Means will charge depreciation for how many years? 2 years. The impairment testing provide estimated recoverable amount. Just try to understand. On one date, first date, means everyone. This is the date of classification. Correct. So we need to find out carrying amount. Carrying amount means what? If you know carrying amount as per Ind AS 16, it means cost price less accumulated impairment loss. Means can I say on this date, first we need to find out carrying amount by applying what? Ind AS 36. Then apply what? Ind AS 105. Bolna yes or no? So even though it is classified as held for sale, first apply what? Ind AS 36. Then apply what? Ind AS 105. It is quite possible that value in use is more than fair value less cost to sale. So Ind AS 36 we take recoverable amount. Ind AS 105 we take fair value less cost of disposal. So there is a difference between Ind AS 36 and Ind AS 105. So what they have given? You can see they have given recoverable amount. Means this is as per Ind AS. Then on the same day they have given fair value less cost to say 4,60,000. Means it is understood this is value in use, na? This is value in use. On 31st March, management changed the plan. And now it is no longer classified as held for sale. Now the recoverable amount is 5 lakh. Value the property at the end of 2003-2004. Good question, I will say. Good question, na? Batao. What is the first initial cost? Cost is what? Then first we'll charge depreciation for how many years? So 6 lakh divided by 15 into 2. How much? How much? So what is the carrying amount? 5 lakh 20. First we'll compare with recoverable amount. What is the recoverable amount? 4 lakh 70. How much impairment loss? We will say 50,000. What is the carrying amount now? 4 lakh 70,000. Now once again we'll apply Ind AS 105. We'll compare with 4 lakh 60. It becomes 10,000. So this is impairment loss as per. This is impairment loss as per Ind AS 36. How much it become? 4 lakh 60,000. Correct. Understood. Now which date came? 31st March 2000. This was 31st March 2003. Now we need to go to 31st March 2004. But the 1 second will charge depreciation how much? No depreciation. No depreciation. No depreciation. I am asking depreciation. Does not mean you will calculate it. No depreciation. Now once it is classified as held for sale, is ref depreciation. No depreciation. But now they change the plan. So can you say carrying amount as on 31st March 2004 is 4 lakh 60 only. But now change the plan. So now it will be valued at what? No. Lower of A and B. Forgot. B was recoverable amount. What is recoverable amount? 5 lakh. But A was what? If the asset was not classified as held for sale, what would have been the carrying amount? My question to you all, you will take which amount? Means you will start from where? You will start from 5 lakh 20, ki 4 lakh 70, ki 4 lakh 60. Have you understood what I am saying? Very good. We will start from 4 lakh 70. After applying impairment loss as per Ind AS 36. And on 4 lakh 70 will charge depreciation for how many years? 1 year. We will say 4 lakh 70 depreciation for 1 year is 4 lakh 70. What is the remaining useful life? 13 years. How much? 36,154. So what is this? So whichever is lower. What is lower? We will take this into consideration. What was our original carrying amount? 4 lakh 60. Now we want how much? This. So will decrease. How much decrease? It will be transferred to PL. How much decrease? 26,154. Now it will become what? 4 lakh 33,846. And this will be charged to what? PL. Now can you say again in this we'll apply Ind AS 16 only? We'll recommence Ind AS 16. Are we able to understand? Ind AS 105 over. Have you understood this point? Same answer we got, na? Correct. So we'll take lunch break, but after lunch break, what we are supposed to do? We'll take 30-minute break, okay? 30 minutes chalega? 30 minutes? Okay. We'll take 30-minute break, but after break, what we'll do? One is what? 33, then 24, then 101, then 113 will not take much time. PSR will not take much time. Analysis, I don't know. This 24, this and this. These two can be completed in 1 hour. 101, I think 1 hour it will take. Less than 1 hour. It will take, is this two, I think 2 hours. So 3 hours. Means We can complete all this in, what about analysis? Let's see. Correct now. Let's see. Okay, after break we'll decide. Okay? Hello. We'll take break. Hello. Can we start once again, everyone? Now, let us start in day 33. Earning per share. Now, we all know that earning per share is required to be disclosed on the face of SOPL. Now, earning per share of two type, basic and diluted earning per share. So first let us discuss basic earning per share. You all know basic and diluted earning per share, correct? Now, basic earning per share, what is the formula? Formula is net profit or loss attributable to equity shareholders divided by the weighted average number of equity shares outstanding during the period. Means, can I say for this, numerator and denominator need to be identified. So in this Ind AS 33 we will discuss how to calculate numerator, how to calculate denominator. So let us first come to numerator. Numerator is what? Profit or loss attributable to ordinary equity holders. Correct? Yes, sir. Now we will start with profit or loss attributable to owner of parent company. Now what is the meaning of attributable to owner of parent company? Just try to understand, everyone. Whenever we prepare CFS, whenever we have prepared CFS, so can you say first we will have PL, then we will have OCI, then we will have total comprehensive income. Now out of PL, some portion will be attributable to owner of parent company and some portion will be attributable to NCI. So this amount, this amount, this amount, this amount, this amount, this amount. Correct now. Now the question is that when I am saying profit or loss attributable to owner of parent company, so which amount should be the starting point to calculate numerator for basic earning per share? So it will be this amount. This is the profit or loss attributable to what? Owner of parent company. Means will not consider OCI, will not consider total comprehensive income. Of course, this will not be considered. We'll start with the profit or loss attributable to owner of parent company. But what is the objective? Objective is to calculate profit or loss attributable to equity shareholders of parent company. Now doubt will come, so what is the difference between owner and equity shareholders? Now just try to understand. When I say owner, owner means all equity participant. All equity participant means it will include irredeemable preference shares also. All types of preference share which has been classified as equity, correct now, or any other equity component, it will include all other owner also. But the objective is to get profit or loss attributable to equity shareholder. Therefore some adjustment is required. So first adjustment what we'll do, we'll deduct dividend for cumulative preference shares and dividend for non-cumulative preference shares. Understood? So it means, can you say we will deduct preference dividend for cumulative and non-cumulative preference shares. Now the question is that this is which preference shares? Now there are two types of preference shares which has been classified as liability and which is classified as equity. So we are discussing about which preference shares? Means dividend for which preference share? Dividend for preference share which is classified as equity. Can I say any redeemable preference shares? Now we calculate dividend expense by applying EIR, which is already charged to what? PL, which is already charged to PL. It means right now we are discussing about those preference shares which have been classified as equity. Understood? Yes, sir. So preference dividend for cumulative preference shares will be deducted whether dividend has been declared or not declared. Understood? Means irrespective of declaration. But preference dividend of non-cumulative preference share will be deducted only when it is declared. Why? Because if it is not declared, it will be permanently withdrawn. Permanently withdrawn. Understood? Then we will also adjust any gain or loss on settlement of preference shares. On settlement of preference share, once again, which preference share which is classified as equity? Means right now we are discussing not about those preference share which has been classified as liability, because their settlement gain and loss already charged to PL. Correct. So any gain or loss on settlement of preference shares which has been classified as equity. Correct. Understood. So any gain will be added, any loss will be deducted. Correct. Then we'll do less amortization or discount or premium on increasing rate preference shares. Increasing rate preference shares. However, from my point of view, they will not ask this question, but they may ask also. Amortization of discount or premium on increasing rate preference shares. So we need to understand what is the meaning of increasing rate preference shares. So hold for some minute, I will discuss. Then last point is what? Any expense or loss adjusted against securities premium or other reserve which is otherwise adjusted against PL. If you know, there is one expense, preliminary expense. As per Companies Act, it can be written off against premium. But can you see it should be charged to PL only as per what? Ind AS 38. So suppose any entity has written off such expense from premium, so can you see we should deduct while computing what? While computing EPS from PL only. So this expense, any expense which is charged to what? Premium, which is otherwise charged to what? PL, should be also deducted, but it will be deducted net of tax. Always deduct net of tax. Net of tax means after adjusting tax. Understood this point? The resultant figure will be profit or loss attributable to ordinary equity shareholders of parent company. Now only I need to discuss this point. What is the meaning of increasing rate preference? Yes. What is the meaning of increasing rate preference shares? You can see increasing rate preference shares is the next point. Any preference share that provide for a low initial dividend to compensate an entity for selling the preference shares at a discount. Means if any preference shares are issued at discount, there is a loss for company. So that will be compensated by payment of either low or no dividend for initial year. Understood? These are known as increasing rate preference shares. Or we can say preference shares that provide for above market dividend in the later period to compensate investor for purchasing preference shares at a premium. So suppose preference shares are issued at premium, it is a loss for investor. So they will be compensated by providing higher dividend at a later period. This is known as what? Increasing rate preference shares. Means for example, we have issued 10% preference shares at a discount of 10%. So it might happen year 1, year 2, year 3, no dividend. But dividend will be given from year 4. So what Ind AS 33 says that accounting treatment done as per Ind AS 32 or Ind AS 109 means we are not discussing accounting treatment. For the purpose of calculating EPS, this is the discount, whatever has been given is nothing but imputed dividend for these 3 years. Means if the discount would have not been given, then we would have given dividend now. So that discount whatever has given is nothing but imputed dividend of first year, second year and 3 year. Therefore that dividend should be deducted to calculate EPS. Are bolna re? Means accounting treatment, suppose this is 1 lakh and discount is what? 1 lakh, 10,000. So as per Ind AS 32, these preference shares will be accounted initially at 90,000 and this 10,000 will not come in PL. Are you able to understand what I am saying? But can you say what is this 10,000 is nothing but in relation to dividend only. If the discount was not given, then what was given? Dividend in first year, second year and third year. Therefore this discount should be amortized in year 1 and year 2 and year 3, and the amortization of such discount will be deducted to calculate numerator for calculation of EPS. Have you understood this point? For that I have taken one example. Suppose they ask, entity D issued non-convertible, non-redeemable Class A cumulative preference share of rupees 100 par on 1st Jan 2001. The Class A preference shares are entitled to cumulative annual dividend of 7 per share starting from 2004. At the time of issue, the market rate of dividend yield on Class A preference share was 7% per annum. Thus, entity D could have expected to receive a proceed approximately equal to 100 per Class A preference shares if the dividend rate of 7% has been in effect from the date of issue. In consideration of dividend payment terms, however, the Class A preference shares were issued at 81.63, that is a discount of 18.37. The issue price can be calculated by taking present value of 100 at 7% for 3 years. So if you calculate present value of 100 at the present value of 100 for 3 years at 7%, so what will come? 81.63 will come. That is nothing but difference discount. Because the shares are classified as equity, the original issue discount is amortized to retained earning using effective interest method and treated as preference dividend for earning per share purpose. Means they have given this answer only. Calculate the amount of imputed dividend per Class A preference shares which deducted to determine the profit or loss attributable to ordinary equity shareholders of parent entity. Understood? Means simply what will do? 81.63. Now 7% will be what? Effective rate of interest. So if you find out 7%, first year will be this. Then dividend payment is nil. Then this become 87.34. Then second year once again this we can calculate this. So this is nothing. The total is nothing but discount. Just check it. And this will be considered as a deduction from numerator to calculate numerator. Understood? So this is amortization discount for increasing rate preference shares. Understood? So this type of question may come. Have you understood this point? But this is imputed dividend. Imputed dividend. For equity we never use amortization table. For equity there is no subsequent amortization. For equity there is no subsequent amortization. This is the financial liability now. But we are assuming that if suppose we prepare effective amortized cost method, what would be my dividend cost? By applying the same rate of interest. Understood? Have you understood? Yes, sir. Correct. So I hope now you have understood what? Numerator. Now let us come to denominator. Weighted average number of ordinary shares outstanding during the period. Can you see, you all know weighted average number of shares? We need to give time weight for the number of days the equity shares has been used throughout the year. If it has been used for 35 days, we'll do 35 by 365. It has been outstanding for 3 months, we can do 3 by 12 like this. Yes, sir. Now, next point. If you come to issue number 1, partly paid up shares. So there may be some partly paid up shares. So whenever there is a partly paid up shares, how to calculate weighted average number of shares? So whenever there is a partly paid up shares, what Ind AS 33 says that you need to calculate equivalent number of fully paid up shares, and weight should be given for equivalent number of fully paid up shares. So we should convert partly paid up shares into equivalent number of fully paid up shares, and that fully paid up shares should be used to calculate weighted average number of shares. Let me take one question. Come to this example. Example given, calculate basic earning per share. On 1/4/2006, equity shares of rupees 10 is outstanding. 30th September 2006, issue equity shares of rupees 10 each. Rupees 6 paid up. And 1/1/2007, call of rupees 2 on that 10,000 shares. Earning is given 3 lakh. So how to calculate what? Earning per share. So in this case, what we'll do? Earning per share will be equal to what? What is the numerator given? Numerator given 3 lakh. How many equity shares are outstanding at the beginning? So we'll do 20,000 into 12 by 12 plus how many equity shares partly paid up shares? 10,000. How much you have received? 6. So you need to convert into what? So what will do 10,000 into 6 by 10? It means 6,000 fully paid up equity shares. Then outstanding for how many months? It was issued on 30th September. Means we'll do 6 by 12. 6 by 12. Have you understood this point? Have you understood this point? Correct. Then again we receive 2. So we'll do plus 10,000 into what? 2 by 10. Outstanding for how many months? 1 month. So it is 3 by 12. So of course we can calculate what? Earning per share. Understood? Understood. Correct. Now, if you see the topic, it is partly paid up share with dividend right. Normally partly paid up shares are also entitled dividend, and therefore it will be considered to calculate basic earning per share. But sometime due to restriction of AOA, it might happen they are not entitled to dividend unless they become fully paid up. So if there are some partly paid up shares without dividend right, then it will not be considered for basic earning per share. Then it will be considered only for calculation of diluted earning per share. Why? Because can I say it will be just like potential equity shares, which will be entitled to dividend when it's become fully paid up. So any partly paid up shares without dividend right will not be considered for calculation of basic earning per share, will be considered for calculation of diluted earning per share. But if question is silent, always assume they are entitled to dividend, and therefore no question have been given in ICAI study matter regarding this. Then different class of equity shares. Can I say we may have different class with different face value? Then how to calculate EPS? So same concept will be applied. Different class of equity shares will be first converted into same class, same equivalent class. So if I take one question, suppose this question if I will take XYZ Limited has the following different class of equity shares. You can see rupees 10, rupees 50, rupees 100, 20,000, 10,000, 5,000. It become 5 lakh is earning. How to do? So earning per share will be equal to 5 lakh divided by. Either we can convert into 10. Either we can convert all equity shares or class into rupees 10 class or rupees 50 class or rupees 100 class. So let us convert into what? 10 class. So what we'll do? 20,000 into 12 by 12 plus what? 10,000 into 50 divided by 10 into 12 by 12. Then what? 5,000 into what? 100 divided by 10 into what? 12 by 12. Understood? Now whatever EPS will come, that will be of rupees 10. So we should also convert, suppose this is X amount. You can calculate it. Correct. Now we should also disclose EPS for rupees 50 and EPS for rupees 100 also. So what we'll do? X into 50 by 10 and X into 100 by 10. So we can calculate EPS for equity shares of 50 rupees and EPS for what? Equity shares of rupees 100 rupees. So what India says that we should disclose EPS for each class. EPS for each class. So we can easily calculate. Are we able to understand now? Only mathematics. Understood? Yes, sir. Next. Coming to participating equity instrument and two class ordinary shares. Sometimes there are participating preference shares. The participating preference shares will enjoy some surplus profit In that case, how to calculate EPS? Let me take one question. This is only question, then solution. Correct? Understood? So profit attributable to equity holder is 1 lakh. Ordinary shares outstanding 10,000. Non-convertible preference shares 6,000. We need to assume this is what? Equity now. Classified as equity. Understood? Yes, sir. Non-cumulative annual dividend on preference shares 5.5. After ordinary shares has been paid, a dividend of 2.10 per share. After ordinary shares has been paid, a dividend of 2.10 per share. After ordinary shares have been after ordinary shares have been paid a dividend of 2.10, means this become equity dividend. The preference share participate in any additional dividend on 20:80 basis, means preference shares are entitled to 20 and equity shares are entitled to 80 on surplus profit. So how to calculate EPS? In this case, what we'll do? First, we'll calculate surplus profit. I have a solution. So how much profit given? 1 lakh. From this, we deduct preference dividend. Preference dividend how much? 6,000 into 6,000 into 5.5, how much? 33,000. Then from this we deduct equity dividend. That is how much? 10,000 into how much? 21,000. How much balance left? That becomes surplus profit 46,000. Again, this is allocated to preference dividend, preference shares and equity shares. So we need to first find out, let additional equity dividend per share be X. So what is the additional preference dividend per share? Can you see this will be X by 4? Is given 20:80. So 1:4. This is X. This is X by 4 now. Or better we can say in this way. Chalo easy kar dete. Let additional preference dividend be X. What is the additional equity dividend? 4X. Let us do in this way. Now X into 6,000, correct? Plus 4X into 10,000 will be equal to what? 46,000. Can you find out X? What is X? 1. So X is equal to 1. So means preference dividend is 1. So what is equity dividend? 4 rupees per share. So additional preference dividend is 1. Additional equity dividend is 4. So what is the basic earning per share? Preference shares, equity shares. So it was initially how much? 6 point? How much fixed? 6 point? What was fixed dividend? 5.5. Fixed dividend is 5.5. And for equity how much? 2.1. Correct. We'll add 4 in this. We'll add 1 on this. Become 6.5. This become 6.1. So this become earning per share. This become earning per share. Understood? Have you understood this point? This question is given in ICAI study material, till now not asked. Can be asked in exam. Can be asked in exam. Okay. Next point. Then changes in the number of shares without changing the value of capital. Means can you say it is nothing but a best example is bonus shares. When number of shares increase without changes in paid up capital or changes in resource. Correct now. Means there is no changes in the value of capital, but what will change? number of shares. The best example is bonus shares. However, can you say split share can be also one example? Split shares means what? Increase in shares without changing capital. And the second best example is what? Reverse share split means consolidation of shares. Consolidation of shares means decrease in shares without changing paid up capital. Understood? In this case, whenever there is a changes in number of shares without changing capital, what Ind AS 33 says that weight should be given from the beginning of previous year. Means whenever there is a bonus share, weight will be given for 12 months. And we need to restate previous year EPS. We need to restate previous year EPS. Understood? So weight will be given for what? Irrespective of date of allotment. Irrespective of date of allotment. And previous year EPS need to be restated. Understood? Let me take one question. Calculate earning per share. Number of equity shares outstanding 20,000 on 1st October 2002 means next year. A bonus of 1 equity shares for 2 equity shares means 1:2 means 10,000 bonus shares. Outstanding was given. Net profit of previous year 5 lakh. Net profit of current year 6 lakh. Means this is previous year, this is current year. Previous year EPS will be what? 5 lakh divided by what? How much? How much? 25. Current year EPS will be what? Divided by what? 20,000 from the beginning, and 10,000 weight will be also given from the beginning only. Is 12 by 12. So bonus shares always weight will be given for 12 months. How much? 20. But in this current year, we will also restate what? Restate EPS of previous year, and restatement will be 5 lakh divided by 20,000 plus what? 10,000 means how much? 16.67. Understood? Simple. We will restate EPS of previous year in current year financial statement. In current year financial statement. Then this you have understood. Next, issue number 6. Equity shares issued at inadequate consideration. Only one example we have: right shares. Any equity shares which are issued at inadequate consideration. Example is what? Right shares. Now what Ind AS says that for the purpose of EPS, right shares are of two. Right shares have two components. One component is known as paid element. One component is known as what? Bonus element. We suppose we have issued a right share, 10,000 right shares at rupees 15, even though fair value is 25. These right shares are issued always at a price lower than fair value. So what they want to say, if there are some component for which we have already received what? 25. So we need to find out number of shares which are deemed to be issued at what? Fair value. So what we'll do? 10,000 into 15 divided by 25. How much? Means out of 10,000, entire consideration was received for 6,000 only. You can see 10,000 into 15, how much consideration we have received? And 6,000 into 25 is what? 15,000 only. Means entire consideration whatever we have received is for 6,000. Means 6,000 has been issued at fair value. Correct. So balance number of shares will be deemed to be issued as bonus shares. So that will be 10,000 minus what? 6,000, that is equal to what? 4,000. Means, can you say any shares which are issued at fair value, weight will be given from the date of right issue. Means for this, will give weight from the date of right issue. But for bonus element, will give weight for 12 months. And previous year EPS will be restated. So for bonus factor, we need to give weight from the beginning of previous year. Beginning of previous year means beginning of current year. And previous year EPS will be restated. Understood? Only in this we need to understand how to calculate this fair value. So what India's 33 says that this fair value is what is known as theoretical X-right fair value. We'll call it theoretical X-right fair value. This fair value is nothing but intrinsic value. And intrinsic value after right. After right means X-right. Therefore, we call it theoretical X-right fair value. Why theoretical? Because this is not equal to market price. We are theoretically computing it. So we are not taking the market price. We are taking theoretical value. Theoretical X-right fair value. So how to calculate it? So what they say, this will be calculated as free-right fair value of shares plus right issue proceeds divided by what? Number of shares after right. So can this become theoretical X-right fair value? So if you can calculate this, so can you see you can calculate this, and if you can calculate this, you can calculate this. Once you have identified this 6,000, 4,000, you can calculate EPS. Understood? Same thing you have done in CA Inter. No changes. No changes in CA Inter and CA Final up to this point, huh? Correct? So what they have said. Let us take one example to explain. Calculate earning per share, net profit of previous year 5 lakh, net profit of current year 7,50,000. Number of equity shares outstanding is what? 2 lakh. On 30th September 2006 means next year, issue right shares, 1 new shares for each 4 shares outstanding. Means how many right shares? 50,000 right shares. 1 by 4. 1 by 4. 1 by 4 na? 50,000. 2 lakh into 1 by 4. No, number. How number? Number of equity shares. Correct? Are you able to understand? Now, right issue price 23 and fair value of 1 equity share immediately prior to exercise, what 30 means they are given pre-right fair value per share to calculate X-right fair value. So let us first calculate what we'll do. We'll first calculate theoretical X-right fair by using this formula. So what will be the theoretical X-right fair value? What is the total number of shares before right? What is the pre-right fair value? Plus how many shares issued? What is the right issue price? Divided by what? 2,50,000. This is how much? How much? 28.6. This become what? X-right fair value. Now we'll find out paid element. Paid element means what? Number of shares deemed to be issued at fair value. So it will be 50,000 into 23 divided by what? 28.6. How much? 40,210. Then we'll find out what? Bonus element. Bonus element will be 50,000 minus what? 40,210. How much? 9790. For this weight will be given for how many months? But the date of right issue was 30th September. Means 6 months. For this weight will be given for how many months? 12 months. You can easily calculate. But the current year EPS will be what? 7,50,000 divided by what? 2 lakh shares outstanding from the beginning plus 40210 outstanding for how many months? And 9790 outstanding for 12 months, means not outstanding, but weight will be taken from 12 months. Understood? Now we need to restate previous year EPS. Previous year EPS will be restated. What is the profit? 5 lakh. How many shares outstanding at the beginning of previous year? 2 lakh into what? And this bonus effect will be given 9790 into what? 12 by 12. This is the restated EPS of previous year. Understood? Only bonus effect. This effect will not come. Only the effect of bonus will be given in previous year EPS. Restated. Chalega? Understood this point? Any doubt? No doubt? Then this much I hope you have understood. Any shares which are issued in business combination, weights to be given from the date of acquisition. From the date of acquisition. Correct. Coming to diluted earning per share. Can I say basic earning per share you understood? Any doubt in basic earning per share? Any doubt in basic earning per share? Basic earning per share was very easy. Because that is same to same what you have done where? In CA Inter. No change. Now coming to diluted earning per share. Then diluted earning per share is calculated only when entity has potential equity shares. What are potential equity shares? Potential equity shares are financial instrument. Now you know what are financial instrument? Or any other contract. Any other contract which are not financial instrument. For example, business combination contract. In business combination contract, we have contingent consideration which can be settled in equity shares. So, potential equity shares are or any other which may means what? Either compulsory or optionally. Either compulsory or optionally. Entitled equity share to his holder. So it become what? Potential equity shares. Means can I say example is convertible debenture, convertible preference shares, any option including ESOP. ESOP is also what? Which may entitle equity shares to employee. Correct. And share warrant. It may also include share warrant. However, from examination point of view, if I concentrate and discuss 4-5 points, if I cover 4-5 point, examination point over. First, can you say whenever there is a potential equity shares, now the formula will be what? Diluted earning per share will be adjusted numerator divided by adjusted denominator. Means whatever numerator you have calculated for basic earning per share should be adjusted for the effect of potential equity shares. Similarly, we need to adjust the denominator for the effect of potential equity shares. Let me take one example to explain what is the effect. Come to very simple example. Example number 14. Equity share outstanding at the beginning 1 lakh. On 1/4/2017, 6% convertible debentures were issued at rupees 10 lakh, which will be converted into 1 lakh equity shares of rupees 10 is after 5 years. Market yield rate of interest of similar debenture without conversion right is 10%. Means this is what? Compound financial instrument. And this is what? Potential equity shares. Accounting will be done as per what? For compound financial instrument, accounting is done as per what? Accounting will be done as per India's 33 or other India's? India's 32 and 109. Treating, subsequent accounting. Accounting, EPS, two different aspect. EPS calculation is not accounting. EPS is a ratio. Are you getting what I am saying? The net profit attributable to equity shares 10 lakh. Correct. Now, can we first calculate basic earning per share? Okay, basic earning per share very easy. They have given net profit how much? 10 lakh. And divided by number of shares outstanding how much? 1 lakh. This is what? Now we'll calculate diluted earning per share. Diluted earning per share. The numerator will be affected. Denominator will be affected. Now due to conversion, everyone, I am just asking you need to answer. Due to conversion of potential equity shares into equity shares, how many shares will be increased? Convertible debenture holders are entitled to how many equity shares? 1 lakh na. So how many? Due to conversion of potential equity shares into equity shares, 1 lakh equity shares will increase. Debentures outstanding from the beginning, so this will be also outstanding from the beginning. Now due to conversion of debenture into equity shares, whether profit will be affected? Yes. Now what will not be allowed? Interest. So now if interest not allowed, so my earning to equity shareholders will increase. So we'll add back what? Interest. How much interest? How much? Interest expense, interest income will be calculated by using what? I have given custom to you. Then also you are saying 6%. But the interest income and expense will be calculated by using what? What? What custom I have given? Forgot that custom. गाना है कसमे वादे is one song. भूल गए? अरे बताओ, interest will be calculated by applying EIR ना? So why you are taking 6%? I have already given one hint. Accounting is done as per that India's EPS something different. Understood? You have done now. 2-3 days before only. Correct? Are you able to? What will happen in exam? Exam is after 2 months. 2 months, na? 1 month only left. This is what? Today is what? Exactly 1 month is left. Oh ho. Chalo, near time, so you will not forget. 2 months will be wide gap, na? Okay. Chalo. 1 month you will not forget na. You don't have short-term memory loss na. No short-term memory loss. Long-term memory loss chalega. Correct na. Not there should not be any. And 2 days before we are doing, you have super short-term memory loss, huh? And I have given kasam also. Acha. One thing. Let's see whether you are doing mistake or not. It will be 10% or 6%. Means interest will be calculated by applying 10% or 6%. Where 10% is EIR. Hmm? When? If there is no transaction cost. There was no transaction. There is no transaction cost. We can take 10%. But the 10% on what? 10% on what? 60,000. 10% will be calculated on what? Oh my God. 10% of what? Full forgotten. 10% of liability component. 10 lakh is proceed received. First you need to split into liability and equity component. Full split. EU. I have already said this is compound financial instrument. Compound finance, first split it. Split in liability and equity component. Liability component will be different. 10 lakh is total liability component. अरे बोलना रे. I will become pagal. अरे बोलना रे. This is nothing but no, nothing to worry. Nothing to worry. First thing, nothing to worry. Nothing to worry. Why nothing to worry? Why nothing to worry? I will say. Every student is same. Correct? Even I am sitting now and you are here. I am also student. All students are same. I always say exam day is important. What is important? Exam. Don't panic. Don't panic, huh? Even though I scold you, I say everything to you. You don't know anything. You don't know. Suppose I said, then also nothing to worry. What is coming? The performance day is coming, huh? You need to perform on that day. Are you able to understand what I am saying? Don't worry. Even though you are not able to answer now, nothing to worry. Just make sure that how you are using the remaining month. That is crucial. Are you getting what I am saying? In this next 1 month, this next whatever remaining days will decide how you are performing in exam. Understood what I am saying? Nothing to worry. I always say everything will be good once we start understanding the fact that we should not panic in any situation. It means, can I say first we need to complete it? अरे बोलना रे. Not working. 1 minute. Now, everyone, can I say first we need to split what into liability and equity component? So we need to find out fair value of liability component. So we need to first find out present value of interest component by discounting by using what rate? 10%. So 60,000 you can calculate. then whether principal amount will be taken or will not be taken. It is compulsory or optionally? Compulsory converted or optionally convertible? Compulsory. The principal amount will you take or will you not take? There is no obligation to pay principal amount. The principal amount is nil. So this will become your liability component. On this you will calculate interest expense by applying what rate? EIR. What is EIR? 10%. So your interest expense will be how much? 22,740. Understood? Have you understood? In exam, everyone, in exam, listen, it has been seen as per ICAI question and previous past year exam question, they don't give market rate of interest. Means, कौन बोले उनको? Means they don't know anything. Means if they are asking this type of question, they should give market rate of interest or not. And if they are not giving market rate of interest, so I will say question is wrong. Can you assume market rate of interest in exam? How can we assume? And if we will assume that they will not give marks. So what they are doing? In that case, they are assuming contractual rate of interest is market rate of interest. And they are calculating on what? Whatever you have said, 6% of what? 10 lakh. Means by default your answer become correct. Sometimes जादू होता है. Are you able to understand what I am saying? Means if they have not given market rate of interest, they should die na. अरे बोलना रे. Are you able to understand? So they, as per some question in ICAI study material and some question whatever has been asked in exam, so can we conclude in this way? If for this particular para, if they have not given market rate of interest, so we'll calculate interest expense by applying contractual rate of interest on entire amount, because we can't split. If they have not given market rate of interest, can you split? You can't split. We don't have any other option. We'll do 6% 10 lakh by without giving a note. What note will give? Question is wrong. Understood? Have you understood this point? But if everything is given, in some question they have given, huh? In some question they have given. Are you able to understand my emotions? Correct. Yes, sir. Now how to calculate? So can diluted earning per share will be what now? You only say. What is the interest expense we calculated? So it will be added what? We'll add 22, 7, 40, whatever. This much. But can you see, because this is after tax, this should be also after tax. So we'll do net of what? Tax. What is the tax rate given? How much? So it will be 70%. Understood? Then you can calculate it. I hope you have understood. Any doubt? Any doubt in this? This calculation you can do. Don't calculate. You have calculator, you can do it this. Divide you can do now. Multiply you can do if you have calculator. Okay? I am not focused on amount. I am focused on concept. Have you understood this point? Yes, sir. Correct. Now, this is very important because now they have given one question on this. What they want to say? Potential ordinary shares shall be treated as dilutive when and only when their conversion to ordinary shares would decrease earning per share or increase loss per share. Means any potential equity shares will be considered as dilutive if their conversion will decrease profit, decrease earning per share or increase loss per share from continuing operation. Oh, acha. From continuing operation means what they want to say, to find out whether potential equity shares are dilutive, your benchmark profit should be which profit? From continuing operation. Is what they want to say. Potential equity shares are anti-dilutive when their conversion to equity share would increase what? earning per share from continuing operation or decrease loss per share from continuing operation, and they want to say to calculate diluted earning per share only consider dilutive potential equity share, do not consider anti-dilutive potential equity share. Have you understood this? Means let me take one question. Example number 16. You can see they have given profit from CO. CO means, then loss from DCO. DCO means number of equity shares outstanding, number of potential equity shares outstanding, calculate basic and diluted earning per share. So what they want to say, whenever there is a potential equity share, first do test for dilution. Test for dilution. And for testing, the benchmark profit is what? Profit from continuing operation. So first we will calculate EPS from continuing operation without conversion of potential equity share into equity shares. Then it will be what? What is the profit? 5 lakh divided by 10,000 is equal to 50. Then we will calculate EPS from continuing operation with conversion. So with conversion it will be 5 lakh plus 10,000 plus how much potential equity shares? 2,000. Whenever question is silent about the numerator effect, means whenever question is silent, how much income is entitled to potential equity share, will always assume 0. Will assume 0, no effect in what? Numerator. So now it will become what? 5 lakh divided by 12,000 is equal to what? 41.67. It decreases. Decreases means this potential equity share is what? Dilutive. If they are dilutive, it will be considered for calculation of what? Diluted earning per share. Are you able to understand what I am saying? Means in this case, how to calculate earning per share? Basic earning per share and diluted earning per share. So what India says that whenever there is a continuing and discontinued operation, calculate EPS for continuing operation, then for discontinued operation, then for total operation also. All these three are required to be disclosed as per the requirement of Schedule 3 also, as per the requirement of Ind AS 33 also. Means this will be what? This will be 50, this will be 41.7. Now DCO, what is the loss? We will say 15 lakh divided by what? 10,000 means 150 negative. This will be 15 lakh divided by 12,000, 125 negative, and then total. Total is a 10 lakh loss. Total is 10 lakh loss now. So 10 lakh divided by 10,000, how much? 100 negative, and this will be what? 10 lakh divided by 12,000, 83.33. Have you understood? Have you understood this point? Have you understood this test for dilution? Means while testing we only consider what? Profit from continuing operation. They could just try to understand. If you would have taken total profit, so you can see your loss per share decreases. Loss per share decreases means it is anti-dilutive. Loss per share decreases means profit is increasing now. Sorry, my mistake. What I'm saying. Sorry. No, sorry. A minute. This decreases. हाँ ठीक तो बोल रहा हूँ. Loss per share decreases ना. So loss per share decreases. When loss will decrease? When profit will increase? So it become anti-dilutive now. So if you take total operation into consideration, then this become anti-dilutive. However, you will take only what? Profit from continuing operation to cross check whether it is dilutive or anti-dilutive. Why? Because dilutive EPS means future EPS. In future, there is no discontinuing operation. So why you are considering it? When I am saying diluted earning per share means in future it will be converted now. It is a future EPS. In future there is no discontinuing operation. So it should not be considered. Understood? Let me take one more question. Suppose same example. Now they have given loss from continuing operation and profit from discontinued operation. Same question. In this case also, Pada, you will take what? First you will do testing. You will take which profit? Continuing operation. So EPS from continuing operation without conversion will what? What is the loss? 15 lakh is the loss. Divided by what? 10,000. It will become 150 negative. Then you will take EPS from continuing operation with conversion. It will be 15 lakh divided by 12,000 now. 12,000 now how much it is coming? 125. So you can see loss decreases. So now it become what? Anti-dilutive. Anti-dilutive, so do not consider it for calculation of diluted earning per share. Means in this case, what will be your basic and diluted earning per share? So first, from continuing operation, it will be 150 and 150 only. Means you will not consider 2000 for calculation of what? Diluted earning per share. Means you will take 10,000 only. Are you able to understand? This question they have given in new revised study material till now not asked. Have you understood this point? From discontinued operation there was a profit. Profit how much? 5 lakh. 5 lakh to 50. 50. And total operation it will be 100. 100. Means in this case both will be same. Understood? Have you understood dilutive, anti-dilutive? So to find out potential equity shares are dilutive or anti-dilutive, you will take which profit into consideration? Profit or loss from continuing operation. Understood? Yes, sir. This is also understood. Now option warrant, this is also very important. I think the last topic which is important. Other topic, they are not asking any question on that. I will discuss one point. Yeah, one point is important. Yeah, let us discuss options and warrant. Now, you know options. The best example of option is what? ESOP. Correct. Now, what they want to say? These options are dilutive if average fair value is more than what? Exercise price. Means can I say this will dilutive means the number of shares will increase when employee will exercise the option. Employee will exercise the option when market price is more than exercise price. If market price is less than exercise price, they will not exercise. So can I say it will become dilutive when average fair value of current year is more than, it become favorable. Means when it is in the money. In the money means favorable. Out of money means unfavorable. You know this point now, in the money, out of money. So it means what they are saying, these options are dilutive whenever they are in the money. In the money means average fair value is more than exercise price. Once they are dilutive, we need to find out number of shares to be considered for calculation of diluted earning per share. Suppose you granted 10,000 options at an exercise price of 75 and average fair value is, let us assume, 100. So of course dilutive. Now what India says that out of these some shares are issued at fair value and some shares are issued at sale price. The number of shares which are deemed to be issued in future, still are not issued. Any shares which will be issued in future at zero consideration, can I say that will decrease earning per share? If they are issued at fair value, then they will never decrease earning per share because you are receiving the equivalent consideration also. So this component will be what? Dilutive component. Any shares which are deemed to be issued at nil consideration. So what are the shares which are deemed to be issued at fair value? Can I say we'll do 10,000 into 75 divided by 100 means how many shares? 7,500. So out of 10,000, how many shares are issued at fair value? How many shares will be issued at fair value? So how many shares will be issued at nil consideration? So this 2,500 in future will decrease your earning per share. Therefore this will be what? Dilutive component. And these shares will be considered to calculate diluted earning per share. Have you understood this point? Have you understood this point? Correct. So what they want to say, let me take one question. This is a good point, means important from exam. What they have given? A Limited has 6 lakh equity shares on 1st April 2007. The company earned a profit of 15 lakh. During this, the average fair value is 25. The company has given share option to its employee 1 lakh equity share at rupees 15. Calculate basic and diluted earning per share. The basic earning per share we can calculate. Basic earning per share will be equal to what? 15 lakh divided by, so how much it is? 2.5. Now we need to calculate what? Diluted earning per share. For this, we need to first calculate one working note. What is the total option granted? 1 lakh. Out of this, we need to find out how many shares will issued at fair value. So we'll do 1 lakh into what? 15 by 25. This will be how much? So how many shares are deemed to be issued at nil consideration? So this become what? Dilutive component. Means calculation of diluted earning per share. Can I say options are not entitled to any income? Therefore plus 0. But your denominator will be 6 lakh plus what? 40,000. And this will become what? Your diluted earning per share. Understood? Have you understood? Expected question in exam this time. This time I am expecting a question on this only. From my point of view, expected. Understood? Then this, come to this point. This is important. Issue number 12. Contract that will be settled either in ordinary shares or cash. Means, yes, this is nothing but optionally convertible debenture or optionally convertible preferences, which may be settled in cash or may be settled in equity. So what Ind AS 33 says that accounting will be done as per Ind AS 32.1109. Accounting we know. Means just try to understand. Suppose we have taken this one optionally convertible debenture. So for accounting, we have taken interest component and principal component also we have taken. Means we have assumed that principal will be paid in cash. Means for accounting what we have assumed? Principal is a liability na? Are bolo yaar. We have done optionally convertible debenture. Option is withholder. We will find out fair value of liability component. For that we want contractual cash outflow. We will take interest component. And principal consider will take 0 or will take redemption value. Redemption value. Assuming that principal is initially classified as liability. This is accounting. Accounting done. Now we are coming to Ind AS 33. Now what is the objective of Ind AS 33? To disclose the worst EPS. Worst EPS, worst scenario. What can be the worst scenario? You only say. Worst scenario will come when number of equity shares will increase. Number of equity shares will increase in which option? When they are entitled to, when the settlement will done in equity shares. So even though for accounting you have done this, but for EPS you need to assume that it will be converted into what? Equity shares. Both are different. Accounting is different, EPS calculation is different. So accounting you have done, now we are coming to what? EPS. Are you able to understand? So when you are coming to Ind AS 33, you are here to calculate worst EPS. Means the EPS which will be most dilutive. Are you able to understand? One second. Accounting will not be affected for. Accounting is separate. EPS calculation is separate. Kasam khao. Accounting is separate. EPS will be separate. Correct. Now what they want to say? Contract that will be settled either in ordinary shares or cash. If option is with the entity, it will be always presumed that contract will be settled in ordinary share for calculation of what? EPS. For calculating EPS. Accounting done as per Ind AS 32, Ind AS 109. The resulting potential ordinary shares shall be included in diluted EPS if the effect is dilutive. Option is withholder. Entity should verify the effect of both on calculation of EPS. Is what they want to say. Entity should verify if cash settlement, what is the effect in EPS? If equity settlement, what is the effect in EPS? Correct. The effect where the EPS will be more dilutive will be considered for calculation of what? Diluted earning per share. Accounting done, then for EPS come. If cash settlement, what can be the diluted earning per share? If equity settlement, what can be the diluted earning per share? Take most dilutive effect as what? Diluted earning per share. Understood? One question is there, I will do this. I will take one question for this. Don't worry. This I think not important from examination point of view. Correct. Then last point I will discuss with one question. This last point I will discuss with one question, but after taking balanced question. EPS completed, let us come to what? Questions. Have you understood this much? Let us take some questions. On 31st March 2002, the issued share capital of company consisted of how much? 10 crore, na? 10 crore ordinary shares, rupees, of rupees 25 each, and 5 lakh 10% cumulative preference shares of rupees 1 each. On 1st October, the company issued 10 lakh ordinary shares fully paid by way of capitalization reserve in the proportion of 1:4. For the year ended 31st March 2003, profit of previous year and current year is given 4 lakh 50 and 5 lakh 50. Calculate basic earning per share for this year and this year. This means we need to restate also. Correct. Bolo yes or no? So first let us calculate for what? 2002-3. What is the profit given? How much profit given? 5 lakh 50 na? For current year I am asking. From this we'll deduct dividend. cumulative dividend, it will deduct even though not declared. So it is 10% of 5 lakh. How much? Divided by number of equity shares. It is 10 crore divided by 25. How much? Means number of shares. 10 crore divided by 25. 40 lakh. 40 lakh. How many bonus shares given? On 1st October 2002. Means current year. How many bonus shares were given? 10 lakh. So 10 lakh. What will be the weight? Wait. 10 lakh the bonus share given only. So why you are saying 1 is? This 40 lakh ka 1 by 4, 10 lakh only na? Now 10 lakh weight will be what? Weight. This to outstanding from the beginning na? Bonus share, what is the weight? From beginning. I was just thinking what you will do. Bonus share weight will be from the beginning only na? You will get the answer. Right. Now coming to what? Restated EPS of previous year. What is the profit? From this also what will deduct? How many shares outstanding from the beginning? Plus what? 10 lakh. Weight will be what? 12 by 12. You can get the answer. What is the answer for this? Calculate. How much? 8. 8 paise is 0.08. What is the answer? I am asking current year, is giving previous year. Current year how much? This is 0.08. This is how much? 10. Understood? Easy now? Easy or not? Come to one more question. At 31st December 2007-2008, the issued share capital of entity consisted of 40 lakh. Ordinary shares of rupees. But now they have given number of shares. Be careful. Be careful. Be careful. The entity has granted option that give the holder right to subscribe for ordinary shares between 2006 and 2009 at 70%. 70% is what? Exercise price. Option outstanding at the end of these and at the end of these 6,30,000. There were no grant, no exercise or no lapse of option during the year. But there is no additional grant, nothing has been done. No lapse, no withdrawn. The profit after tax attributable to ordinary equity holders for the year ended 2 years, they have given 5 lakh and 6 lakh. Average market price of this year and this year has been given. Understood this point? It means there were 2 years. How many options outstanding in first year? How many options outstanding in second year? So we need to find out what is the dilutive component. So this will be 6,30,000 into what? Into 70. What is the average market value of this year? 120. Means how much? 3 lakh. So what is the dilutive component? This minus this, na? Same thing. You will do 6,30,000 into what? 70 divided by. Now it become how much? 2 lakh. How much dilutive component? I hope if you have understood this, you can calculate. Can you see the answer? Can you see the answer? Just see the answer. Understood? Understood? Can we take one more question? CAB Limited is in the process of preparing the consolidated financial statement of group for the year ended 31st March 2003, and the extract of same is given below. You can see profit for the year attributable to CAB Limited, attributable to NCI, total. Other comprehensive income attributable to CAB Limited, NCI, total. Total comprehensive income. My question to you are, for EPS, which profit is relevant? 39,000. All other are bakwas. Bakwas na? The long-term finance of the company comprise of the following: 20 crore equity shares at the beginning of the year, and company have issued 5 crore shares on 1st July at full market value, means fair value. Then 8 crore irredeemable preference shares. These shares when issued for the whole of the year, the dividend on these preference shares were discretionary. Means this is equity only, not liability. This is equity na. Means for the first time when this question was created, I like that they have created good question on the understanding of India's. Good question on the understanding of India's na. Then 18 crore of 6% convertible debenture issued on 1st April 2001 and repayable on 31st March 2005 at par. Interest is payable annually. As an alternative to repayment at par, the holders of maturity can elect to exchange their convertible debenture for 10 crore ordinary shares in the company. On 1st April 2001, the prevailing market interest rate is given 8%. The present value factor is given. In the year 31st March 2003, the CAB Limited declared an ordinary dividend of 0.10 paise per share and dividend of 0.05 paise per on irredeemable preference shares. Compute the finance cost of convertible debenture. Means they have asked you to calculate interest expense. You only say interest expense will be calculated as per Ind AS 109 ki as per Ind AS 33. Means first split, then interest expense by applying EIR. That to be know, you can do it. Then basic and diluted earning per share. Means first part is nothing but you need to calculate present value of interest component, present value of principal component. You can add it. This become what? Total liability component. On total liability component, you need to apply interest rate. So it is given, it is into second year. Right now we are in second year. Means it was issued on which year? It was issued on 1st April 2001. And EPS we are calculating for which year? 31st March 2003. Means we are into second year. Means we need to prepare one amortized cost table of 2 years. And we need to find out interest expense of second year. Can I say we can easily calculate by preparing this schedule? We know this table. So this become interest expense of second year. Now we can calculate EPS. EPS will be 39,000 minus preference dividend. Because it is, if question is silent, always will assume cumulative. Always assume cumulative dividend. Correct? Then this become 35,000. Are you able to understand? 35,000 divided by weighted average number of shares. So some shares were issued outstanding from the beginning. Some shares were issued during the year. We have taken 9/12 weight. We can find out EPS. Then what? Diluted earning per share. Will add what? Interest expense net of tax. Once we add interest expense net of tax, we are getting this. Then multiply by what? This, I think you can do it. But good question. I don't expected. This question is also not yet asked. So good question. From my point of view, good question can be asked. Why? Because with this question, Ind AS 109 also cover. Ind AS 33 also cover. Good question na. And easy also. Not difficult also. But I'll like to take last point. I said now one point is left. What happened with this last point now? One history is there. This issue number 14. There was no question initially in ICAI study material. Then I used to take this question in every attempt. And I used to say no question expected. No question but then also expected. And in one attempt, similar question was asked. Similar question was asked. Means when I say, means I say, so it will come. My expectation, expected question list, every attempt, every attempt. I give, I think, 200 to 250 pages expected questions list with solution. In every chapter, it will be more or less 7 to 8 questions in big chapters. From that question, trend is that 60 to 70 marks question will come. But you should not rely on it. Okay? Expectation is there. Past trend was good. I don't know future. This attempt also have already released the expected list. So when you are just revising, make sure that you are doing that questions. There are good number of questions, good quality also. And what I do when I take expected question now, one point is in my mind, I will try to cover all concept also, so that when you are doing revision, concept is also revised. So two things, expectation also over, practice also done. So because of that reason, I am saying that when you are doing revision, just make sure that you are taking all the questions whatever I have given in expected list. However, some questions I have already taken in this batch, but not all questions. All questions are not possible because I need to give concept also, then question, that is not possible in 60 hours. Correct now? But then also I am trying to cover most conceptual questions. Okay? Let us do this question. What is the questions? Determine whether potential ordinary share are dilutive or anti-dilutive. Already we have done. But this is a point when there are more than one potential equity shares. Whatever question we have done for dilutive and anti-dilutive, there was only one potential equity shares. But if there are more than one potential equity shares, then one doubt will come, so which potential equity share should be given first preference? For that, Ind AS 33 has given one steps. Let us apply that steps by taking one question. Means if I read, you will not understand, but when I will do, you will understand. So example number 19, earning. Profit from continuing operation less dividend on preference shares. Profit from continuing operation attributable to equity shareholders. Then loss from discontinued operation 40 lakh. This become total profit. Then ordinary shares outstanding 20 lakh. Average market price. Whenever they give average market price now, it means it is for option. Average fair value, average market price, whenever is given in this question, it is means there is options given. Correct. Now they have given options 1 lakh with exercise price of rupees 60. Convertible preferences 8 lakh shares with a par value of 100 entitled to a cumulative share dividend of rupees 8 per share. Each preference share is convertible to 2 ordinary shares. Now my question to you all, everyone, they have given convertible preference shares. So one thing is convertible preference shares with cumulative dividend. So cumulative dividend is discretionary, means entity may or may not declare. So one thing is understood, this is to equity only. Means it is not a compound financial instrument. If it is full equity, then there is no need to split it. But 5% convertible bond, nominal amount is what? Rupees 10 crore. Each rupees 1000 bond is convertible to 20 ordinary shares. There is no amortization of premium or discount affecting determination of interest expense. Tax rate 40%. But it is compound or it is not compound financial instrument. They have given convertible debentures. So either optionally or compulsory. But can I say 5% will be fixed only? But the compound, it is pure equity. Convertible, but there is a fixed interest now. There is an obligation to pay interest or not. Principal may be convertible. Compulsory, let us assume compulsory. But there is an interest component also now. That is not discretionary. There is no So can you say what was required? Splitting was required. For splitting, what is required? Market interest, whether it is given, not given. What you'll do? You'll assume what? 5% of what? 10 crore. This is only from exam point of view, because similar question was asked. This question also I have taken from ICAI resource. Means I said na, it was not in ICAI study material, but I have taken from ICAI resource. And same question was asked in exam. Without only one changes they have done. What changes? They have deleted discontinued operation profit or loss. They make it the question more easier. Means in this question what was given? Profit from continuing, but in the exam question what they have not given? They have not given this. So it become more easy now. But they have not corrected this. It should be also corrected. So on that basis I am also not correcting. Why I am not correcting? So it might happen in exam same questions come. Then you will be where is the market rate of interest? If not given, apply a common sense, do it. But how to do? What India says that first we'll do test of dilution. I will do by informing you from this. We are doing example number 19 only. You can say whenever there is a continuing and discontinuing operation, we need to prepare this working note and this presentation, basic earning per share, diluted earning per share from continuing, discontinuing and total operation. Even though they have not asked, we will present all basic earning per share and diluted earning per share from all operations. But can you say, first we need to determine dilutive and anti-dilutive potential equity shares. How to determine? What India says that first identify number of potential equity shares outstanding. So let us identify. For options we can identify, but for option it will be number of potential outstanding from the beginning. If the question has not given date, always assume it is outstanding from the beginning. Kasam khalo. Always assume it is outstanding from the beginning, and question most of the time remain silent. But if they are given date of allotment, then we have to give weight from the date of allotment. Understood? Correct. So can you say for option you can calculate? How you will calculate? Applying that number of option granted minus number of shares which are deemed to be issued at fair value. You can easily calculate this. Listen, listen this. I am saying everything. So they have given 60 exercise price, average fair value 75. So we'll do 1 lakh into 60 divided by 75. We can easily calculate this. Then we'll find out for convertible preference shares, how many equity shares, how many potential equity shares outstanding. They are saying that each convertible preference shares will be converted into 2 equity shares. So we'll do 8 lakh into 2. It will be 16 lakh. It is given the question. It is given the question. Convertible preference share, each preference shares will be converted into 2 ordinary shares. So 8 lakh into 2. Correct. Similarly, we will do for what? For convertible bond, what they have said? 5% convertible bond, each rupees 1000 means we'll do 10 crore divided by 1000. We'll get number of debenture will be converted into 20. So 10 crore divided by 1020 means how much? So 20 lakh, you can see we calculate 20 lakh only. So first identify the number of potential equities outstanding. Then we'll calculate incremental EPS for each potential equity share. Incremental EPS. Incremental EPS means increase in earning due to conversion and increase in number of shares due to conversion. Increase divided by increase will be incremental EPS. So increase in numerator, increase in denominator, that will be incremental EPS. So first calculate incremental EPS for each potential equity share. So okay, for options, numerator 0 due to conversion of potential equity share into equity share for option, numerator will not be affected. Correct. Then Effect in denominator, already we calculated 20,000 outstanding from the beginning. So 20,000 into 12 by 12. So incremental EPS will be 0. Then for convertible preference shares, we will calculate dividend. This is preference dividend. So 8 lakh into 8 is given. 8 is what? Dividend per share, per preference shares. Correct. So we can calculate preference dividend. And this is the number of shares, number of potential equity shares outstanding. This by this will be incremental EPS. Similarly, we'll do for convertible bond, we'll do 10 crore into contractual rate of interest. Why contractual rate of interest? Why we are doing 5%? Because market rate of interest is not given, we can't do splitting, etc. Into what? Net of tax. What is the tax rate given? So we'll do for 60%. This is the interest expense. Correct. Divided by 20 lakh potential equity outstanding from the beginning. This become incremental EPS. Now what India says that once you calculated incremental EPS, give the ranking from most dilutive to least dilutive. So which one is most dilutive? Means, can you say this is most dilutive because it will not increase earning per share? Then what? This is 1.5 and this become least dilutive. So this will be the ranking, and in the order of ranking, they will be considered in calculation of diluted and for finding out dilutive and anti-dilutive potential equity share. We rank in the order of incremental EPS. You will take most dilutive rank 1, least dilutive last rank. Understood? Now we'll do one statement for testing for dilution, numerator, denominator, EPS. And for testing which profit will benchmark? For testing which profit will benchmark? Profit from continuing operation. So first we'll do as reported for basic. What is the profit from continuing operation? After deducting dividend. So 1 crore only I have taken 1 crore. What is the number of ordinary shares outstanding? So we have done 20 lakh. So can I say this is as per basic calculation 5 is EPS. So can I say this become EPS from continuing operation without conversion of potential equity shares into equity shares? Then first we'll give the effect of what? Option. Why option? Rank 1. So it will, numerator will increase by 0, denominator will increase by 20,000. So it will become 1 crore, it will be 20 lakh 20,000. Then this will become 4.95. Decreases means this is dilutive. Will be considered for calculation of diluted earning per share. Are you able to understand? Correct. Then we'll consider what? Convertible bond. Increase in numerator by what? 30 lakh. Increase in denominator by 20 lakh. We'll do total, and now it become 3.23. 1 second dilutive. It means it will be also considered for calculation of diluted earning per share. Then last preference will be given to what? Convertible preference shares. Increase in numerator by 64 lakh. Increase in denominator by 16 lakh. You calculated, but now it become 3.23 become 3.45 anti-dilutive. Therefore will not be considered for diluted earning per share. It means, can I say convertible preference share will not be considered. Only options and convertible bond will be considered for calculation of diluted earning per share. I hope now we can do it. Means now you can see when we came to main solution, this was all working note. Correct. You can see EPS from continuing operation. Already we calculated 5.5 and 3.23 because this was nothing but continuing operation now. So we have taken 5 and we have taken 3.3. Now we'll do for what? This continued operation. What is the loss given? 40 lakh divided by 20 lakh minus 2. Correct. Then here 40 lakh divided by 20 lakh plus 20,000 plus 20 lakh. 40 lakh 20,000. 40 lakh 20,000. Understood? But we have not considered what? Convertible preference shares. So this become what? Diluted earning per share from this kind of operation. I have a total operation, even though you are not calculating. This will be 5 minus 2, this will be this minus 2. Even though you don't want to calculate, don't calculate. This is what 5 minus 2 will come, this minus this will come, but this should be correct, huh? Understood. Easy only. Ind AS 33 over from my point of view. But there are some good questions given in ICAI study matter, practice required. It might happen that questions come then. Understood? So practice required for that questions. Concept over some questions also. I have taken many questions. Ind AS 33 done. Right. Any doubt? We'll take 5-minute break. Now, can we again start? Now let us take Ind AS 24 into consideration. Ind AS 24 related party disclosure, correct? So what is the objective of this chapter? To find out related party relationship, related party transaction and disclosure requirement, correct? Now in this chapter, what is the meaning of related party? Related party definition is given in para 9. For this chapter, I will ask you to remember para number, correct? It is very easy to memorize para number, don't worry. So a related party is a person or entity related with a reporting entity. Means, can I say, if there is a reporting entity, either we need to find out relationship with the person or reporting entity with other entity. So there are two type of relationship. One is relationship between reporting entity and person. One is relationship between reporting entity and other entity. So you can see there are two type of relationship, correct? This relationship is covered in para 9a and this relationship is covered in para 9b. So first let us come to para 9a. You can see the para 9a is a relationship between reporting entity and person, correct? So what Ind AS 24 says that a person or close family member of that person, a person and close family member of that person is related to reporting entity if that person, means I am saying Mr. Ram. So Mr. Ram and the close family member of Ram will be related to reporting entity if Ram has control or joint control of reporting entity, or has significant influence over reporting entity, or is a member of KMP of either reporting entity or a parent of reporting entity. Means this is what para 9a1, this is para 9a2 and this is para 9a3. In exam, if you are saying it is related party, you need to write down as per which para number. So para 9a1, para 9a2, para 9a3. So 9a1 says what? If the person has control or joint control of reporting entity. Para 9a2, if the person has significant influence over reporting entity. And para 9a3 says what? Person is a member of KMP, either of reporting entity or a parent of reporting entity. Have you understood? Correct? Means if I just inform you with what? Correct. Means can you see if the Ram has control over Ram Limited, so can Ram is related to Ram Limited, and if Ram is related to his close family member will be also related to Ram Limited. Similarly, second example you can say Ram has joint control over Sita Limited. So Ram is related to Sita Limited. If Ram is related, so this close family member of Ram is also related. Suppose if I say Ram has significant influence over Lakshman Limited. So Ram is related to Lakshman Limited and Ram, with Ram's close family member is free. With Ram close family member is free. Then what they are saying? You can say Ram is a KMP of Hanuman Limited. Correct? So Ram and Hanuman are related. And if I say Hanuman Limited control Ravan Limited, okay, Ram is a KMP of parent of Ravan Limited. Are you able to understand what I am saying? Ram is a KMP of Hanuman and Hanuman is a parent of Ravan. So Ram is a KMP of parent of reporting entity. Therefore Ravan and Ram is also what? Related party. Understood? So I hope now you have understood this meaning. That person is a member of KMP of reporting entity or parent of reporting entity. I hope 9A is very clear. Understood? Let us come to next point. What is the meaning of close family member? KMP you know. Who are KMP? KMP you know. But who is close family member? Batao. KMP means what? Key manager person. Correct? You know KMP. So close family member, you can see they have not said relative. Means close family member is more than relative. More than relative. Correct? So close family member includes what? It includes spouse, it includes domestic partner. You know domestic partner means what? Spouse means what? Legally married. Domestic partner means not legally married. Understood? Not more than this. Have you understood this point? The spouse means legally married. Domestic partner means partner but not legally married. Brother, sister, father, mother, person, children means Ram children. Then children from spouse means children from Sita. And then children from domestic partner also. All are related. Correct? Then dependent of person spouse and dependent on domestic partner means more than relative. Means they cover everyone. Everyone is covered. It means you can't think more than this. Everyone become close family member. It means the definition is wide. Wide? Correct now. In India we never disclose our domestic partner. Even though we have. So will you disclose? Will never disclose. In India तो I will say domestic partner point will not be applicable. Correct na? अरे बोलना रे. Correct na? So this is definition taken from international standard. Same to same copy paste हुआ. There is a concept of domestic partner internationally. India, even though we have, will never disclose. Are you able to understand? This disclosure na will be Miss Mukesh Ambani is disclosing what? Their domestic partner. Then what will happen? These are divorce हो जाता, split हो जाता, Reliance Industry खत्म. Correct na? Chalo. So it is not possible in India. Now point number 5. This is also important. Relationship between reporting entity and other entity. This is given in para 9b. And there are sub para. How many sub para? There are 8 sub para. 1 to 8. 1 to 8. Correct. The first point. Entity is related to reporting entity if any one of the following criteria satisfies. First, the entity and reporting entity is a member of same group. Means within group, all entities are related to each other. Can I say, when I say group, group means parent and subsidiary. So in that group, all parent is one parent. One means all group within, all members within that group will be related to each other. I hope you are understanding. Means if I say in this way, this parent, subsidiary, all are in one group. So all are related to each other. All are related to each other. Correct? Understood? First point is simple. Then point number 2. One entity is an associate or joint venture of other entity or member of group of which other entity is also a member. Means associate and joint venture related. Correct? So one entity is an associate or joint venture of other entity or it is an associate or joint venture of member of group in which other entity is also a member. Have you understood this point? Means what they want to say. Just try to understand. If I say in this way, this. The parent company has one associate joint venture and S1 has one associate and joint venture. The parent company is reporting entity. So this S1 is related. as per para 9b1. 9b1. Correct. This associate and joint venture also related as per para 9b2. Whether this A2 and JB2 are related to parent P. Yes, because this associate, this entity is an associate of S1 and S1 is a member of the group in which P is also a member. Therefore, A2 and JB2 is also related to parent. Similarly, A1 and JB1 is related to S1. Understood? This is para 9b2. Para 9b2. Yes, sir. Then coming to para 9b3. Both entities are joint venture of same third party. Means there are two joint ventures and both joint ventures are of same party. The joint venture of the same third party will be related to each other. Will be related to each other. There are two joint ventures of the same third party. So this joint venture will be related to each other. Understood this point? Have you understood? Means, just try to understand what I want to say. What I want to say. If I say in this way, P Limited has JB1 and JB2. So JB1 and JB2 are related to each other as per para 9b3. This P1 and JB1 are related as per para 9b2. This P1 and JB2 are also related as per para 9b2. But JB1 and JB2 are related as per para 9b3. Understood? Then coming to next part. One entity is a joint venture of a third party and other entity is an associate of third party. Means joint venture, associate of same third party will be related to each other. Means this joint venture associate will be related to each other. Correct? Joint venture of same third party related. Joint venture associate will be also related. Correct? Understood? I hope you have understood this point. Have you understood this point? You can see I have given P Limited, JB1 and A1. So this JB1 and A1 are related to each other as per para 9b4. Correct? Means, can you see, just try to understand? Subsidiary, two subsidiary of same parent company are related to each other. Para 9b1. Para 9b1. Two joint venture of same third party as per 9b3. One joint venture, one associate as per 9b4. One subsidiary, one associate. I thought we have not done only the no. As per para 9b2. 2 कहाँ गया? 2. Subsidiaries and associate as per para 9b2 of same third party. हाँ? Okay. Subsidiary and joint venture para 9b2. 1 second. Okay. Two subsidiaries of same third party. 1. Subsidiaries associate. Subsidiary joint venture. Joint venture. Joint venture associate. Associate. They are not related. Understood? So associate of same third party are not related. Dhoka. This is dhoka. Here student will do mistake. All are related. Only this is not related. This as a summary I have given. Just once go through. Whether you are able to understand this. Go through this diagram. Please fast. Then this done. Bolo yes. Then this. Done. Then this. This is NRP. NRP means not related party. This is dhoka, danger. Danger na? Danger. Let us come to next point. Oh. Next. What they are saying? Entity is a post-employment benefit plan for the benefit of employee of either reporting entity or an entity related to reporting entity. Post-employment benefit plan we have done under Ind AS 19 means where we contribute. So any post-employment benefit plan of reporting entity will be also related. And any post-employment benefit plan of a entity which is related to reporting entity will be also related. So any post-employment benefit plan of an entity which is related to reporting entity will be also related to what? Reporting entity. This point you have understood. Means what I want to say. Just try to understand this. This P Limited post employment benefit plan X Limited. So P Limited and X Limited are related. P Limited control S Limited. They are related to each other. Now S Limited has a post employment benefit plan Y Limited. Now whether P and Y are related? Yes. Whether S and X are limited? Yes. Understood. Got it. Next point. This point number 6 and point number 7 is also important. What they are saying? The entity is controlled or jointly controlled by a person identified in para 9a above. Means any entity which is controlled or jointly controlled by a person identified in para 9a, 9a1, 9a2, 9a3. Understood? Will be also related to reporting entity. Means what I want to say, just try to understand. If I say in this way, I need to draw this, otherwise you will be confused. Let me draw. Suppose RAM control or jointly control RAM Limited. Okay, this RAM is already identified in 9A1. Now RAM control Sita Limited. So these two are related. Means RAM Limited is what? Reporting entity. Are you able to understand what I am saying? Are you getting? So what they are saying? Entity is controlled or jointly controlled by a person identified in 9A above. Understood this point? Or if I say RAM has significant influence over what? RAM Limited. So this is also identified in para 91. Now RAM controls Sita Limited. So this is also related to each other. Bole yes or no? Correct? Then they are saying RAM is a KMP of RAM Limited. This is also identified in para 93. Now RAM control or jointly control Sita Limited. So this is also related to each other. Are you able to understand what I am saying? So now you can see the entity is controlled or jointly controlled by a person identified in para 9A above. Then what they have said, a person identified in para 9A1. A person identified in para 9A1 above has significant influence over the entity or is a member of KMP of the entity. However, from my point of view, whenever relationship is created, it is two-way relationship. Means if I am related to you, you are also related to me now. So if I have defined this, automatically defined, I am related to my wife. Wife is not related to me. Means I don't know whether that will be good or not, but try to understand. If I am related to my wife, understood, wife is also related to me. Correct now? So that is not to be defined now. But in this now, this point number 6 and point number 7 is to create two-way relationship. Ultimately the effect remain same. Means to conclude this point. To conclude this point, I say in this way. Means if I want to give you the summary of what? These 2 points. What they want to say. Summary. Means Mr. Ram control X and control Y. This is covered in what? 9b6 and 7 also. Means for X, if it is 9/6, for Y it will be what? because it is control na. Control will not come. Control that is 9/6. If Ram control and joint control, then also related to, these are related to each other. If I am saying Ram joint control X, Ram joint control Y, then also they are related to each other. When Ram control and joint control X, and Ram has a significant influence over Y, then also what? Related to each other. So this relationship is created as per 9/6, and this relationship is created as per 9/7. But ultimately both are related now. Are you getting what I am saying? Correct. If I say Ram control or joint control X and Ram is a KMP of Y, so this is also related to each other. If Ram has significant influence over X and Ram has a significant influence over Y, this is not related to each other. Whenever significant influence, not related to each other. Means either of these two, there can be one should be control or joint control. Means you can see here control, joint control, joint control, significant influence, control significant influence, control KMP, joint control KMP. All are related to each other, but significant influence, not related. And you can see if I say KMP, not related. Significant influence KMP, not related. This is the summary of this 6 and 7. Understood this point? So KMP means, just trying to understand, two entities having same directors are not related to each other. Are you getting what I am saying? Two companies having same directors are not related to each other until they are covered under some other point. Correct? Significant influence, not related to each other. Significant influence KMP, not related to each other. Are you able to understand what I am saying? But control significant influence, related. Control KMP, joint control, joint control significant influence, related. Control or joint control KMP, related. This is the structure I have given so that you can find out whether relationship is there or not. I have just given one shortcut I have given now. Understood? Last point, entity or any member of group of which it is a party provide key management personal services. Means para 9A3 cover person, para 9B8 cover entity. Suppose one entity is providing key manages services to this reporting entity, so these two entities are also related. Sometimes we appoint some entity who provides some managerial services. Entity can be also appointed now. This entity will provide key manager services. For example, if you know asset management company for mutual fund, so one asset management company will give all the managerial services. So that two companies are related to each other. Understood? So if any entity is providing what KMP services, that will be also related, or that entity is providing KMP services to the parent of reporting entity, then also that will be also related to each other. Correct? This is para 9B8. I hope all the relationship you have covered. Correct? Now what Ind AS 24 says that these are outside the scope of related party relationship. Means they have given clarification. However, not required. Once you have understood related party relationship, so what is not covered, that is outside the scope of relationship. Understood? So then also for clarification they have given two entities are not related simply because they have common director. Right? Two entities are not related parties simply because member of KMP one entity has significant influence. KMP significant influence, I have already said. Two joint venturers are not related simply because they have common joint venture. Means suppose A Limited, B Limited has one joint venture, AB. So these are not related to each other. Simply because they have one common joint venture, they do not become related. Two partners are never related. Huh? Two partners are doing business. Because they are two partners, they do not become related to each other. Nah? Are you getting what I am saying? Then any provider of finance, trade union, public utility company, government department, They have just given clarification. These also are not they are also not related party. Then any customer, any supplier, any franchisee, any agent, any distributor with whom entity transacts a significant volume of business. Suppose we have only one customer, so it does not become a related party now. Even though customer may exercise significant influence, but then also they are not related to each other simply because he is a customer. Are you able to understand? Means I should not say significant influence. Suppose only one customer. So can I say they may influence us, but it does not mean they have significant influence. Understood? Yes, sir. Then coming to related party transaction. Related party transaction means what? Any transaction between reporting entity and related party, regardless of whether price is charged or not charged. Means what they are saying, any transfer of resource, obligation, services between reporting entity and related party will be considered as a related party transaction even though price has been charged, even though price has not been charged, even though adequate consideration has been charged, even though the price charge is inadequate. Means suppose there is some transaction between related party and management is saying that this is at adequate price, will not disclose it. No. It become related party transaction. Even the price is adequate, you should disclose it. Understood is fine. Now coming to disclosures. Disclosure. Can I say in this chapter disclosure is important? The name is what? Related party disclosure. Correct? Therefore we should give importance to disclosure. So first disclosure is for all entities. All entities means irrespective of any related party transaction. This need to be disclosed. So what they are saying, relationship between a parent and his subsidiary shall be disclosed irrespective of related party transaction. What we should disclose? Name of his parent and ultimate controlling party. So we should always disclose our parent company and name of ultimate controlling party. Correct? If neither is parent nor ultimate controlling party is preparing CFS, it might be exempted as per exemption we have done. Means my parent may be exempted from preparing CFS. Then disclose the name of next most senior party who prepares CFS. Means any party who is preparing CFS, the name of that party should be disclosed. For example, Mr. Ram Control Ram Limited. Ram Limited Control Sita Limited. Sita Limited Control Lakshman Limited. And Hanuman Limited is reporting entity. So for Hanuman Limited, who is parent? Lakshman, this name need to be disclosed. And who is the ultimate controlling party? Mr. Ram, his name should be disclosed. Mr. Ram is individual, he will never prepare CFS. Correct? And Lakshman Limited may be exempted. If they are not preparing CFS, then we should disclose the next most senior party, next most senior parent who is preparing CFS. So either Sita Limited or Ram Limited. If Sita Limited is preparing CFS, then Sita. If not, then what? Ram. Understood? That name should be disclosed. Chalega? Correct. Then disclosure of KMP compensation. You all know that as per Companies Act also we should disclose KMP compensation. So all the KMP compensation need to be also disclosed. Correct? Yes. Then this is very important. Disclosure of related party transaction as per para 18. So para 9A, 9B understood? Now para 18. This is a para 18 disclosure. Para 18 disclosure. Para 18 disclosure. 9 into 2? 18. याद रहेगा? 9 into 2? 18. Para 18 disclosure. So what they want to say, if an entity had related party transaction during the period, it shall disclose the following: nature of relationship, nature of transaction, volume of transaction, amount of transaction, amount of outstanding balance, amount of transaction even though the price charge is adequate. They will give a case study that price is adequate, management is saying will not disclose. They will say nalayak, they don't know anything. We should disclose now, even though price charge is adequate. Correct. Provision for doubtful debt related to the amount outstanding balance if any provision has been created or expected credit loss. Expenses recognized during the period in respect of bad and doubtful debt due from related party. So if you have charged some amount to PL, if some amount of data written off during the year, that need to be also disclosed. Understood? Correct. Then this is also very important. I am saying very important, but till now they have not asked any question about Ind AS 24. Till now in any attempt, they have not asked any question from this chapter. Therefore I am saying very important because now it is due. They will pakka ask. Are you able to understand what I am saying? Why I am saying very important? So now it is due. Till now they have not asked. This attempt so they will pakka ask na. Right. Circumstances under which disclosure of para 18 are not required. So what they are saying, there are two circumstances where para 18 means these disclosures are not required. Means this disclosure is required, huh? This and this is required. Only what is not required? Para 18 disclosure is not required. Are you able to understand what I am saying? So what they want to say? Any related party transaction with government that has control or joint control or significant influence over reporting entity. Means if I say in this way, it is government control or joint control or significant influence ONGC, and they have what? Some transaction. Para 18 disclosure is not required. Correct. Related party transaction with another entity that is a related party because same government has control, joint control or significant influence over both reporting entity and other entity. For example, there are two entities and same government, ONGC and what? One is what? Tail. Understood? You know, both are state-owned entities, is government-owned. Correct. So there may be some transaction between these two, but because they are related party, because same government control both entity or jointly control significant influence, so they have become related party. But any transaction between these two are exempted from para 18 disclosure, even though they are related party. However, what they are saying, even though para 18 disclosure is not required, but following disclosure will be required. Para 18 disclosure not required, but kuch to do na. Some disclosure need to be given. What? Name of the government. Name of the government who is doing fraud. That government is involved in fraud na. Correct? Disclose that. I'm just kidding. Name of the government. Nature of its relationship with reporting entity. The nature and amount of each individually significant transaction. It's not all transaction, only individually significant transaction. For other transactions that are collectively but not individually significant, a qualitative or quantitative indication to their extent is only in percentage we can disclose that this is the amount of transaction or percentage of amount. Correct now. So for other transactions that are collectively but not individually significant, a qualitative or quantitative disclosure may be given. But these disclosures are required. But you can see in this para 18 there are many things to disclose. Amount, outstanding balance, provision, expense. These are exempted from disclosure. Understood? Correct. Ind AS 24 completed. Understood. Two questions I have taken, which I think can be asked. This question 14 I am expecting this time. Uttar Pradesh state government holds 60% share in PQI Limited and 55% share in ABC Limited. PQI Limited has two subsidiaries P and Q. ABC Limited has two subsidiaries A and B. Mr. KM is one of the KMP of PQI Limited. Determine the entity to whom exemption from disclosure of related party transaction is to be given. Also examine the transaction and with whom such exemption applies. What are the disclosure requirements for the entity who has availed exemption? Similar question we have done. Means what they want to say, there is one government, Uttar Pradesh. Uttar Pradesh government. Who is the chief minister? Huh? Yogi na? Mr. Yoginath. Correct? So Uttar Pradesh has two company, PQR and what other? ABC. Can I say control? Now this PQR has two company, P and Q. This has two company, A and B. Control. And this PQR has a key managerial person, Mr. KM. Now my question to you all, whether any Miss QP, PQR, ABC, this is the government owned entities. Can you see, if UP control this, and if this control this, so this also become what? Ultimately controlled by UP only. UP government, huh? UP government. Means, can you say any transaction between these all entities are exempted or not? Any transaction between these all entities, means this to this, 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 all are exempted. But any transaction with Mr. KM are not exempted. Bolna. Means KMP is an individual. If you have done some related party transaction with Mr. KM, that is not exempted. That is not exempted. And for these entities, you know what are the 4 points to be disclosed? Same thing is given. If you can read the answer. Have you understood this point? But a good question. I find this question good. Why good? Because direct question, but then also interesting. One more question only for your understanding. Mr. X owns 95% of entity A and is his director. He is also beneficiary of a trust that owns 100% of entity B, of which he is a director. Whether entities A and B are related, what they want to say? Mr. X, can you give me the relationship? Mr. X, what they said? Mr. X, 95% of. In exam now, always prepare this. Without this, you will not be able to understand. Without drawing, and you can draw. This is a part of answer. You can draw this, huh? 95% of A limited entity A, and his director KMP also. Is KMP also. He is also beneficiary of a trust. Achha. So let us say he is a beneficiary of a trust. What is the name of trust? Not given. Trust that own 100% of entity B. Anna, he is also a beneficiary of trust. And trust on what? Entity B, na? 100% of entity B. Whether entity A and B are related. Now whether these are related. Bolo. Huh? Bolo. Why you are saying no? They are related now. Means when I am saying X is a beneficiary of trust, so can I say X is a KMP of what? Trust also. Beneficiary means to KMP only. They are into what? Key manager person only na. So can I say X control A and X is the member of KMP of a entity which control B. So they are related to each other. So this will be related or not? Related or yes, that is only given. A and B are related parties because the directors Mr. X control entity A and is a member of key manager person of entity B. Would the situation be different if Mr. X resigned as a director of entity A but retained his 95% holding? Then also same answer, because it control what? A. Second, Mr. X resigned as a director of entity A and B and transferred 95% of holding in entity A to the trust. Then it is different because he loses control now. So what they want to say, he resigned as a director of both entity A and B and transferred the 95% of holding to entity B, means to trust now. Then can I say, then A will not be a related party to B. That is only given. You can read the answer. Same answer is given. Check kar lo na. This type of question can be asked in exam. There are some questions. There are I think 9 to 10 questions given in ICAI study material. Just do that 10 question will come from there. Means my question bank, if you will take RTP, MTP, all questions are included. So only those questions will come. They will not create any new questions. Correct? So with this, can I conclude we have completed what? Ind AS 24 also. Now, Ind AS 24 done, Ind AS 7 done, Ind AS 33 done, Ind AS 105 done. Can I complete CSR and Ind AS 113 fast? CSR. Can we come to CSR? CSR is 10-minute job. Can we come to CSR? CSR. Can I say you all know CSR? CSR means what? Corporate social responsibility. So this chapter is based on guidance note on accounting of CSR. Means there is no Ind AS. There is one guidance note issued by ICAI which gives the accounting treatment for CSR. So you all know that CSR is governed by section 135 of Companies Act. What Companies Act said that every company including foreign company which fulfill the criteria specified in section 135 shall perform CSR activities. Okay, this company will also include section 8 companies. Means section 8 companies, even though they are not for profit organization, but then also they are entitled to perform CSR activities. So every company who meet the criteria will be eligible for this provision. So what they want to say, every company having either A or B or C. A is what? Having a turnover equal to or more than 1000 crore. Having a net worth equal to more than 500 crore. Having a net profit equal to more than 5 crore. During preceding financial year shall constitute CSR committee of board consisting of 3 or more directors. Minimum directors. So if any one criteria satisfied, then for current financial year they are supposed to perform CSR activities. Correct? Now as per CSR rules, if in 1 year they are eligible, so they will be eligible for consecutive 3 years to perform CSR activities. Are you getting? So as per CSR rules, if 1 year criteria is satisfied, so they are supposed to perform CSR activities for 3 years. Understood what I am saying? Have you understood this point? Correct. Now, what will be the criteria? Means once they are eligible company, so what is the CSR criteria? What they said, every eligible company should spend. Spend means they should do expenditure. Spend means they should spend some money. Spend in every financial year at least 2% of average profit of immediately 3 preceding financial year, means 2% of profit, but which profit? Average profit of immediately preceding financial 3 financial year, correct? Suppose this is the what? This is the date of incorporation, and right now we are into this year. So can we take 3 year? Suppose this is the date of incorporation and we are into third year. So can we take 2% of 3 previous year? No. Then we take 2. And suppose this is the case, then we'll take what? 1. And suppose this is the case, then for current year, so it will not be eligible only na re. Preceding year, for first year, so it cannot be eligible only. Because the criteria need to be seen for what? Preceding financial year. So for first year, it cannot be eligible. It will be eligible from second year onwards. Are you able to understand? Now the question is that profit means which profit? Whether it is book profit or taxable profit. Right, it is neither book profit nor taxable profit. This is profit as per section 198 of Companies Act. I think you have done for MR, managerial remuneration, in CA intern. Same to same, means that profit will be calculated as per Companies Act, not as per books of account. So normally this point is not relevant because no question has been given in ICAI study material regarding this. But only to inform you, profit is determined as per what? Section 198 of Companies Act. So we'll take profit before tax as per SOPL. Then in this we'll do some depreciation adjustment. Depreciation provided in the books will be added, and depreciation as per Schedule 2 of Companies Act will be deducted. Schedule 2 of Companies Act. Schedule 2 has given some useful life of asset. So on the basis that useful life, whatever is depreciation, that is eligible. Correct? Any provision created will be added back, and actual expenses will be deducted. Are you getting what I am saying? Any fictitious asset which is written off during the year will be added back. Any capital profit on sale of fixed asset. Any capital profit. So what Companies Act say that any amount realized over and above what? Sale price. Any amount realized over and above sale price is capital profit. So that is not considered for calculation of profit. So that profit is, if it is already credited to PL, we should deduct. So that capital profit should be deducted. Okay. Any profit or loss on sale of long-term investment or business means business combination. Means suppose you have done demerger, on demerger any gain or loss is transferred to PL, suppose on sale of business. So that profit or loss should not be considered. So any profit on such sale, any loss on such sale will be eliminated. Any government grant which is not credited to PL will be added. Correct? However, now every government grant is credited to PL only. Every government grant will be credited to PL. Understood? Have you understood this point? However, this is not so much important because ICAI has not given any question based on this. Correct? Then there are some important points. CSR undertaken in India amount to CSR expenditure, means any CSR activities is taken in Nepal will not be considered. In Sri Lanka will not be considered. The CSR activities need to perform in India only. CSR expenditure that benefit only to employee or their family member will not be considered. So it should be done for a public at large, not for a group of members. Correct? Yes, sir. Then contribution of any amount to a political party shall not be considered. Means if you have contributed some amount to political party, so that amount is not considered as CSR activities. Correct? Understood? Then this point number D is very important, what they say. If CSR expenditure is more than a specified limit, means suppose 2% is allowed and 2% is 14 lakh, but you have spent 16 lakh. So whether this 2 lakh can be carried forward to next financial year? Initially, as per previous law, it cannot be carried forward, but now there is amendment, it can be carried forward. So what they said, yes, it can be carried forward, means carry forward of excess amount over 2% of average profit will be allowed if the company decided to adjust such excess against future obligation. Means whatever you have done extra, that will be considered a prepaid expense. Correct? Means 14 lakh will be CSR expenditure, 2 lakh will be prepaid expense which can be adjusted in the next year. But if the company decide not to carry forward such expense, means it is based on the discretion of entity. Discretion of entity. If they want no, will not carry forward, then entire expenditure will be charged to PL as a expense, understood, as CSR expenditure. Now, if CSR expenditure less than specified limit, suppose 2% is 14 lakh, but you have done only what? 13 lakh. So 1 lakh is unspent. So what will do about unspent CSR amount? So what guidance note said, there is no need to create any provision for this. There is no need to create any provision. So no provision is required. But then what will do? So what our act says, as per act, if the company fails to spend such amount, what's the board, means the board which has been created for CSR board, in report specify the reason for not spending the amount, and unless the unspent amount relate to an ongoing project, means suppose that unspent amount is not related to ongoing project, if there is no ongoing project, this entire unspent amount will be deposited to a fund specified in schedule 7 within a period of 6 months of the expiry of financial year. Means the unspent amount which is not related to ongoing project will be transferred to a fund specified in schedule 7 within 6 months from the expiry of financial year, understood. However, what they say, if any unspent amount is related to ongoing project, means there is some ongoing project and that unspent amount is related to that project, some time should be given because there is an ongoing project now, correct. So what they said, shall be transferred by the company within a period of 30 days from the end of financial year to a special account to be opened by the company in that behalf for that financial year in the scheduled bank to be called unspent CSR account. Means within 30 days it will be transferred to unspent CSR account in scheduled bank, and it should be used only for that ongoing project. But suppose if they are unable to use it, such amount shall be spent by the company within a period of 3 financial year from the date of such transfer. Means such amount should be used within 3 years from the date of transfer. Failing which, if they fail to do so, company shall transfer the same amount to the fund specified in schedule 7 within a period of 30 days from the end of expiry of that financial year, understood. This is also important question, can be asked from this point also. Now, CSR expenditure on capital asset. Suppose you purchase one property, plant and equipment and transfer that property, plant and equipment for CSR activity. Okay, you lost control and there is no future economic benefit. So whatever capital expenditure you have incurred, it will not be recognized as an asset. It will be charged to PL account as an expense as CSR expenditure, because you do not have any control, you do not have any future economic benefit from such asset. But what they want to say, in case the expenditure incurred by the company is of such nature that give rise to an asset, means suppose you purchase building and you transfer the building only for 2 years for CSR activities, so it means you have not lost the control. The control is with you only now. You purchase one building and you have given that building for education of poor children for 2 years. Whether you lost control? No. So it means it is your asset only. So what they want to say, it should be recognized by the company in the balance sheet, provided the control of the asset is with the company and future economic benefit are expected to flow to the company. Such expenditure is recognized as an asset in balance sheet as what? CSR asset. Have you understood this point? Have you understood? Correct. Next point. Any revenue expenditure made in current year towards CSR activity will be debited to PL and shall be disclosed by way of notes. This point number G is also important. Supply of manufactured goods or services by entity. Suppose we are manufacturing some goods and that goods is supplied for CSR activities. So whether it will be considered as CSR spent, correct? So what they want to say, a company may supply goods manufactured by it and render service on CSR activity. For example, I am teacher, so I can educate poor children as CSR activity. So what will be my cost? Means what amount will be spent, because I am giving free service now. Then what will be the amount of CSR spent? Are you getting what I am saying? If suppose we are manufacturing some goods and we are transferring that goods to some poor people, that is also CSR spent. So what will be the cost? Correct. So what they are saying, in such case, expenditure should be recognized when the company have transferred the control of goods or services are performed by the company. First, it will be recognized only when the control of goods has been transferred or services are performed. Goods manufactured should be valued as per AS2 or Ind AS 2, and services rendered should be measured at cost. Means we can't include some profit margin. Correct? Means the cost, we are charging 10,000 in regular class, but our cost is not 10,000 now. So CSR spend should be 10,000 or cost. So it should be equal to cost, not sale price. Are you able to understand? Then, if expenditure incurred is for the activities in ordinary course of business, then it will not be classified as CSR expenditure. Suppose we have supplied some manufactured goods at some discount, which is a part of ordinary activities, then it is not a CSR spend now. Means you are doing transaction in your ordinary course of business, therefore it will not be a CSR spend, even though you have given some discount. Correct now? Even though you have given some discount. Whenever question is silent from examination question, suppose they have given if some goods has been supplied at a discount of 40%, then how will understand it is under ordinary course or it is not under ordinary course? Whenever question is silent and discount is given, we'll always assume it is the ordinary course of business and will not consider it as CSR spent as per examination solution, as per suggested solution. If they have given discount, nothing has been mentioned in the question whether it is ordinary course, it is not ordinary course. Always will assume it is under ordinary course and will not consider it as CSR spend. Understood? Then, when a company receive grant from other person, suppose we receive grant for CSR spend. So whatever grant we receive, that is deducted from CSR spend, and net amount will be CSR expenditure. Understood? All points done? Correct? Yes, sir. I think I have taken some question. CSR. I have taken two questions. Both questions were asked in exam. ABC Limited is a company which has a net worth of 200 crore. Okay, net worth criteria not satisfied because it is 500 crore. 500 crore na. So this criteria not satisfied. It manufactures rubber part for automobile. The sale of company are affected due to low demand of its product. This is current year. These are 3 previous years. But for CSR, for current year, we should consider which year? Means this is not relevant, this is not relevant, this is not relevant. Correct now? Now, in previous year, net profit is more than 5 crore. One condition satisfied. Means there is no need to see other condition. However, sales was not satisfied. It should be 1000 now. But net profit is more than 5 crore. It means for current year, they are supposed to form CSR committee with minimum 3 directors. It is only given. Can you cross check the answer? Then, this was a good question asked in exam. Nice Limited is a company incorporated on 1st April. The company has a net worth of 350 crore. This is not satisfied. The business of company was affected due to low demand. Similar question, you can see. The following financial data is available. So for current year, we'll take provisional data or audited data. For means current year is 31st March 2011. They have given previous year. Provisional audited. This is bakwas. 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 Correct. Net profit, whether it fulfill the criteria. Yes. Means for current year, they should form CSR committee. During the financial year, current year, right? The company has spent 50,000 per month for developing vocational skill of local youth. So of course this will be considered for CSI spend. So 50,000 into 12, how much? 55,000 into 12, how much? 6 lakh 60,000. The company has also provided its product at a considerable discount for the benefit of underprivileged, the cost of which the 3 lakh. Whether it will be ordinary or it is not ordinary. No, ordinary. We'll assume it is ordinary course of, right now, so I have said now, whenever discount is given and question is silent, whether it is in ordinary course or not in ordinary course. If it is ordinary course of business, this is not a CSR spend now. Therefore, will not consider it as per ICAI solution. But from my point of view, when I have given suggested solution, I have considered it as what? CSR, because it is given under privilege. तो emotions क्या कहता है? अरे I can give some product at discount ना, and they have not given how much discount. I may give a 90% discount. If they would have said 10% discount, चलो ठीक है, okay. But 90% discount then? Are you getting? Then to of course it's not my ordinary course na. Are you getting what I am saying? Means suppose if I am just teaching you and I am just trying to recover my cost. Are you getting? This batch, whatever I have taken, I am recovering my cost only. Not more than that. The fees, whatever I am charging, the rent is more than whatever I have earned. Correct now? The rent is what? If this building, this classroom rent is more than whatever I am recovering for. So this I am just trying to recover my cost. Not more than that. Are you getting what I am saying? So it means what? Suppose if I am giving such type of services, it is not in my ordinary course now. Are you getting? But chalo theek hai. As per ICAI solution, it is what? Ordinary course, and therefore will not be considered, means 6,60,000 only. Correct. The company want to carry forward its entire expenditure to the next year, as it is the opinion that it does not have to spend anything. Wrong, because they need to fulfill CSR criteria in this year only. Therefore the accountant is nalayak. They need to spend 2% na. Correct. So what is the 2% of 7.10? How much? How much? Lakhs, how much? In lakhs batao. 14,000. 7 lakh crore hai. This is 7.1 crore. 7 crore 10 lakh into 2% means 14 lakh. Means there is some unspent amount. Unspent amount how much? 7,60,000. So there is some unspent amount. Correct. Comment on the company's applicability under CSR as per the section of 135. Does it have any obligation to transfer any amount to any fund? Yes. The same if it is related to ongoing project, not related to ongoing project. If nothing is given, we'll assume it is not related to ongoing project. Therefore, it should be deposited to transfer to any fund specified in Schedule 7 within 6 months from the expiry of current financial year. Same thing is given. Very good question. When this question was asked, I was happy. This type of question should be asked. Correct now? Understood? Have you understood? CSR also done? Correct. Let us come to one more, Ind AS. Now, Ind AS 113. Ind AS 113. From examination point of view, what I will say is very simple. Why it is very simple? Bolo. Why it is very simple? Ind AS 113 from examination point is very simple, because they have given 4, 5, 6 questions, 4 to 6 questions, and question will be asked from that only. And whatever questions they have given now, this is related to what? Valuation. Very simple valuation, cash flow, discounting, etc. I will say do that all question will come from that only. Correct? Are you getting? Means do all 6 questions. One question can be asked. So last 2 attempt, I think they have not asked any question on Ind AS 113. So now it is probable. Probable. Understood? So what is Ind AS 113? Fair value measurement. Fair value measurement means what? How to determine fair value? Because many Ind AS says fair value. So Ind AS 113 has given one Ind AS where we'll do the fair valuation, fair value measurement. So can you say what is the scope of this Ind AS? There are 2 points: when to measure, how to measure. When to measure, how to measure. So when to measure, go to respective Ind AS. Means if I say Ind AS 16 revaluation matter, when to do revaluation? Ind AS 16. Ind AS 113 is silent. But how to measure? Go to Ind AS 113. If respective Ind AS is silent, means when I say fair value option under Ind AS 103, to Ind AS 103 has given guidance to calculate fair value of option. Means if Ind AS 102 has given the measurement principle, then Ind AS 113 is not applicable. Means when respective Ind AS is silent about fair value measurement, then come to what? Ind AS 113. I hope you are understanding. Correct. So what when to measure? If covered under respective Ind AS 113 is not applicable. If not covered under respective Ind AS 113 is applicable. Correct. So what is the meaning of fair value? What they say, there are 2 types of price. One is known as entry price. One is known as exit price. Entry price means what? Price at a time of purchase. Exit price means price at a time of sale. So fair value is exit price, not entry price. Correct. So what Ind AS 113 said, fair value is the price that would be received to sell an asset or that would be paid to transfer a liability in an orderly transaction between market participant at measurement date under current market condition. This can as a fair value is totally based on market condition, not based on entity specific condition. Means when I say NRV, whether NRV and fair value are different or same? They are different. Therefore, name is different. So NRV is based on entity specific condition, at what price entity can sell it. But fair value is based on market condition. At market, this can be sold at what price? The difference now, wording. Suppose this is what? Mobile. Correct now. If I am saying NRV, at what price I can sell it? If I say fair value, at what price it can be sold in the market? Understood? These are 2 different measurement principle. Correct? So NRV is based on entity specific condition, but fair value is based on market specific condition. I hope you are understanding. Correct. Now, so can I say one thing we have understood, that to calculate fair value, we should not consider any entity specific restriction, but we should consider any asset or liability specific restriction. Correct. For example, we are doing valuation of land. Correct. And as per the restriction of entity, this land they are not using for commercial purpose. Means this is the restriction put by entity. They are not using the land for commercial purpose. It is vacant. Means they are not using for any purpose. This is entity specific restriction. But that is a commercial land. What is the asset? Means there is no restriction. It can be used for commercial purpose. Correct now. So what they want to say, to calculate fair value, do not consider entity specific restriction. Consider only asset specific restriction. So if it can be used for commercial purpose, so we should find out fair value in the market for commercial purpose only. Are you able to understand what I am saying? Correct. For example, there is one agricultural land. So agricultural land value will be less as compared to commercial land. You know this point? So if the nature of the asset is agricultural land, So can you see this become asset restrictions? Therefore, it should be considered for fair valuation, for measurement of fair value. Understood? Correct? Yes, sir. Then coming to the next point, what they want to say? The transaction. What they want to say? Here, fair value measurement assume that transaction to sell an asset or transfer liability takes place either in principal market or most advantageous market. Means we need to assume that now what I am saying, what India's 113 said, any transaction for fair value measurement should occur in a market. There are two type of market. One is principal market, one is most advantageous market. However, we'll give first preference to what? Principal market. But if principal market cannot be identified, then most advantageous market. What is the principal market? Principal market is the market where the most of the transactions are done. Means any market with highest volume and high level of activities are principal market. Normally principal market and most advantageous market will be same, but it can be different also. Are you getting? So first identify principal market. Means for me, can I say Hyderabad is the principal market? Because I conduct all the classes here only for face to face. Correct now? Are you getting what I am saying? But for recorded classes, there may be some other market. That might be principal market. The principal market is with what? Highest volume and high level of activities. Correct? Most advantageous market is what? Market that either maximize the amount that would be received when the entity sell the asset or minimize the amount that will be paid while transferring the liability. Means most advantageous market is the market where we are getting highest amount for sale of an asset, or we are paying minimum amount for the transfer of liability. That become most advantageous market. Understood? Means what they want to say is suppose there are two market A and B, and A is the principal market. So fair value will be determined based on A. Correct? But suppose A and B are what? Two market, and we are not able to identify which is principal market. Then we'll identify out of A and B which is most advantageous market, and suppose B is what? Suppose A can be also most advantageous. Suppose B is what? Most advantageous market. It means fair value is based on what? This market. Understood this point? Correct? Means most advantageous market will be identified only in the absence of principal market. This point have you understood? Correct? Yes, sir. Now what they want to say, this already I have said somewhere, to find out fair value from market price, we deduct what? Transportation cost. This is fair value. Whether we'll deduct transaction cost? No. Means to find out fair value only deduct what? To find out fair value only deduct what? Transportation or transaction? Transportation cost. Do not deduct transaction cost. But to find out most advantageous price, deduct both transportation cost and transaction cost. Means suppose A and B are the market. So market price is 30 and 35. Transportation cost is 5 and is 7, and transaction cost is 2, 3. Correct? And suppose we are not able to identify principal market, so we will find out most advantageous market. So to identify most advantageous market, first we need to find out most advantageous price, and to calculate most advantageous price, yes, both will be deducted. So this will become how much? This is how much? 30 minus 7, 23. This is what? 35 minus 10, 25. So which is most advantageous price? This is the most advantageous price. Therefore this become most advantageous market. Now fair value is based on which market? B. What is the fair value? Huh? What is the fair value? Don't say. First, have you understood what I am saying? One second. I have given you A, B. I have given you market price. I have given you transportation cost. I have given you transaction cost. Then I said principal market cannot be identified. It means you need to find out most advantageous market. For most advantageous market, you want most advantageous price. To calculate most advantageous price, you should deduct both. So we have calculated 23, 25. Which is most advantageous market? B. Means delete it. Means now fair value is based on B. So what is the fair value? When 35 minus what? 7. Same question have been asked in exam. Have you understood? 35 minus 7 how much? This is fair value. This is what? Most advantageous price. So this one, what they want to say? To calculate most advantageous price, deduct both. But to calculate fair value, deduct only transportation cost. Transaction costs are not transportation costs are not transaction cost. Transportation costs are not transaction cost. This already I have discussed in some other chapters also. And here only student do mistake. ICAI know, normally student don't know about this. Rectification student will not read Ind AS 113. Correct now? Very good. Simple. Now after this, whatever is given now, this is all theoretical point. Come to valuation technique. Now what Ind AS 113 says that entity is required to use appropriate valuation technique that maximize observable input and minimize unobservable input. Now we need to understand what is the meaning of observable input. What is the meaning of unobservable input? Simple meaning, any information which can be gathered directly from the market is observable. Any information which are not directly derived from the market, means it can be derived only by putting some effort, then that become unobservable information. Means when I say quoted market price, it is directly or it is not directly? Directly. That is directly observable. You only say first preference should be given to observable input or unobservable input. Observable input. Therefore they are saying for valuation technique, maximize what? Observable input. Minimize what? Unobservable input. I hope you are understanding my emotions. So input data developed using market data such as publicly available information about actual event transaction and that reflect the assumption that market participant would use only when pricing the assets and liability are observable. Input for which market data are not available are what? Unobservable input. However, valuation technique, there are three techniques they have given. First is market approach, second is cost approach, third is input approach. Income approach. Market approach means what? Quoted market price. Income approach means what? Converting future figure into single present amount. Is converting future value to present value. That is known as income approach. Income approach, they have given two models, either present value technique or option pricing model. Present value technique means what? Either present value of future cash flow or present value of what? Profit. Correct? Option pricing model, there are two models, binomial pricing model, Black and Scholes model. You can understand where? In SFM. They will not ask this question where? In FR. Now they have given some hierarchy. Hierarchy means hierarchy of using the input. So first is known as level 1 input, then level 2 input, then level 3 input. Means this is the way of using what? Information. So first level 1 means what? Quoted price in an active market for identical asset or liability. Means quoted price of identical asset, sorry, quoted price in an active market for an identical asset or liability. For example, you have Reliance Industries Limited shares. Means I am holding Reliance Industries Limited shares and I want the fair value. I'll go to which market? Either National Stock Exchange or Bombay Stock Exchange. Now we'll find out where the volume is high. That become principal market. So suppose National Stock Exchange. Correct now. We'll say what is the quoted price. That will be fair value. And that does not require any adjustment. That is unadjusted amount. Correct now. Understood. But if suppose if that information is not available, can you say for unlisted share that information is not available? Correct. Then we'll go to level 2. Level 2 means what? Input other than quoted price with level 1 input that are observable for assets and liability. These level 2 inputs are also observable, but not directly, is indirectly. For example, quoted price for similar asset or similar liability in an active market. Similar asset, similar, not identical, similar. Understood? Then quoted price for similar or identical asset in an inactive market. Inactive market means what? Inactive market does not mean closed market. Inactive market means where transactions are very less. Active market means where the transactions are very high. Inactive market means transactions are less. For example, just try to understand. Hyderabad is an active market. Mumbai is an active market for CA. Correct now. Active market. Kolkata is an active market. Delhi is an active market. These all are active market. But you are from any remote area? Anyone is from remote place? Some village? No village. Let me say some village. Suppose I am from Purulia, West Bengal. This is from Purulia, West Bengal. Now Purulia, there are CA students. I am also CA, na? Some classes are going there also. But inactive market. Then only less. Are bolna rahe? Market is there, but active or inactive? Inactive market. Therefore, I am not teaching there, na? Are bolna rahe? Are you able to understand? So Purulia, there might be many CA, and there are many students who become CA also. Correct? I am also one of them there. So there are many students who are doing CA. But can I say? Not as compared to Hyderabad, na? Inactive market. Understood? So if active market is not there, then you can go to inactive market, but can that price require some adjustment? So that price requires some adjustment or any other observable information. Level 3 input means what? If observable information is not available, then take what? Unobservable information, means apply income approach. Income approach means present value of cash flow, present value of future profit, etc. or option pricing model. That is using the unobservable information. Means if I say value of asset, fair value of asset, so we need to estimate the cash flow which can be generated from the use of asset, whether that is directly observable or it is available from by applying some other we need to gather that information, na? It's not directly observable, but we need to estimate it. So that become level 3 input. Level 3 input. Understood? So I have just given, I don't know whether this is important or not important. This chart you can read. This will help you. This also you read. Apply. This also you read. This you read, you will understand. This also you read, you will understand. Correct? So Ind AS 113 is completed. There are 4 or 5 questions given, practical question about valuation, but that is very simple. If you read solution, you will understand. One question can be asked from that. Are you able to understand? Don't miss it. Because can I say this? 6 questions, 1 question will ask. So good chapter, na? In consolidation, they have given 80 questions, 1 question will ask. So you should do which chapter first? Ind AS 113. Whatever question you will do, out of that 1 question will be asked. And higher chances this time. Correct? Yes, sir. Ind AS 113 also over. What are the chapters left? India's 101 and what is left? India's 101 and everything done. Is India's 101 everything done? Only 101 left. Wow. Chalo, we'll take break. First, let us take what? 5-minute break. Can we start once again, everyone? So this will be the last topic for revisionary batch. You can see India's 101. There is one more chapter, analysis of financial statement. So that is based on Schedule 3 requirement and other Indias. Means in analysis of financial statement chapter, what they will do? Either they will give one case study based question related to one Indias. In that they will give wrong treatment, you know, to correct it. Understood? Or they will give you wrong balance sheet, you know, to correct it as per the requirement of Schedule 3. So can you say, if you know the Indias already we discussed, correct? And if you know the Schedule 3 requirement, so I am assuming that you know the Schedule 3 requirement, but there is some amendment in Schedule 3 in last attempt. So if you have not done that amendment, there is already one video has been uploaded in YouTube for that. I will provide the link of that. You can listen the entire amendment from there and then take the questions of analysis of financial statement. So of course, once you know Schedule 3 requirement and you have the solution for that, so you can do it by room. Correct now. So my role is very less as that chapter is concerned, because in that chapter you need to practice some question from ICAI study material. Correct. So we'll come to the last chapter, India's 101. India's 101 is first time adoption. Two more things. There are two theoretical chapters also. One is integrated reporting, that I will not do. There is one chapter number 1, conceptual framework, that also I will not do. Okay. So these two chapters you need to do by your own. Conceptual framework is a amended chapter but fully theoretical chapter. Correct. You need to do it by your own, because if I will read better, you only read. I will read better, you read. Correct. And that is very simple. You can understand from my Taran's book, conceptual framework. Apart from that, we have covered all the points, all the chapters. Correct. Let us come to what? India's 101. What is the India's 101? First time adoption of India's. Means if any entity is adopting India's for the first time, so how to prepare what? Balance sheet. Means suppose, just try to understand what they want to say. If I want to say, suppose this is the financial year for which India's is applicable for the first time. Let's say 2021. Correct. So can you say we need to also provide comparative information based on India's only. This is known as what? First India's financial statement. Correct. And in this first India's financial statement, we need to provide comparative information based on India's only. And if you want to provide comparative information based on India's, so this opening balance should be based on India's only. So this beginning of previous year is known as date of transition. Means even though it is applicable for the 2021, but the date of transition will be the beginning of previous year, because you want opening balance as per India's. And for that reason, first we need to prepare opening balance sheet based on India's. Correct. We need to prepare opening balance sheet based on India's, and the beginning of previous year is known as date of transition. So in this chapter, the objective is to prepare India's opening balance sheet on the date of transition. Correct. However, can you say whenever we change our accounting policies, so from AS to India's, change in accounting policy, so we need to apply retrospective application from the beginning. Correct now. But if you apply retrospective application from beginning, everyone will die. And therefore Ind AS 101 has given many exemption from retrospective application. Some are mandatory exemption, some are voluntary exemption. Mandatory exemption means retrospective application is not supposed to be applied, apply prospectively. Voluntary means they have given option either retrospectively or prospectively. The two option has been given to the entity as per their choice, they can do it. Understood? I hope you have understood what they are saying. Ind AS 101 is applicable to first Ind AS financial statement. First Ind AS financial statement. The accounting under Ind AS should be applied at a time of transition to Ind AS as will result in changes in accounting policy. However, Ind AS 101 has given certain exemption from retrospective application of Ind AS. There are two categories of exemption in Ind AS 101. Mandatory exemption to the retrospective application. Optional means voluntary exemption from retrospective application. However, no exemption has been given for disclosure requirement. In disclosure requirement need to give in full. Correct? There is no exemption from disclosure requirement. Correct? What is the meaning of first Ind AS financial statement? First annual financial statement in which entity adopt by an explicit and unreserved statement of compliance of Ind AS become first Ind AS financial statement. Correct? First time adopter means entity that prepare first time their first Ind AS financial statement will known as FTA in this chapter. FTA means first time adopter. Date of transition means it is the beginning of previous year for which entity present full comparative information for first Ind AS financial statement. Correct? Now what is previous gap? Just try to understand. Previous gap means suppose before Ind AS, suppose there was one company X Limited which was listed in Indian Stock Exchange and what London Stock Exchange. So as per the requirement of India Stock Exchange, they are preparing financial statement based on AS, and as per London Stock Exchange requirement, they are also preparing financial statement based on IFRS. Quite possible. Correct? Now what happened now? Ind AS is applicable. So the question is that the previous gap will be financial statement prepared based on AS or financial statement prepared based on IFRS, because if I want to convert this, there is only 5% difference. If I want to convert this, so there is 100% difference. I hope you are understanding. So conversion of IFRS to Ind AS is easy as compared to conversion of AS to Ind AS. But what Ind AS 101 says that previous gap is what? Related to Indian context. It means we need to convert this. We can't convert this. Means we need to convert financial statement which is prepared based on AS to what? Ind AS. So previous gap, it is the basis of accounting that first time adopter used for statutory compliance in India for adopting Ind AS. So of course, can I say previous gap will be what? Accounting standard notified under Companies Accounting Standard Rules 2006. Got it? Yes, sir. Now step for application of Ind AS for the first time. Identify date of transition. Prepare opening Ind AS balance sheet on the date of transition by availing mandatory and voluntary exemption. So how to prepare opening balance sheet, that we need to understand. So what they are saying, opening Ind AS balance sheet. For preparing opening Ind AS balance sheet, entities are recognized all asset and liability whose recognition is required as per Ind AS, even though not required as per AS. So recognize all asset and all liability whose recognition required as per Ind AS. De-recognize item of assets and liability. If Ind AS do not permit such recognition, we should de-recognize it. Correct. Then reclassify items of assets and liability and other component of equity as per Ind AS. For example, now we have understood investment as FBTPL, FBTOC, AC, compound financial instrument in equity and liability component, discontinued operation, non-current asset held for sale. Correct. Now we need to reclassify. Then measurement of recognized asset and liability as per Ind AS after availing what? Exemption as per Ind AS 101. Understood? Correct. Now we need to come to exemption. So there are what mandatory exemption. First is related to accounting estimate. Accounting estimate. What India says that if the accounting estimate required by previous gap means accounting estimate required by previous gap, no estimate was required as per previous gap. Previous gap means accounting standard. Correct? Understood? Suppose estimation was not required as per previous gap. Then what they say, make estimate reflecting the condition at, means we should make estimate reflecting the condition at relevant date, means on the date of transition. Correct? Yes, sir. But yes, estimation was required as per previous gap, and we need to ask, is there any evidence of error? If yes, there was some error in estimating the amount, yes, then we should make estimate reflecting the condition at relevant date. But if there is no error and it is consistent with the requirement of Ind AS, it is consistent with the requirement of Ind AS, then use previous estimate. We can use previous estimate adjusted to reflect the Ind AS. Understood? Have you understood? But what they are saying, if yes it is, but I have said wrongly now. Yes, it is consistent with the Ind AS, then no adjustment required. Use previous estimate only. Understood? Have you understood this point? Correct. Means in simple word, if suppose they have given estimation as per previous gap and question is silent, do not make any changes. But if the question says in estimation there is some error, correct now. For example, useful life estimation we have done and there is some error in estimation of useful life, then change it as per current condition. As per current condition. But if question is silent, don't make any changes in the estimation made by previous gap. Got it? Yes, sir. Then derecognition of financial asset and financial liability. Financial asset and financial liability. What they said, a first time adopter can apply derecognition requirement in Ind AS 109 prospectively for transaction occurring on or after the date of transition to Ind AS. Occurring after the date of transition to Ind AS, it means any financial asset or financial liability which has been derecognized as per previous gap before the date of transition shall not be recognized as per Ind AS. I just give one example. Suppose this is the date of transition. Correct? Now there was some debtor which has been transferred, but risk and reward was not transferred. So as per Ind AS it cannot be derecognized. But as per AS we have, because there is no AS on that, so we have derecognized it, even though risk and reward was not transferred. So can we recognize it on the date of transition? Well, no. Any financial asset or financial liability which has been derecognized on or before the date of transition, no need to recognize it. But any transaction which occur after date of transaction, recognize it on, apply it what? On prospective basis. Understood this point? This is mandatory exemption. Then coming to NCI. NCI means non-controlling interest. It will be recognized as per Ind AS 110 prospectively. Prospectively means suppose this is the date of transition. Correct? So we have NCI. So we will means the total comprehensive income will be attributable to NCI from the date of transition on prospective basis. Means we will not calculate NCI on retrospective basis. Are you getting? So we will allocate total comprehensive income to NCI on prospective basis. Means this NCI is calculated as per AS 21 now. Correct? AS 21. And as per AS 21 is MI. In AS 20 we call it minority interest. Minority interest cannot have negative balance as per AS, but it can have negative balance as per Ind AS. Means can I say in opening balance sheet it will never have negative balance, because we are applying prospective application, not retrospective application. Understood what they want to say? Total comprehensive income attributable to owner of parent company NCI from date of transition, even if NCI may become negative, but prospectively. In other words, NCI cannot have negative balance in opening Ind AS balance sheet. But there is one exception to this rule. When we'll do optional exemption. So optional exemption say that to pass business combination, we can apply retrospective application. We will do some optional exemption. So if any business combination is restated retrospectively, so can I say to that business combination we need to apply Ind AS 110 also retrospectively? And if you are applying Ind AS 110 retrospectively, the NCI need to be also calculated retrospectively. So there is one exception to this rule. If business combination is restated retrospectively, then Ind AS 110 will be also applied retrospectively. So one exception, but if business combination is not restated retrospectively, then we can apply Ind AS 110 on prospective basis. Understood this point? Then government loan, this is important. Government loan, already one question has been given. To this. I don't know whether I have taken or not, but has been given. An FTS shall classify all government loans received as a financial liability or an equity instrument in accordance with Ind AS 32. So a government loan is received at a concessional rate. Now as per Ind AS 20, can you see the loan should be recognized at fair value and the difference should be accounted as government grant, if you remember, as per Ind AS 20. So what this Ind AS 101 says that there is no need to apply on retrospective basis, and in the opening Ind AS balance sheet it will be reported at carrying amount, and there is no need to recognize any government grant. We suppose as per previous gap there was 10 lakh loan received at a rate of 2%. However, the market rate of interest might be what? 12%. So we have not split it now. So this carrying amount remains 10 lakh. So on the date of transition, it will be carried at 10 lakh only. And there is no need to split it. There is no need to recognize government grant. Understood to what they want to say? An FTS shall apply Ind AS 109 and Ind AS 20 prospectively to government loan existing on the date of transition to Ind AS and shall not recognize the corresponding benefit of government loan at below market rate of interest as government grant. Means there is no need to recognize government grant. Consequently, FTA shall use its previous gap carrying amount of the loan at the date of transition to Ind AS as the carrying amount of loan in the opening Ind AS balance sheet. Means this 10 lakh will come in the opening Ind AS balance sheet. Correct? Understood? But can I say, subsequently, we need to apply Ind AS 109. Means we will calculate EIR, and based on EIR, we will apply what? Subsequent accounting. Correct? Means can I say what will be the EIR? It will be the discount rate at which present value of future cash outflow will be equal to 10 lakh. We will first compute EIR, and based on EIR, we will do amortized cost table. We recognize interest, expense and amortized cost. Correct? What they are saying, same thing. However, entities shall apply Ind AS 109 to the measurement of such loan after what? The date of transition. Understood? Correct. Then what they said, however, entity may apply the requirement of Ind AS 109 and Ind AS 20 retrospectively. However, they can apply retrospectively also to any government loan originated before the date of transition, provided that information needed to do so has been obtained at a time of initial accounting for that loan. Information needed to do so means, can I say, we want market rate of interest on the date of loan. That information is known to you, then only you can split. If the market rate of interest on the date when you have availed loan, that information is with you, then you can split it and you can apply on a retrospective basis. On a retrospective basis means if question is silent, always apply prospective basis. But question says The entity want to apply retrospective basis, then apply that. Understood? Yes, sir. This is very important. One question has been given, so this can be asked in exam. Understood? Correct. Then classification and measurement of financial asset and financial liability. Classification and measurement of financial asset and financial liability. Correct. What they want to say? Ind AS 109 contain the principle for classification of financial asset and financial liability, financial asset at amortized cost, FBTPL, FBTOCI. Such classification depends on the assessment of features of financial asset on the date of its initial recognition. Correct? Means classification is always based on the circumstances prevailing on initial recognition. Correct? But what they said in Ind AS 101, Ind AS 101 provide an exception to the general principle by requiring that such assessments should be done on the basis of information available on the date of transition. Means the classification based on information available on the date of transition. Correct? First point you understood? Then Ind AS 109 require the measurement of amortized cost of financial asset of financial liability using EIR, effective interest method. Now how to determine EIR? That will be one question. So what I said, as an exception to the general measurement principle, Ind AS 109 provide that if it is impracticable for the entity to apply retrospectively effective interest method in Ind AS 109, then fair value of financial asset and financial liability on the date of transition to Ind AS shall be the new gross carrying amount of that financial asset and financial liability on the date of transition. Means what they want to say? Suppose you have given loan here, and this is the date of transition. Correct? Understood? Correct. So first thing though, this loan will be classified as AC, FBTPL or FBTOCI based on the information available on the date of transition. First thing you understood? Means this can be loan, this can be investment, this can be any other financial asset. Huh? Correct. Now if it is amortized cost, you require EIR. Now to calculate EIR, this AC will measure a fair value on this date. Fair value on this date. And can I say, if you know fair value on this date, you can find out EIR. EIR will be equal to what? Discount rate at which present value of future cash inflow will be equal to this fair value. And you can find out EIR and follow what amortized cost. Means in simple one, on the date of transition, any financial asset, any financial liability will be measured at fair value on the date of transition. So why they have not given about this? Because this will measure fair value only. Because this is FBTPL and FBTOCI. So there is no doubt about this. But for AC one doubt will come. Because AC retrospectively we need to find out what amortized cost. So exception is required for amortized cost only. So what they said, on the date of transition, if it is impracticable to find out amortized cost, then carry that AC at what? Fair value on the date of transition and calculate what? EIR. So they will give you fair value. Recognize it fair value. Simple? Yes, sir. Correct. Then coming to voluntary means optional exemption. Mandatory exemption done. Mandatory exemption done. Now coming to voluntary exemption. First is business combination. This is very important. What they want to say? All business combination executed before the date of transition does not require application of Ind AS 103 retrospectively. Means whatever you have already done, follow that only. Means can I say, in your previous gap you have applied AS 21 or AS 14, apply that only. There is no need to restate on a retrospective basis. Simple. Means whatever you have calculated goodwill, that only will be carry on. Understood? Yes, sir. However, if an entity opt for retrospective application for one or more past business combination, then all subsequent business combination are to be restated retrospectively. Have you understood this point? Suppose this is the date of transition and there is business combination 1, 2, 3, 4, 5. Suppose they want to restate this business combination on what? Retrospective basis. Then all subsequent business combination will be also restated retrospectively. However, for this we can follow what? Prospective basis. Understood? And can I say, if you restate business combination on retrospective basis, then Ind AS 101 will be also applied on retrospective basis. Ind AS 110 will be also applied retrospectively. Ind AS 110 means for consolidation of parent with subsidiary. That will be also applied on a retrospective basis. If business combination is applied retrospectively, then Ind AS 110 will be also applied retrospectively. Then NCI need to be also calculated on a retrospective basis. Understood? Yes, sir. Then, if any contingent consideration have been recognized as per previous gap, if any contingent consideration has not been recognized as per previous gap, because AS 14 was silent about contingent consideration. So as per AS 14 we have never recognized contingent consideration, but as per Ind AS 103 we need to recognize contingent consideration. If business combination restate retrospective basis, then it will be automatically recognized. But suppose business combination has been not restated on a retrospective basis, then what Ind AS 101 says that then it should be adjusted, means it should be recognized and adjusted to retain earning on the date of transition. If business combination are not restated retrospectively, then we recognize such contingent consideration as per fair value on the date of transition only, as per the fair value on the date of transition. What journal entry will do? Retain earning account debit to contingent consideration. This is one rule. Rule is what? Whatever adjustment you are doing, that adjustment will have a difference in the balance sheet. Means either you are increasing asset or decreasing asset, or increasing liability or decreasing liability. So that will affect what? Balance sheet. Means the balance sheet will not match. You need to give a corresponding effect. So if the item, this adjustment can be done either through retained earning or OCI component or goodwill. Okay. Means if you are restating business combination retrospectively, then adjustment will be done through what? Goodwill. Any difference will be adjusted in goodwill only. Correct? This point have you understood? Now, if you are adjusting any item for which gain or loss is transferred to OCI, then it will be affected in OCI component. Simple. Means suppose Ind AS 16 revaluation model. So any gain or loss will be transferred to what? Revaluation surplus. Otherwise it will be always transferred to what? Retained earning. Understood? Means suppose there is one investment, and investment is classified as FBT OCI. Correct? And you have done some adjustment due to this increase in investment by 1 lakh. So that this will be transferred to what? Retained earning or OCI component? OCI component. But if this is FBTPL, then retained earning. Rule you have understood? Understood. So understood why I said retained earning, because contingent consideration will be always adjusted to retained earning. There is no OCI component for this, and because business combination is not restated retrospectively, we cannot affect goodwill. We cannot adjust the amount of goodwill. Understood? Correct. Now, if any entity which was not a subsidiary as per previous gap, but now becomes subsidiary as per Ind AS, quite possible, because as per Ind AS, even though any entity is holding 40% can give rise to control. Means even though I am holding 40% share, then also I can control. Correct? As per Ind AS 110 definition of control. Correct? So it might happen it was not a subsidiary as per previous gap, but now becomes subsidiary. Then what will do, batao? Then in this case, and business combination are not restated retrospectively, and suppose business combination are not restated retrospectively, then what Ind AS 101 says that date of transition will be considered a deemed date of acquisition. So date of transition will be treated as deemed date of acquisition, and goodwill or gain or bargain purchase
will be recognized on which date? On the date of transition by applying Ind AS 103 on prospective basis from date of transition. Means all asset, all liability will be recognized on the date of transition, and any difference will be what? Goodwill. Understood this point? This point have you understood? Correct. Then come to the next point. This point you can read by your own. Deemed, this is important. Deemed cost for PP, intangible asset and investment property. Deemed cost means in PP Ind AS 16, intangible asset Ind AS 40, investment property, intangible asset Ind AS 38, investment property Ind AS 40. So an FTA may adopt Ind AS 16, Ind AS 38, Ind AS 40 either on retrospective basis, or they can apply deemed cost on the date of transition, which can be either, or they can apply deemed cost which can be either carrying amount as per previous GAAP on the date of transition, or fair value on the date of transition. Means suppose there is one PP. If they apply Ind AS 16 retrospectively, then it is coming 2 lakh. Carrying amount is suppose 1,50,000, let us assume, and fair value is suppose 2 lakh, 2,50,000. Correct? Understood? So it means 3 options there. Either take Ind AS 16 retrospectively, or deemed cost, which can be either carrying amount as per previous GAAP, or fair value on the date of transition. Correct? Understood? Now everyone, when I have adopted these, then to no difference. If I have adopted these, or if I have adopted these, then difference will come. Correct? Now if I have, why will, it's just if I have adopted fair value, it means, can I say, is first thing, one thing, this is to on the date of transition, means whatever we have done, subsequently now we can apply cost model or revaluation model. Correct? Means even though we adopted fair value as a deemed cost, but subsequent accounting will be now based on either cost model or revaluation model. This point have you understood? Correct? So just try to understand. If I adopted fair value on the date of transition, and subsequently I have adopted cost model, whether it is change in accounting policy? No, it is not considered as change in accounting policy. Are you able to understand my emotions? Correct? Means what I want to say, on the date of transition these 3 options is given, but subsequently we will apply Ind AS 16, and subsequently we can opt either cost model or revaluation model. Correct? Now let us just try to understand. Suppose carrying amount was 1,50,000 and you adopted fair value 2 lakh, and subsequently you will adopt cost model. But this difference will be transferred to what? Retained earning. Simple. But suppose subsequently you will adopt revaluation model, then what? Then this difference will be transferred to revaluation surplus. Important from examination point of view. Have you understood this point? Have you understood this point? Yes, sir. Then, if the deemed cost exemption is applied, then such deemed cost will be considered for component accounting. Component accounting means for depreciation. So that deemed cost will be allocated to each component based on the fair value of each component. So that deemed cost will be allocated to each component based on the fair value of each component on the date of transition. Understood? If any entity consider fair value as deemed cost, it is not considered as changes in accounting policy. Already I have said. If business combination are restated retrospectively, then deemed cost exemption for PP, intangible asset, investment property of acquiring cannot be availed. Means what they want to say, just try to understand. Suppose parent subsidiary. Correct? Now in the CFS of parent company, there will be asset, there will be property, plant and equipment of parent and subsidiary both. Now, for this subsidiary, they have taken business combination on a retrospective basis. So, if you have applied for business combination on retrospective basis, can you apply deemed cost exemption for this? No. Then you can't apply because you have taken what? Retrospective basis for business combination, because you are restating business combination on a retrospective basis. Then it will come at what? Retrospective basis, whatever carrying amount is coming. But can you, for other assets and liability, we can avail what? Deemed cost exemption. Have you understood this point? What they want to say? If business combinations are restated retrospective, then deemed cost exemption for property, plant and equipment, intangible asset, investment property of acquiree cannot be availed, because that too you are doing on retrospective basis now. Then apply retrospective only. But for other, however, entity may adopt deemed cost exemption for its PP etc. other than those acquired through business combination. Understood this point? Have you understood? Follow. Correct. Then investment in subsidiary, joint venture, associate in separate financial statement. In separate financial, same thing is given. In separate financial statement, this investment can be measured either as per Ind AS 27 retrospectively or by availing deemed cost exemption, which can be either carrying amount as per previous GAAP or fair value on the date of transition. Understood? Same thing is given for investment also. Same thing. Right. If such deemed cost exemption is availed, means any for, if suppose we have adopt deemed cost exemption, and if there is some contingent consideration, then again is a contingent consideration should be recognized through retained earning. If you applied retrospectively, so automatically you are recognizing contingent consideration. But if you have a deemed cost exemption, then can you see, you should also recognize contingent consideration separately based on the fair value on the date of transition through retained earning. Understood? Yes, sir. Have you understood? Then coming to share-based payment, this is important. Share-based payment, what they are saying, on the date of transition, they can be either vested option or unvested option. So for vested option, they have given two options. Option number 1, option number 2. Either apply 102 retrospectively or take carrying amount as per previous GAAP. For vested option. But for unvested option, no exemption. We need to apply 102 retrospectively. Important. One question has been given recent RTP based on this. In that question, what they have said, I will just try to explain that question, whatever is given in your attempt RTP. Same question has been given. So for vested option, we can avail this too. And for unvested option, no options is available. We need to apply Ind AS 102 retrospectively only. But in that question, what they have given, in previous GAAP there was an error. Means they have not recognized only share-based payment. So, but if they have not recognized, can we take carrying amount as per previous GAAP? Then how can we take carrying amount as previous GAAP? There is an error. Then how can we take? Then they, in that we need to apply what? Ind AS 102 on retrospectivity, because Ind AS 8 will prevail. And Ind AS 8 says what? Retrospective restatement. Are we able to understand what I am saying? Are we able to understand? So that question was good because of this point. They just has given one point of reference of Ind AS 8 also. Understood? Yes, sir. This also you have understood. You can read, same thing is given. Then long-term foreign currency monetary item. Now, just try to understand. If you have done AS 11, so as per AS 11, there was one para 46. Do you know about para 46? AS 11. Para 46 used to say that for long-term foreign currency monetary item, long-term foreign currency monetary item, exchange difference either exchange difference means they have given two options, either transfer exchange difference to PL or you can capitalize what? Exchange difference. This option was given under para 46. However, Ind AS 21 has not given such option. As per Ind AS 21, all exchange difference will be transferred to PL. As per AS 11 para 46 and para 46 says some option has been given, either transfer exchange difference to PL or capitalize. Capitalize also they said, if the foreign currency monetary item is related to depreciable asset, then it will be capitalized, means it will be adjusted to the cost price of the asset. But if it is not related to depreciable asset, then that exchange difference will be accumulated to FCMITD account. Remember this? Foreign currency monetary item translation difference account, if you remember. And this FCMITD account will be amortized on SLM basis in PL. Means simply what we can capitalize. We can capitalize. So what Ind AS 101 says that, everyone, this is also important. The entity has an option to continue accounting policy for treatment of exchange difference on long-term foreign currency monetary item as per previous GAAP. Means what they want to say? Suppose on the date of transition, there are some foreign currency monetary item for which para 46 option was availed, or para 46 option was not availed. Quite possible. If para 46 option was not availed, means they are transferring it to PL as per previous GAAP. So what they want to say, the option is available only if para 46 option was availed in previous GAAP. If in previous GAAP para 46 option was not availed, now they can't continue the accounting policy as per para 46. Now they need to apply Ind AS 21 only. Are you able to understand what I am saying? So for any foreign currency monetary item, if they have availed the option under para 46 as per previous GAAP, now they can continue that accounting policy under Ind AS for that foreign currency monetary item. Have you understood this point? This is option. Either they can avail or they can apply Ind AS 21. Suppose they availed Ind AS 21, so whatever the balance of FCMITD account is there, that will be transferred to retained earning. Understood this point? I hope you have understood. Entity has an option to continue accounting policy for the treatment of exchange difference on long-term foreign currency monetary item as per previous GAAP. Previous GAAP means para 46. It is applicable to long-term foreign currency monetary item on which option of para 46 was availed as per previous GAAP. Is any foreign currency monetary item for which the option was not availed, you need to continue Ind AS 21 only. This point have you understood? Right. However, if the entity do not want to avail such exemption, then balance of FCMITD account is transferred to retained earning. This you understood? Then cumulative translation difference account, FCTR. So for FCTR, there may be some FCTR as per AS 11 also. AS 11 also there can be some FCTR. Two options is given. Either continue at the same carrying amount or transfer the entire amount to retained earning and make it zero. Two options is given. Either continue at the same carrying amount or transfer the entire amount to retained earning on the date of transition and make it zero. Understood? FCTR can be carried at carrying amount as per previous GAAP, or it can be transferred retained earning on the date of transition. Compound financial instrument. Here is a compound financial statement. Compound financial instrument should be split on the date of transition retrospectively only. Correct? However, what they want to say, there is no need to split if liability component is not outstanding as on the date of transition as per previous GAAP. Means if the liability component is not outstanding on the date of transition, there is no need to split compound financial instrument. Means if it is outstanding, then we do split it by applying what? Ind AS on retrospective basis only, and that we can do. For example, just try to understand. Suppose we have taken one loan as convertible debenture. This is what? The date of transition. They will give market rate of interest on this date. So can you say we can find out liability component यहाँ पर, equity component यहाँ पर, then we can find out carrying amount as on this date. अरे बोलना रे, this carrying amount will remain same. Are we able to understand? So what journal entry will do, because this question they can ask, we'll say old convertible debenture will be debited. Means suppose this is 10 lakh. This is coming at 10 lakh now in the balance sheet. We'll say two financial liability and two equity instrument, this amount and this amount. This amount you can calculate, and this will be what? Same carrying amount, and the difference will be transferred retained earning. One question has been given in ICAI study material. Can you do it by your own? This is also expected. Have you understood this point? Bol Naresh. Have you understood this point? Yes, sir. Coming next point. Non-current asset or disposal group held for sale. What Ind AS 101 says that FTA should measure non-current asset or disposal group on the date of transition at lower of what? Carrying amount and fair value less cost to sale as per Ind AS 105. And any gain or loss will be transferred to, any difference will be transferred to retained earning. Please. Correct. Please, it is also very simple. A lessee, which is an FTA, means FTA is a lessee. So now Ind AS 116 will be applied. ROU asset will come. Lease liability will come. Correct. A lessee of Ind AS, lessee is the FTA of Ind AS, shall recognize lease liability and ROU asset by applying following approach to all of his lease at the date of transition to Ind AS. His major lease liability at present value of remaining lease payment discounted by using incremental borrowing rate on the date of transition, not on the date of lease, on the date of transition. We can calculate it. And can I say ROU asset will be equal to this amount? But no, they have given two options for ROU asset. For lease liability, they have not given option. They have said it will be present value of remaining lease payment discounted by using incremental borrowing rate on the date of transition. But ROU asset can be measured either at 1 or 2, whatever is your choice. Option has been given. So what is 1? Is carrying amount as if, at is carrying amount as if Ind AS 116 have been applied since the commencement date of lease, but discounted by using lessee incremental borrowing rate on the date of transition to Ind AS. Is what they want to say. Suppose this is the date of transition. So you can calculate lease liability based on present value. But for ROU asset, what they are saying, first calculate present value of lease payment by taking discount rate, by taking incremental borrowing rate on this date only. You can calculate. So you can find out ROU asset equal to this amount, and then find out depreciation. This will become carrying amount. Then you will depreciate it now. One second. Is liability you understood? For ROU asset, first option what they said, he calculate present value of lease payment on commencement date, but by taking incremental borrowing rate as on the date of transition. You can calculate. So this will be amount equal to ROU asset, but you need to depreciate it also now for 3 years. So this amount will be the carrying amount. First option. Second option, an amount equal to lease liability. Correct? An amount equal to lease liability means what? An amount equal to this will be second option. Two option has been given. Understood this point? Follow. This you can ignore. Correct? Correct. Yes, sir. Now, one thing we know that a first time adopter, that is a lessee, may elect not to apply above requirement given in above to a lessee for which are not to apply to the lease, which is a short term lease or lease of low value asset. That is only given. They will not apply whatever is given if the If the lease is of short-term lease or of low value asset that is given, then you can apply whatever is given, recognition exemption is given now. You can apply that. Understood? Yes, sir. This is also important because one question has been given in in ICAI study material regarding this. Important. And that question is not yet asked. However, India's 101 they have not asked many times, 1 or 2 times they have asked in exam. Correct? Yes, sir. Now, whether it is important, not important, this chapter, I don't know. Correct? Because scope is not there now. There are so many chapters. If they want to, if they are asking from this chapter, means they want to kill you. Nothing more than that. Means if they are asking question from India's 101, means they want to kill you. Correct now? Because scope is so many chapters are there. Marks is only 100. From wherever they will ask. And there are many beautiful chapters. India's 41 is a very good chapter. From that question can be asked. India's 36. Then there are 5 mandatory chapters: consolidation, finance instrument, business combination, share-based payment, India's 115. 116 they are asking right now, but I will say these are the 5 mandatory chapters. Balance chapter they may or may not ask. But in balance chapter also there are many good chapters. India's 12 good chapter, income tax. The scope is not there to be asked from this. And can I say this chapter will be applied only once? Not always now. They were not important much. And also this chapter is only for time being. Only for time being now. Correct? Understand what I am saying? Therefore, it might happen they are not asking. When they come to the last point, I think this is the last point now. Last point. I'll just give you one brief idea of this so that you can tackle that question. Joint venture transition from PCM to equity method. Now, as per AS 27, they have given proportionate consolidation method. And as per India's 28, they have given equity method. Equity method means investment will come in CFS at equity method. But PCM means what? Asset will come, liability will come in CFS proportionately. Means suppose they have 40%. So 40% asset will come, 40% liability will come, and 40% goodwill will come. This was PCM. So can I say as per previous gap in CFS, we have recognized the asset, liability and goodwill of joint venture in CFS. Now we need to convert PCM into equity method on the date of transition. So what they are saying, whatever this asset, goodwill and liability is included in CFS, find out the carrying amount of this, and this carrying amount will become the deemed cost of investment for applying equity method. Means eliminate this. Suppose this is 10, this is 2, this is what? 2. The net amount become 10. So what journal entry will do? Investment will come at 10 and this will be eliminated. So investment in joint venture will be recognized on the date of transition at deemed cost, and the deemed cost will be the carrying amount of this. Carrying amount is very simple. Very simple. But only one point is there which require more explanation. As per India's 101, when changes from PCM to equity method is required, and it is a recognized investment in CFS on the date of transition. The initial investment shall be measured as aggregate of carrying amount of asset, liability that are previously proportionately consolidated, including any goodwill arising from such acquisition. Now, one more point is there. If the goodwill previously belonged to larger CGU, means whatever goodwill is coming in the CFS that belong to larger CGU, means from examination point of view, they have not given how much goodwill belong to this joint venture. Suppose they have given, then okay, thank you very much. But suppose they have not given goodwill, how much goodwill belong to this joint venture, because goodwill may belong to subsidiary also. Are we able to understand what I am saying? Are you bolna rahe? If the goodwill previously belonged to larger CGU or to a group of CGU, then entity shall allocate goodwill to joint venture on the basis of relative carrying amount of joint venture and to CGU or group of CGU to it belong. Means can I say goodwill will be proportionately allocated? So one formula I can give goodwill, the total goodwill coming in the balance sheet, multiplied by carrying amount of net asset of joint venture divided by carrying amount of larger CGU. Larger CGU. Whenever I say larger CGU, it is always entity as a total. Entity as a total of one larger CGU of entity. This formula we can apply and we can find out proportionate goodwill, and that goodwill will be added to find out the deemed cost of the investment. Understood? One question is there. Probable question. So this is a good question. Easy question, good question. So this Ind AS 101 is also over. Can you do the questions by your own? Because now I am also tired. Because I just want to share something that is more important. There is only one question I have taken, I think so. And that question is Ind AS 101. This question is a good question. If you want, I can give the solution of this video solution. So first you try by your own. Correct now. So just try to understand. Any question of Ind AS 101 and analysis of financial statement. If you find difficulty now, I'll give a video on that to you. Correct? So Ind AS 101, only Ind AS 101 and this, not all. Ind AS 101 and analysis of financial statement. If you find difficulty, just message me what question number. I will provide the video of that. Chalega? Understood? Chalega? So with this we completed the entire syllabus. Correct? But I just like to give some preparation tips, because that is also more important. Correct? 1 minute, hold on. Live student, have you understood? Please respond. Live student, you are there or you are not there? Live student, have you understood? Yes, sir. So what I have said that Ind AS 101, analysis of financial statement. If you find any difficulty in question, just message me the question number. I will forward you what? The solution for that. But I don't think you will get any problem, because solution is there. You can understand from that. But some revision tips. Revision tips that, because now 1 month is left, so I will suggest that one revision is must, and 6 days allocate to 6 or not 5 days. Is minimum 5 days is required before exam. One revision. This revision for how many days? Revision maximum 150 hours you can give. Minimum I will say 120 hours to required. You can't give less than 120. You can give more than 20, your choice, but minimum 120 hours is required to revise everything. When you are doing revision, first revise all A category chapter. Whatever is given in my Ind AS Saransh book, you can see in the index A category chapter, B category chapter and C category chapter is listed. That is not from important or unimportant. A category take more time, B category take more time than C category. C category can be revised very fast. So first always start with A category, then B category, then C category. Normally what will happen, most of the time will be consumed in this only. Means if you have allocated 120 hours, it is quite possible 100 hours or more than 100 hours will be consumed in this only. But This C category now you can revise in the balance of a very speed. This C category are those chapters, if you revise the content also, you can answer in exam. Means for that more problem is not required. For example, India's 10, India's 37, require only content. Question to you can answer in exam also. India's 2, these are the chapter. India's inventory, if you know the content you can answer. Practice you have done whatever is required. Are you getting? Means if you do only the MRQ or expected question also chal jata. All questions is not required. Are you able to understand? So smart work is what C category should be done at the end. So you start from C category, then you will die because initially our speed is always less. Then we increase the speed. Correct now. So I will say start with A category, then B category, then end with C category. But don't panic if the time is less for C category. I will say revise very fast but complete it. Complete it. But fast revision. Only read the content and read the expected question. So you will have a confidence that yes, you have completed it. Yes, you have completed it. Understood? Next point I will say key. Now what type of question, just try to understand key, because now you have done crash batch, you have understood that what type of questions I have taken, what type of question can be asked in exam. So give some time to the question which can be asked in exam. And when you are doing revision, suppose big chapter, so I will always suggest you some question do by writing. For example, if you are doing consolidation, there are 5 questions, two questions by writing, 3 questions you can do auditing. Are you getting what I am saying? So 2 questions you should do by writing so that you should understand whether you are able to write or not. And when you are writing, write as you are writing in exam. Because if you don't write fully, then you will feel that yes, you are able to complete in time. But actually in exam, you require as you write, you need to write as per the requirement in exam. Whatever questions you are practicing by writing, write as you are writing in exam, so that you can understand whether you are able to complete in the minimum time or not. So if you are not able to complete minimum time, it means one message will come to in your mind that you should increase your speed. You should think about speed also. So you can speed your increase during revision time only. Then next question you are doing, try to finish in time. If that also not completed, the next question whatever you are taking, try to finish in time. So dhire what will happen, you will be able to understand this much speed is required for writing a question which is of 16 or 20 marks. Understood? Then once you have done entire revision, then you can go for one mock test. One mock test, but that too I will say after immediate revision. Don't do after 10 days or 20 days. I will say revision completed, after just revision completed, just write down one mock test. But in mock test, suppose you are not able to perform, don't panic. That is a only what happened, there is one indication you will get, yes, we need to improve it in main exam. But don't panic. But why mock test is required? To understand the area where you are not able to perform. Suppose you are doing very small mistake, calculation mistake which you are doing class also, calculation mistake or writing wrong information from the question. So you should also try to understand, yes, we are doing that mistake also. So try to avoid that mistakes in exam. But suppose you do not remember any concept only, don't panic, because sometimes it happen. Correct? You are not able to remember any concept. हो सकता है. Correct? Don't panic. I said if you want to cry, cry after exam. Don't cry before exam. Whatever revision you are doing, that is for betterment. That is for betterment. That is not for degrading the quality. That is for increasing the quality. Understood? So this revision time is very important. Whatever I have done, now if you do one time revision, 100% this will be beneficial. But if you will not do one time revision, this will not be beneficial. Isliye I said one time revision is required. Minimum I will say 120 hours required. If you are giving, I think you all are giving one group only. You are not giving both group. Correct now? That is to understood point. You are giving one group only. So 120 hours you can give. 120 hours means if you say how many hours you study in a day? What is the planning? 8 to 12. 8 or 12? Don't say 8 to 12. 10 average. Why? This is just try to understand. There is a 24 hours. Why only 10 hours? 14 hours what you'll do? I can't understand why. What will do 14 hours? In 24 hours you will study only 10 hours. So 14 hours what you are doing? Sleeping, eating, going somewhere else. Why 10 hours? This is the last game. Last game. This is last game. You want to play one more game? Last game na. Play it fully. Why 10 hours? Why 10 hours? You want to play once again? So why 10 hours? In 24 hours, you are saying 10. What? I can't understand. Why 10 hours? Are bolna re. How many hours you want to study per day? Huh? 12. Increase by 2 hours. Why 12 hours? What you will do? Bata? Explain me. What you will do 12 hours? In a 7 hours maximum sleep. You will not sleep more than 7 hours. So 12 minus 7. 5 hours left. What you will do 5 hours? Bata? चलो 5 hours में 2 hours for eating etc. ठीक है 5 hours में 2 hours eating 3 hours left. चलो 1 hour rest again 2 hours left. What you will do in these 2 hours? There is someone, what, some good friend with you, you want to talk with them, बोल क्या करेगा 2 hours? Want to sleep again? I will say देखो just try to understand. This is the last game is left. Last game. If I would have been in your place, I would have read for the maximum number of hours what I can read. Curtail the unnecessary activities. Give more time to study. I will say minimum to minimum you should study what? 14 hours per day. 14 hours minimum. Maximum your choice. Minimum I am saying 1 month left. Now as we are saying 10 hours. Being a CA student, then तो हो गया. देखो just don't compare yourself with exceptional student. They can pass without reading also. We are average student now, and we have the last attempt. Give your best. Correct now. Now 14 means 120 divided by 14 if I say. So in 8 days you can complete. 8 to 9 days. 8 to 9 days is of course बहुत है for FR. Balance you give to audit, SFM, etc. But 9 days is required for if you read for 14 hours. Correct? So you have time, you need to use it. If you waste your time, then you need to suffer at the end. Correct? I will say last exam, last game, play it fully with enjoyment. Enjoy your life with study. Enjoy it, maja aayega. Correct? Right now I am also enjoying now. Believe me, I can't sit right now. I am not in a position to sit. Believe me, my entire back is paining. Because now we have not in a habit to teach 8 hours. Correct now, my entire back is paining, but I am enjoying. Anytime you felt that I am not enjoying? Huh? No, I am enjoying irrespective of the fact that my voice is also not okay. My back is also paining. This is your last exam, last game. Play it fully with full enjoyment. Correct? Thank you very much. We'll meet once again after your result as a chartered accountant. If this is your only one group is pending, any other group is pending, once we'll meet after once both group result will come, is whatever attempt is there, but after becoming the only. After means before that, of course, you can call me anytime. I'll be available. My number is with you. If you don't have, write down 7731 007722. In last month now, I cleared it out irrespective of time. I don't have now any class. After 2 days, my all class will be over. And I sleep always at 12. Means you can call me in the night also at 12. If I am not lifting the call, it means I am busy somewhere else. Then message me, I will call you back. Means I am available for the student from my student, to 100% you are also my student, correct? Now, so I am available for my student in the last 1 month at any point of time, but you need to call me, or you need to message me. You will not call me, you will not message me, I will not be able to understand that you have doubt. Okay, so you can call me, you can message me, you can disturb me at any point of time. Thank you very much, we'll meet soon. Till then, bye bye, take care, enjoy your entire life. Bye bye. Hope you have enjoyed the class. Hope you are beneficiate, you have truly benefit, you have got all the benefit from the class, and hope your marks will be increased by this class. Okay.